Hello everyone, good morning and welcome back to our CA final full syllabus marathon. And yesterday we had completed the part 1 of our marathon, all the major chapters which has weightage in examination, and today's target is to wind up the remaining chapters along with customs. Is audio, video, everything set, all clear? Everyone here with full josh? Yes ma'am. Sure. So before beginning with our today's session, we'll take quick 5 minutes to just revise all these sections that we had completed in our yesterday's session in part 1 of the marathon. So everyone with me in the comment section. Come on. We had started with S for 7, S for supply. S for 7, S for supply, section 7, scope of supply. 7.1 says supply includes, 7.2 says supply excludes, where we saw the negative list of FB changes. Then 7.1a says about schedule 2. FB changes is schedule 3. Also 7.1 supply includes has supply without consideration schedule 1 list. Now 7.1a said what is goods, what is services, and 7.3 says government has power to notify certain categories of transactions as supply of goods not services or services not goods. Then 2 zeros getting mixed becomes 8, section 8a composite supply chargeable at principal rate, and section 8b mixed supply chargeable at the supply attracting highest rate of GST. Then section 9 levy and collection, where 9.1 says normal levy, 9.2 says levy on app products not leviable currently but from future date when government will notify. Then 9.3 talked about entire RCM list. 9.4 the real estate sector, where an unregistered person supplies some specified goods services to some specified registered person. And then 9.5 we saw HUT rate for e-commerce operator activities. Done. Then we'll make 10 different type of tantrums. 10 tantrums to pay less tax, 10 section 10 composition levy, where 10.1 and 10.2 was for goods restaurant and 10.2a was for others. Then 1 balle balle. Why balle balle? Because we got exemptions under GST. What is the time? At 12 o'clock the time changes. Therefore, section 12 time of supply in case of goods, section 13 time of supply in case of services, and section 14 rate change section. Right, rate change, supply, invoice payment, we follow the majority rule. Then 12.1 was that liability to pay arises when time of supply comes. Same goes with 13.1. Then 12.2 forward charge mechanism, 13.2 forward charge mechanism, 3 reverse charge mechanism, 4 talked about voucher, 5 residuary cases, and 6 about interest penalties and late fees. Then section 15 value of supply, 15.1 said transaction value plus inclusions of 15.2 and minus exclusions of 15.3. Rule 27 when money is not whole consideration. Rule 28 when the recipient is related person or distinct person. Rule 29 when the recipient is agent, and then Rule 30 about that 110% monetary consideration, and Rule 31 best judgment assessment basis. Rule 32 we saw some 5 optional procedures, one for forex, then air travel agent, life insurance, second hand goods and vouchers, and also the pure agent concept. This was all about value of supply. Then section 16, as soon as you turn sweet 16, your family starts putting restrictions and conditions, and therefore section 16 talks about conditions and eligibilities to claim ITC. Then section 17, block credit and apportionment of credit. We saw rule 42 for input services and rule 43 for apportionment of capital goods, and 17.5 was blocked credit. Then section 18, special circumstances, when you go from regular to compo, compo to regular, or exempt to taxable, or taxable to exempt. We had a simple rule saying that whenever you want to avail ITC, you do 5% quarter reduction. Whenever you want to reverse your ITC, you do 60-month proportionate calculation. And for case of capital goods, sale disposal of capital goods, it is tax on transaction value or 5% reduced amount, whichever is higher is what you pay. Right. Then we saw section number 20, which is ISD, Input Service Distributor. 21 is recovery of excess credit. Recovery of excess credit in case of excess distribution for ISD. 2-22, you are earning double. 2-22, you are earning double means you are a person liable for registration. 22 said liable, 23 said not liable. Then 24 said, hey, what is this liable, not liable going on? Shut up and take compulsory registration if you are covered under I-9 creation. Then you are required to take compulsory registration. 25 says, oh, compulsory registration, please tell us what is the procedure to take compulsory registration. Then section 26 talked about deemed registration, that this big procedure you are not going to do twice. You do the procedure once under SGST Act and we will assume you to be registered in another act. Then section 27 CTP NRTP, make registration at least 5 days prior to commencing your business registration application for the period specified, or 90 days, whichever is earlier, and plus one time further extension of 90 days. Then 28 was amendment, 29 cancellation, and 30 revocation of cancellation. Amendment can be in core field, non-core field. If there is a change in PAN or address, then you need to take a new registration. Cancellation, either you can apply or proper officer can also suo moto cancel if you have not filed return for 6 months, or in case of QRMP scheme for 2 quarters. Right. Then revocation of cancellation can be done only when proper officer suo moto cancelled your registration. If you yourself had applied for cancellation, then you cannot seek for revocation. Then 31 talked about tax invoice. Here we also covered revised tax invoice, receipt voucher, payment voucher, refund voucher, all of these things. Then 32 said, a unregistered person, you cannot collect any unauthorized tax. Then 33 said, whatever document, whatever invoice you are issuing, please mention the amount of tax on that. Then section 34 talked about credit note and debit note. There's no time limit to issue debit note, but for credit note, it is 30 November or actual date of filing annual return, whichever is earlier. Okay, then we saw section 49. Section 49, payment of taxes, where we saw e-liability ledger, e-credit ledger, and e-cash ledger. And then section 50, as soon as we reach 50, half century, we start to develop interest. We start to develop interest as soon as half century is reached. And here, either you short pay or you wrongly avail and utilize ITC. For our examination purpose, the rate of interest in both of the cases is 18% only. Done. 5 minutes and we revised all the sections that we had completed in 8 hours yesterday. Is everyone feeling confident here? Yes, ma'am. Now we think we can consolidate entire ITT. Done. Sure. So let's move further. Now we shall start with TDS and TCS. Very small topics. We'll go very much exam oriented now because a lot of chapters to be covered, but the weightage is less, so only on the important areas I will be focusing. Sure. Let's start with TDS and TCS. Now, how to remember TDS, TCS? We remember 51 में 2, 52 में 1. 51 में 2, 52 में 1. Means section 51 TDS has a rate of 2% and section 52 TCS has a rate of 1%. 51 में 2, 52 में 1. So, rate of TDS under section 51, 2%. Rate of TCS under section 52 is 1%. Right. Now, what does the section of TDS says? That whenever these specified recipients, these specified government people, CGSG no logo, means central government, state government, local authority, government agency, or some also certain notified people who are any authority board set up by parliament, let's say example ICAI, or any establishment of government where greater than equal to 51% control is with government, or any government society, or for that matter public sector undertaking also. If any of these persons are recipient, and they avail any goods or services where the contract value exceeds 2.5 lakh. So any supplier supplying certain goods or services to these specified government people where the contract value exceeds 2.5 lakh, in that case the recipient is liable to deduct TDS at a rate of 2%. Means 1% C plus 1% S, or if deducted under IGST, then 2%. Also, even if this government person is normally registered under GST, but still they will have to take a compulsory separate registration. They will have to take a compulsory separate registration only and only for the purpose of TDS. We've also seen the list of I-9 creation where T says you have to take registration as a TDS deductor under section 51. Also, this 2.5 lakh is the taxable value. This 2.5 lakh is the taxable value, not including the GST amount. And TDS is also deducted on value of supply only. Value of supply means TDS is not on GST amount. Only on the exclusive taxable value you are required to deduct the TDS. Also, you do not see it invoice wise, you see it contract wise. See, if the total contract is of 1 crore rupees, it might be possible We are issuing 100 invoices. We are issuing 100 invoices of 1 lakh rupees doesn't mean there will be no TDS. If you break the contract into smaller invoices, TDS will still be applicable because we see the value contract wise and not the invoice wise. Understood, ma'am? So these all government people will be liable to deduct TDS. But if these people are making supplies between them only, means like say one PSU gave supply to some another registered society, or one local authority gave service to some government agency, or goods supplied for that matter, in that case no TDS will come. So if these people are supplying within them only, then no TDS provisions are going to apply. And also Ministry of Defence is a government department, but still they are not liable to deduct any TDS. So for MCQ purpose, you may consider this as important, that the Ministry of Defence is not liable to deduct any TDS. Procedure extremely simple. Payment or credit, whichever is earlier, you deduct the TDS. Means if payment is earlier, there are advances, so TDS are applicable on advances also. After deducting TDS, very much simple, you have to file GSTR 7. Means the recipient will file GSTR 7 by 10th of the next month and furnish the data, also pay the deducted amount. The recipient, after validation, will get this amount in e-cash ledger. Now, once this payment is made to government of the TDS, the recipient is required to issue a TDS certificate under GSTR 7A, and this certificate has to be issued within 5 days of depositing TDS to government. So, whenever the recipient deposits the TDS with the government, within 5 days from there, he is required to issue a TDS certificate under GSTR 7A to the recipient, and this TDS certificate will have these normal particulars like what is TDS certificate number, GST number of both of them, what is the value of supply, TDS deducted on what amount, etc., etc. Also, if there is any excess deduction of TDS, then you can claim refund of the same. But in any case, if the supplier has already received that excess TDS in the cash ledger, then in that case, no refund will be given. By, let's say Mr. A supplied to Mr. B. TDS to be deducted was 100, but Mr. B by mistake deducted 200. Now, if this 200 is not yet credited to Mr. A's e-cash ledger, then they can ask refund for the balance 100. But if this amount is already credited in e-cash ledger, then government cannot give refund, otherwise it will become double. Once they have given you in cash ledger, now again if you ask for refund, it will be twice. So if it is credited to e-cash ledger, then the same shall not be refunded. If you do not pay interest, if you do not pay TDS to government, or you do not deduct TDS, in that case your demand recovery proceedings under 73-74 can also be initiated. Also, no TDS in following cases, very much simple. See, TDS is deducted only and only on taxable value. TDS is deducted only and only on taxable value. This 2.5 lakh you have to see is taxable value. Say for example, our total contract is worth 4 lakh rupees. But out of this 4 lakh, I say that 3 lakh are exempt and 1 lakh is taxable. In that case, no TDS will come. The taxable value has to exceed 2.5 lakh. So in any of the case, if whatever you are supplying is nil rated, exempted, or not taxable, or the recipient is liable to pay tax under reverse charge mechanism, then in all of these cases, no provisions of TDS shall apply even if your contract value is exceeding 2.5 lakh. Second, TDS provisions became effective from 1st October 2018. So any invoice before that not liable for TDS. Then, if you have made payment to any unregistered supplier, say for example, it is possible, yes, this supplier does only one supply throughout entire year, worth let's say 7 lakh rupees to this government person. Therefore, not liable for any registration because the total turnover is only 7 lakh. In that case, this recipient, even though they are specified recipient, will not deduct TDS. Why? Because the recipient is not registered. Not registered means he would not be having his e-cash ledger. If no e-cash ledger, then how can you claim credit of whatever TDS is deducted? So if the supplier is unregistered, then in that case, no TDS liability is going to arise. And last point saying that supplier and place of supply are in one state. Recipient is in some another state. See, how do we determine whether the supply is intrastate or interstate? By looking at location of supplier and place of supply. Let's say they both are in Delhi. So supplier also in Delhi, place of supply also in Delhi. So the bill would be of C plus SGST Delhi. But let's say recipient is located in Gujarat. Now the Gujarat recipient would be deducting C plus S TDS of Gujarat state. Now this Gujarat state TDS would not be useful for set off with the Delhi state TDS, and therefore government says if any time supplier and place of supply are in same state, means bill would be of C plus SGST, but recipient is from some another state, therefore the SGST of recipient would be different. and therefore no set off would ever be possible. Now other than that, see, if all three are in same state, if supplier, recipient and place of supply are in same state, no problem, both of them have same SGST, and in that case they would be deducting TDS of C plus SGST. If supplier and place of supply are in different states, then in that case he would be making an IGST invoice. Now recipient can be in any state, it will not make any difference. Why? Because IGST remains same for everyone. The only issue would be in this case where supplier and place of supply are in one state, means C plus SGST bill will be made, but recipient is in some another state and SGST would not match. This is all about section 51 TDS. Now talking about section 52 TCS. Now 51 में 2, 52 में 1. Therefore one thing we are very much clear about, which is under section 52 the rate of TCS is 1%, right? Now here let's say there is an e-commerce operator. First condition, not being an agent. So this e-commerce operator, if e-commerce operator is an agent, in that case TCS provisions will not apply. So first precondition is that this e-commerce operator should not be agent. Second, recipient places order through this e-commerce operator and the order is then forwarded to the supplier. Now under section 24 I9 creation, under section 24 I9 creation, we had seen that E means every e-commerce operator liable to deduct TCS under section 52 is required to take compulsory registration. So this we understood that e-commerce operator is required to take compulsory registration as a TCS collector. Plus we had also seen that every supplier supplying through an e-commerce operator will also be required to take compulsory registration, with only one exception, that if you are a supplier of service, then up to 10 lakh, 20 lakh, no registration required. So here we say that this supplier, because he is supplying from an e-commerce operator through an e-commerce operator, will also be required to take compulsory registration under section 24, but only one exception, except when making supply of service up to 20 lakh, 10 lakh. So in this case, you will not have this question that what if ma'am supplier is unregistered? Only one case supplier is unregistered, where no TCS will come. In other cases, supplier will always be compulsory registered only, and therefore TCS will come if supplying through an e-commerce operator. So whatever is the taxable value, again here also taxable value, not exempt. For TDS, TCS, both purposes you have to see the taxable value of supply only. So the taxable value of supply, whatever it is, 1% of that you deduct TCS and then you pay and then the e-commerce operator would pay the amount to the supplier. Therefore one thing we understand, if e-commerce operator has not received payment, no TCS will come. Means let's say this recipient, when he or she was ordering through e-commerce operator, the e-commerce operator redirected the recipient to supplier's payment gateway. Means the supplier directly received the payment from customer. In that case, because e-commerce operator has not received payment only, how can he collect TCS? Because no payment has been received. So whenever if the amount is directly collected by supplier from the recipient, then TCS would not apply. Only if the payment is routed through e-commerce operator not being an agent, then only 1% TCS will be collected of the taxable value. Also in TDS we have 2.5 lakh limit, but there is no limit in TCS. Even if 150 rupees of sale is made made through an e-commerce operator, then also TCS provisions are going to come. So there is no minimum value limit for TCS. Also TCS will be collected on sales minus sales return, the net sales. Now this I had already explained you under section 9.5 yesterday, that section 9.5 and section 52 of TCS cannot coexist. So if any supply is covered under section 9.5, then in that case that turnover you do not include here. Other than that, anything that is supplied through an e-commerce operator, you take sales, you take minus sales return, and whatever is the balance amount, you deduct 1% TCS on the same. But other than notified services under section 9.5 through e-commerce operators, because 9.5 and TCS cannot coexist. If under 9.5, the entire liability to collect tax and pay to government is with the e-commerce operator, in that case, no TCS will be collected. Understood? Again, procedure is same procedure as we studied in TCS or TDS, that you collect and pay TCS to government. Due date is also same, 10th of the next month. It's just that we have GSTR 7 under TDS and GSTR 8 under TCS. Again, this is made available to supplier for validation, and the TCS amount is received in the e-cash ledger of the recipient. They are also required to file annual return till 31st December. Now for annual return, everywhere due date is 31st December only. If any time suppliers GST are 1, now see, understand, this supplier would be selling through e-commerce operator, means it would be a sales of supplier, and whatever is supplied through e-commerce operator, that would be declared under GSTR 8 of e-commerce operator. So if at any time the GSTR 1 of supplier or GSTR 8 of e-commerce operator are not matching, they would be intimated and they would be given time to immediately rectify whatever is the discrepancy. If they do not rectify the discrepancy, then the higher amount would be added to the GSTR 1 of the supplier, and the supplier will then be liable to pay tax on the differential amount also. So suppliers GSTR 1 to be matched with ECO's GSTR 8. If any discrepancy, it shall be communicated, and rectification has to be done in the same month of communication. Otherwise, the higher amount will be added to the output tax liability, and that too along with 18% interest. If there is any rectification of error or mistake to be done by e-commerce operator, it can be done. Time limit again 30 November or actual date of filing annual return, whichever is earlier. For entire GST, the time limit for rectification remains same only. Understood. Supplier can also maintain records in e-commerce operator's warehouse. There is no issue in that. Means if you are supplying through Amazon today and you want to maintain your stock in Amazon's warehouse, you can do, no problem. Just you have to declare it as your additional place of business. Understood. Again, no TCS. See, TCS will be collected only and only on taxable value. Taxable value. So if the supply is nil rated, exempted, non-taxable or recipient liable to pay under RCM, no TCS will come. Payment made to any unregistered supplier. See, there is only one case possible where supplier is unregistered, which is supplier of service with aggregate turnover of 20 lakh, 10 lakh. Because other than that, all suppliers are compulsorily required to take registration. And if you are covered under 9.5, already mentioned, 9.5 and 52 cannot come together. Understood. Government can anytime ask the e-commerce operator to give information with respect to whatever you've supplied through them, whatever stock you are maintaining at their warehouse, and the e-commerce operator will be liable to give your information to the government. Clarifications are very much simple. You can self-read. So this is all about TDS under section 51 and TCS under section 52. Now let's start with note till section 34. Now what you are required to do, you have to maintain accounts and records with respect to all of these invoices and credit note, debit note. So section 35. Section 35 talks about accounts and other records. Now most important, only 2-3 points relevant for MCQ purpose, maybe rarest of the rare chances that question from this chapter comes. So I would consider it as C category only. Now, who should maintain accounts and records? So every registered person, obviously without any doubt, if you are registered under GST, you are required to maintain all accounts records. Plus all the transporters and owner operator of warehouse or godown. Why, ma'am? Because these people might not be registered. See, if they are registered, they fall here only that they have to maintain records. But if they are not registered, then also they will be required. To maintain accounts records. Why, ma'am? Because they are dealing with people's taxable goods. See, if today you are a taxable person, you would be keeping your goods in a warehouse or godown, or you would be transporting your goods through a transporter. So in this case, these people, though they are unregistered, they might be dealing with other people's taxable goods, and therefore they are also required to maintain accounts and records. Okay, where to maintain? At principal place of business. But if you have any additional place of business, then in that case, the accounts in relation to that place will be maintained at that place only. Means in one line we can say that all the accounts records for any particular place will be maintained at that particular place only. For principal place, at principal place. For additional place, at that additional place. But there's one exception, that for tea, coffee, rubber board. For tea, coffee, rubber board, you declare that tea, coffee, rubber board auction place as your additional place of business. But you do not maintain accounts records with respect to that at that particular place. So for tea, coffee, rubber board auction, it is okay. You can maintain accounts records at your principal place of business and then inform the jurisdictional officer. Just have to intimate the jurisdictional officer. You can maintain the accounts records electronically also or physically also, but make sure whenever you are maintaining your accounts electronically, you always have to give password. If officer asks you, the accounts have to be authenticated by digital signature. You need to have proper backup. You cannot say, oh shit, accounts are gone, the hard disk is gone, or the system has crashed. No, you need to have a backup. And if any code words you are using while maintaining your accounts records, you have to explain those code words to the officer if ever asked for. If officer asks, you to deliver them the accounts in hard copy or in some proper readable format in software form, then you have to provide it to them. Obviously, you cannot overwrite or erase entry, and you have to maintain sequentially everything. That is all understood. What kinds of accounts records to be maintained? Very much simple. What sale you are doing, what purchase you are doing, what stock you have, how much ITC you availed, what taxes you paid, details with respect to supplier, recipient, advances received, export, import, all of these basic details you need to maintain. Then we have some specific cases like what agent have to maintain, what works contractor have to maintain. This you can just self-read once. Understood. Now important, what is the period of retention? So 36 into 2 would be 72. 36 into 2 would be 72. So you can simply remember this way, that section 36 says that you maintain accounts records for 72 months. 36 into 2, 72. So section 36 says that you maintain accounts records for 72 months from the due date to file annual return for a particular financial year. So let's say FY 2021. I'm talking about I have maintained accounts records for FY 2021. Till what date I am required to preserve or maintain these accounts? What will be the due date of filing annual return for FY 2021? It would be 30 December 2021. So 72 months from here. 72 months from 31st December 2021, I am required to maintain my accounts records. Also, but if at any time, any appeal, revision, proceeding or investigation, anything is going on, then you have to wait. Even if 72 months are over, you cannot dispose of your accounts records. If any appeal, revision, proceeding, anything is going on, then in that case, after the final order of these proceedings come, you have to wait for 1 year. So they are saying 1 year after the final disposal of such appeal, revision, proceeding or investigation, or the original 72 months limit is there only, whichever is later. So even though 72 months are over, but any of your appeal, revision, proceeding is going on, so after the final order of this appeal, proceeding, revision, you will have to wait for 1 year, and then you see that original 72 months and this 1 year after this appeal, whichever is later, till then you are required to maintain your accounts and records. Yes, ma'am, understood. Sure. So this was all about accounts records. Now talking about Eway Bill. Yes, this is kind of important. We also have a small amendment in this chapter. Amendment is very small, but still can be asked. Okay, how to remember Eway Bill? It is important. Yes. Is it very important? No. See, is 69 important for all of you? Yes, ma'am. Is it very important? No. So 69 minus 1. You reduce 1 of little less importance. What is this, ma'am? Just a technique to remember. So 69 minus 1, 68. So the section of Eway Bill is section 68. Okay, so why do we issue an Eway Bill? Simply just to I would say evidence the movement of the goods. So Eway Bill is an electronic document generated to evidence the movement. Okay. Now who generates an Eway Bill? Any registered person can generate an Eway Bill. Whoever is causing the movement of the goods in relation to supply or other than supply also. Which means, let's say for example, an artist is sending some painting to art gallery. Artist is sending painting to art gallery. Is it a supply? The answer is no. Means invoice will not be issued, delivery challan would be issued. Then also Eway Bill required? The answer is yes. So your movement can be for supply also, can be for reason other than supply also. In both of the cases, means with invoice also Eway Bill required, with delivery challan also Eway Bill required. Or let's say you are not supplier, you are a recipient, but you are purchasing from an unregistered person. You are a recipient purchasing from an unregistered person, then also Eway Bill will be required, because your supplier being unregistered person would not be able to generate Eway Bill. So any registered person who is causing movement can generate Eway Bill in relation to supply, other than supply also, or if I am a registered person receiving goods from some unregistered person, then also I would be liable to generate Eway Bill. Okay, consignment value. If your consignment value exceeds 50,000 rupees, if your consignment value exceeds 50,000 rupees, you are mandatorily required to generate Eway Bill. Even if it is less than equal to 50,000, no one is stopping you. If you voluntarily want to issue, you can still issue. But if consignment value exceeds 50,000, then you don't have to see anything. Mandatorily Eway Bill will be required. There is no intrastate or interstate condition here. only and only consignment value condition is there. So even if I'm making interstate supply and my consignment value is, let's say, 10,000 rupees, no mandatory e-way bill. So do not get confused here that for interstate supply e-way bill is always required. No, you have to only see the consignment value, not intrastate or interstate. Now what do we mean by consignment value? So whatever is your value under section 15, you take that, plus you also add GST portion to it. Yes, whatever is CGST, SGST, IGST, whatever is charged, you add GST in value, and do not include exempt supplies. So simply I can say my taxable value plus the tax, do not include exempt supply. This is the meaning of consignment value. So whatever value you have determined as per section 15 declared in your invoice, it will also include the taxes, but it will exclude any value of the exempt supply in case taxable plus exempt supplies are supplied together. And there is this mandatory generation of e-way bill where you forget your consignment value. Forget your consignment value, but if you are making an interstate supply between principal job worker or those handicraft goods, if you remember that for CTP and for interstate supply, if you were supplying handicraft goods, then no compulsory registration was required. But there was a condition that you must have generated e-way bill. So if you are supplying goods from principal to job worker or these handicraft people exempted from registration interstate movement, then irrespective of consignment value, e-way bill will be required. So very much simple. Consignment value exceeds 50,000, e-way bill required. Even though it is less, you voluntarily want to generate, you can still generate. But mandatory for principal to job worker and notified handicraft goods interstate movement. Understood? Generated in GST EWB 01. For every e-way bill generated, a unique number is given. Then bill to ship to model is very much simple. Let's say Mr. A billed something to Mr. B but shipped something to Mr. C. So billing is done. One second. Billing is done to Mr. B but shipping is done to Mr. C. So here we understand there are two supplies involved. Supply number one between A and B and supply number 2 between B and C. So two invoices will also be issued. One by A to B and second by B to C. But okay, there was some issue with the stream. Fine. So we were here. If neither the consignor nor the consignee, if no one issues, neither the consignor or consignee, no one generates the e-way bill, and still if the consignment value exceeds 50,000 rupees, then in that case transporter is required to generate the e-way bill. Understood? If transporter, okay, that is not much relevant. Here, see, e-way bill will always be required. If your consignment value is greater than 50,000, e-way bill will always be required. But for one case, they have exempted you to furnish details in part B. Means you generate e-way bill, you only give information in part A. It is okay if you don't give information about your conveyance in part B. In what case? When there is intrastate movement up to 50 kilometer and only from your place of business to transporter's place of business or transporter's place of business to your place of business. So intrastate movement only up to 50 kilometer from your place, means from consignor's place to transporter or transporter's place to consignee. In that case, it is fine if you do not generate part B or you do not furnish part B, but part A will still be required if consignment value is exceeded. Right. Then you can accept or reject the e-way bill within 72 hours of generation or before delivery, because once delivery is made, after that what you will accept or reject. So 72 hours or before delivery, whichever is earlier. If you do not accept or reject within this given time, then we deem assume that it is accepted only. Understood? Validity of e-way bill. See, this is little important for MCQ purpose. Validity of e-way bill. If you are transporting through an over-dimensional cargo, in this case, you get 1 day for every 20 kilometer. If it becomes 22 kilometer, then 2 days. Means from 21 to 40, it will be 2. Then 41 to 60, it will be 3. So for every 20 kilometer and part of 20 kilometer, you get 1 day if the cargo is an over-dimensional cargo. But for other than over-dimensional cargo, it is 200 kilometer per day. Means then from 201 till 400, it will be 2 days. So every additional 200 or part of 200 kilometer, you start getting 1 day extra. Understood? But how and from when to start this 1 day? Remember, very much simple rule. The day when you generate Eway bill, will be free. What do you mean by this, ma'am? Let's say today is 6 September 2023 and this is 8:47 a.m. Now if I generate Eway bill today at 8:47 a.m. on 6 September 2023, entire 6 September I am going to get for free. Means today midnight, when midnight of 6-7 September at 12 o'clock the time would change. At 12 o'clock the date will change from 6 to 7. From here my validity is going to start. So today if I generate an Eway bill, let's say to travel only 18 kilometer in an over-dimensional cargo, means I will be getting only 1 day. So when will this 1 day end if I generate Eway bill now? Today's entire day I am going to get free. Now 7 and 8 means at the midnight of 7 September, when the day has begun on 14th March, still entire 14th March you are going to get free. Means your 1 day is going to start on the midnight when the 15th date comes, and therefore your 1 day will be valid till 15-16 March midnight. Understood? Second day would be 16-17 March midnight and so on. Understood, ma'am? Done. Still network issue, is it? 1 second. Give me 1 second. Okay, sure. Then cancellation of Eway bill. Once you generate an Eway bill, you can cancel the Eway bill within 24 hours of generation if you are not moving the goods at all, or you are moving the goods but they are not as per the specification that you have mentioned in the Eway bill. Cancellation is possible. Okay, but amendment is not possible. Once you generate an Eway bill, you cannot amend the Eway bill. The only option you have is to cancel the Eway bill and then generate a new Eway bill. You cannot amend an already generated Eway bill. What you can do is you can just update part B. Means if you are anytime changing the conveyance or the vehicle, then you can update the vehicle numbers multiple times. But other than that, if there is a mistake, incorrect entry or omission, then you cannot edit your Eway bill. You can only cancel. Also, Eway bill will not be valid without a vehicle number. Always in part B, you need to mention the vehicle number, that in what vehicle your Eway bill is, your goods are moving, so that at any time when officer catches your conveyance for checking, the vehicle number on the Eway bill has to be the latest vehicle number and it has to match with the vehicle carrying the goods. So you can update your Eway bill as many times as you want, but make sure there is always latest vehicle number on the Eway bill. Okay, if multiple invoices, let's say I have two shops. In same city. Let's say I have one shop in area A of Ahmedabad and one shop in area B of Ahmedabad. Now I got an order from Mumbai for 5,000 units. I was not having 5,000 units in either of the shop. I was having 2,000 units here and 3,000 units here. I hired a transporter. I told him to take his truck, go to my shop A, collect goods, go to shop B, collect goods, and then go to Mumbai. So here will one Eway bill be sufficient, or I will have to issue two Eway bills? The answer is I will have to issue two Eway bills, because understand, there are two movements taking place. One from shop A to here and one from shop B to here. So even though this truck first goes to shop A, collects goods and then goes here and then goes here, there are ultimately two invoices being issued from two separate places, and therefore you cannot merge these e-way bills. The transporter can however merge, because the transporter is using same conveyance. Transporter is using same conveyance to deliver all of these goods, means just to update part B. Transporter can consolidate both of these e-way bills, but you as a registered person issuing the e-way bill cannot consolidate such e-way bills, because two invoices are there. So for every invoice you will have to issue an e-way bill. Understood? Inspection, yes, anytime officer can stop you, inspect your conveyance, check your e-way bill, and if they are detaining you for more than 30 minutes, you can file GST EWB 04 and cry in that. After inspection, within 24 hours, summary has to be updated in part B by the officer, that what did he check, and then within 3 days, the final whatever is the observation have to be submitted. If there is any breakdown in the conveyance, let's say there is a super traffic congestion jam going on and within 1 day you cannot travel 200 kilometers, then what to do? In that case, it is okay, you can apply for extension of e-way bill within 8 hours of the expiry. If there is any time change in conveyance, you can update vehicle number as many times as you can. Or if you are giving your goods to some another transporter to transport it further, you can then assign the e-way bill to the new transporter, and then that transporter will update part B of the e-way bill. Now there are some situations where e-way bill is not required. Here we have an amendment, this point. See, if you are transporting, let's say, currency, used personal effects or postal packages, kerosene oil under public distribution system, liquefied petroleum gas, all of these cases, no e-way bill is required. There was this one point saying that for transportation of jewelry, goldsmith, silversmith also, e-way bill was not required. But the amendment now says that it is only e-way bill will not be required. Here, what is the issue? I don't know, Wi-Fi has gone. Suddenly I've shifted to some another network and it is not working. Okay. And other than that, like if you are using any non-motorized conveyance to transport, means you are not transporting through any truck or anything, you are using maybe a bullock cart to transport, then in that case also e-way bill will not be required. From customs port to inland container depot or customs freight station if you are transporting. So all of these cases you can just read once, no e-way bill will be required. This amendment you please make sure that you are aware about. Okay. Can your e-way bill be blocked? Yes. If you are not furnishing your returns, if you are a composition supplier and you do not file CMP 08, means you are not paying taxes on quarterly basis for 2 consecutive quarters. No CMP 08 for 2 consecutive quarters as a composition supplier, your e-way bill generation facility can be blocked. Second, if you are a regular taxpayer who has not furnished return for consecutive 2 tax periods, means for 2 tax periods I have not furnished my GSTR 3B, or if I have not furnished my GSTR 1 for 2 months, or let's say if I am in a QRMP scheme, then for 2 quarters, and person whose registration has been suspended. So if my registration is suspended, or I have not filed CMP 08 as a composition person for 2 consecutive quarters, if I am a normal person, then for 2 months no 3B. If QRMP scheme, then for 2 quarters no 3B, or normal person for 2 months no GSTR 1. For a QRMP person, 2 quarters no GSTR 1, or my registration suspended. In all of these cases, they can block my generation facility for e-way bill. And this clarification says that if you want to keep your goods at transporter's place, you can. You just have to declare the transporter's premise as your additional place of business. This is all about section 68 e-way bill. Understood. Now returns under GST, again it is a C category chapter, because just procedure and dates given, that for every single return what is the due date to file this return, etc. And majority of the things we have already covered at the respective places. Still I will just take 5 minutes to wind up entire chapter of returns under GST, because as such the late fees and all are not very much relevant from examination point of view. So here if I see GSTR 1, we know that GSTR 1 is a monthly statement for people who are filing it monthly, but if your aggregate turnover is up to 5 crore rupees in preceding financial year, so if in preceding financial year your aggregate turnover was up to 5 crore rupees, then in that case you have an option. See, again, there is no mandation. You have an option that you can opt for QRMP scheme, which means you have to file your returns quarterly but make payments monthly. So file return quarterly means GSTR1 as well as GSTR3B. Both you are going to file on a quarterly basis if your aggregate turnover is up to 5 crore. But if you do not want to exercise this option, it is okay. You can come under monthly, or if your aggregate turnover is greater than 5 crore, then anyways you are falling under the monthly scheme only. So in this case, every month or every quarter respectively, whatever is applicable to you, you are going to file GSTR1. These people are not required to file GSTR1. Why? Because these people have their own returns. GSTR8 for TCS, GSTR7 for TDS, for NRTP, for ISD, everyone. For ISD, I guess it is GSTR6. So every person has their own returns, and therefore they are not required to file either GSTR1 or GSTR3B. Understood? Due date, it's okay, you can just see once. Then for composition person, we've seen that composition person pays amount through GST CMP 08, files GSTR4 on an annual basis 30 April of next financial year. Then for NRTP, non-resident taxable person, GSTR6. This is also a monthly return. Now see, what is the due date for NRTP? They are saying month on month basis, it is 13 of the next month. So like for January, it would be 13 Feb. But NRTP are not permanently registered, right? They come for occasional supply of goods or services. In that case, they say, if my registration ceases in between of any month, then 7 days after the last day of validity. Let's say I'm registered only till 10 December. I came on 19th November and took registration only till 10 December as an NRTP. Now in this case, government is saying that your last day of registration is 10 December, then within 7 days till 17 December also you can just file your return and go. You need not wait for entire December to get over and then file return till 13th January. So they are saying either 13 days after the end of month or 7 days from the last day of validity, whichever is earlier, you file your GSTR 5 as an NRTP. Then 5A for OID AR service provider, 6 for ISD, 13th of next month, 7 for TDS, 10th of next month, 8 for TCS, again 10th of next month. Then for annual return, we know there is GSTR 9 for normal people, 9A for composition, and 9B for TCS collector. And due date is same for everyone, 31st December of next financial year. 9C. See, earlier there was GST audit, but there's now no GST audit, means just a reconciliation statement which is self-certified. Just a reconciliation statement along with whenever you are submitting your annual return. Whenever you are submitting your annual return, with that only you are required to furnish this reconciliation statement if your aggregate turnover exceeds 5 crore rupees. Then GSTR 10 is final return. See, what is the difference between annual return and final return? Annual return you are required to furnish every year on an annual basis, but final return is furnished when your registration is cancelled. So they are saying whenever you get cancellation order, let's say I got cancellation order on 10 December and it said I am retrospectively cancelled from, let's say, 20 November. So whichever is later, either the date when I received the order or the date mentioned in the order from where I will be cancelled, whichever is later, 3 months from here, I have to furnish my GSTR 10. I have to furnish my GSTR 10, which is known as final return, and GSTR 11 for UIN holders, because they can get the refund of whatever taxes they have paid on some specified input services. So this is all about all the returns, when and who is required to file, and what is the due date. Now talking about section number, there is no need to remember all the section numbers. I will make you remember the important section numbers. See, 35 was accounts records, 36 was period of retention for accounts records. Now you are retaining accounts records. What you are going to do? Every month we are going to file returns. So first of all, section 37 GSTR 1. I do not think that anyone would be there who do not know section 37. 37 and 39 we all know GSTR 1 and GSTR 3B, because a lot of time we get references of 37 and 39 at lot of places. 38 is anyways omitted. It was about GSTR 2, but GSTR 2 is not relevant. So section 37 GSTR 1. 39 GSTR 3B. Then F for 40, F for first. F for 40, F for first means section 40 is first return. F for 40, F for first, section 40 is first return. Okay. Then section 44. Then see, section 41 we've seen with ITC chapter. You remember section 41. The section 16 conditions I had explained you subject to section 41, which said that you once avail ITC on self-assessment basis, that will be your final ITC. If later your supplier is not paying taxes, then you will be required to reverse. All of these things we've already seen under section 41 in ITC chapter. Then 4444. See, if I see a mirror image, if I see an inverted mirror image of 44, what you are going to see? This is how I write 44. An inverted mirror image, I will see NN, right? See, this is 44, ulta, inverted 44. So this is annual return. So section 44 is annual return. Then after annual, we have section 45, which is final return. So this is how you remember the section number of returns under GST. The important section numbers only, which are, see, till section 36 we saw period of retention. Now what I am going to do after retaining the accounts, obviously I am going to furnish my return. So section 37 GSTR 1, section 38 omitted, section 39 GSTR 3B. Then F for 40, F for first, F for 40, F for first, section 40 first return. 41 we have seen along with ITC. Then 44, if I see inverted mirror image of 44, I can see NN, which means annual return. Then section 45 talks about final return. Right. Now after this, if I do not file my returns till due date, a notice is issued to me. A notice is issued to me under section 46. So the notice under section 46 gives me a time period of 15 days. Notice under section 46 give me a time for 15 days, that within 15 days you furnish your returns. Otherwise, if you do not furnish your returns here also, then department can do your best judgment assessment under the chapter of assessment, section 62. I will link it there again. But for now, see, all the returns are over at section 45. Then section 46 talks about notice, that if you do not file your returns on time, we will issue you a notice under section 46, which will give you a time to file your pending return in 15 days. If you do not file within 15 days, then department is open to do your best judgment assessment anytime they want. Okay. Now after section 46, I am filing late return. Then in section 47, they have prescribed all the late fees. So for every return, whatever will be the late fees, if let's say I'm making a delay of 5 days, then for 5 days, what is late fees? Everything is mentioned in section 47. So right from 37 till 47, I think now you are very much clear how to remember the section numbers. Right. Now I am not taking all of these types of returns in detail. I think it would be clear to you anyways that in GSTR 1, we give invoice wise detail for all B2B supplies. Then for B2C supplies, see, this is same as revised tax invoice. The same limits applicable. Under revised tax invoices, we had seen that for B2B supplies, individual invoice wise details. For B2C, for all intrastate, you can consolidate. For interstate, still B2C, you can consolidate if value is less than equal to 2,50,000. Otherwise, if value is more than 2.5 lakh, then invoice wise details will be required. And GSTR 1 is mandatorily required to be filed. Means even if there is no sale, still nil GSTR 1 I have to file. HSN code again same that we saw in tax invoice chapter. More than 5 crore turnover, 6 digit. Less than 5 crore, up to 5 crore turnover. Then for B2B supply 4. For B2C it is optional. If you give 4 digits, you give. Otherwise you do not give, which will be fine. Amendment rectification, again same time limit, 30 November or annual actual date of filing annual return, whichever is earlier. If you are not furnishing GSTR 1 of preceding tax period, we will not allow you to furnish GSTR 1 of current tax period also. Means if I have not furnished January month GSTR 1, my February month GSTR 1 cannot be filed. Portal will not allow me only until and unless I file my previous period GSTR 1s. Current period GSTR 1 I cannot file. QRMP scheme simply says that quarterly return, monthly payment. You have to furnish your GSTR 1 and 3B on a quarter basis. But every month you are required to make the payment till what period, till what date? Here, till 25th of the succeeding month. Till 25th of the succeeding month, for the first 2 months of the quarter, you are required to make payment. And after the entire quarter, anyways, you file 3B and you make payment. And here we have 2 options, fixed sum method and self-assessment method. Understood. Now you furnish your GSTR1 in a quarterly manner, but every month, like for the first 2 months of the quarter where you do not furnish GSTR1, you have an option to furnish IFF, which is Invoice Furnishing Facility, in which up to 50 lakh every month, you can show your B2B supplies and not your B2C supplies. Why this facility is given? Because I will furnish my GSTR1 on quarterly basis, but it might be possible my recipient is filing GSTR3B on a monthly basis. Then how he will avail ITC if I do not file GSTR1? Because then no reflection will be there in GSTR2A or 2B. So in this case, government has told me that okay, till 13th of the month, till 13th of the succeeding month, you furnish IFF, and whatever sales you show in IFF will start getting reflected in GSTR 2A 2B of your recipient. Understood? Sure. Late fees, benefits, QR and 2. Okay. 2A and 2B. See, 2A is a dynamic statement. Means as soon as a supplier furnishes data in GSTR1 or IFF, 2A gets updated. But 2B is a static statement. Means whatever GSTR1 or IFF are furnished up to due date, till due date by the supplier, will only show in GSTR2B. If I furnished late return as a supplier, then my recipient will not get credit in the same month in GSTR2B. Then that credit will get reflected in next month GSTR2B. So this both are auto-generated statements. There is no difference between them. The only difference is this is static and 2A is dynamic. So here in 2B, only the details of outward supply furnished by supplier up to due date for filing return are reflected in 2B. If my supplier is furnishing late return, means now this credit will reflect in next month and not in this month. And whenever recipient files GSTR 3B, the credit has to match with 2B and not with 2A. So now whatever credit is available in my 2B, only 100% of that credit I can avail in my 3B, not even 1 rupee more than whatever is reflecting in my GSTR 2B. Then 3B, we know it is a summary statement. No invoice price details required. You just give what is total sale, what is total purchase, total RCM, total payment, whatever. Right. Then due date and everything. Okay, rectification again, same time limit 30 November or actual date of final return, which is earlier. First return, we know revised tax invoices, that my effective date of registration can be an earlier date, but RCI got later. So for this period, what we do, we issue revised tax invoices and show them in our first return. Then section 46, notice within 15 days you file your return. Otherwise, best judgment assessment under section 62 can be done. Then section 47 talks about late fees. Now this is the late fees given in the Act, the section 47, but this is not applicable currently because government has issued notification with respect to reduced late fees. So I have given this entire table. It is up to you. If you want to remember late fees, you can. If you do not want, it is completely fine, because 0.00001% chances I would say that ICI would ever ask you late fees, because till date they have never asked. And it is not practically possible also for you to remember so much of the late fees. Still, if you want to try, you can. Then late fees for annual return also we have. This is the late fees given in the Act, the section. But again, for annual return also we have rationalized late fees, and it depends on your turnover. Like if your turnover is greater than 20 crore, then this is your late fees. If 5 to 20, this is late fees. If up to 5 crore is your turnover, then this is the late fees. So late fees you can just self-read if you wish to. Then section 48. See, we completed late fees till section 47. Then section 48 talks about GST practitioner. Section 48 talks about GST practitioner. Means you can hire someone as your GST practitioner, and what that person would do. A GST practitioner would furnish details of your outward supplies, file refund applications for you, file revocation application for you. If you want to take composition scheme, you want to exit from composition scheme, you want to file challan, generate challan, whatever you want to do, everything you can do through a GSTP. Now, who can become a GST practitioner? Only and only an Indian citizen. If you are not an Indian citizen, you are not eligible to become a GST practitioner. You have to be a person of sound mind, not insolvent, and not convicted by a competent court. These are basic conditions, that at least you have to be sound mind, not insolvent, and Indian citizen, and not convicted by a court. Plus, you also need some qualifications, that either you have any of these degrees or you have this much of experience, then we can make you a GST practitioner. Understood. What is the procedure? Simple. You just have to apply that I want to be GST practitioner, and based on your application, the government gives you the status of GST practitioner. If they want to reject you, they can also reject. Understood. Information return, very much simple. Government can ask about your information from any third party. Means government can go to your bank, your registrar of companies, or let's say your stock exchange, your depository, RBI, anywhere, income tax department. So government can go to any third person. Means GST department can go to any third person people who have your information and ask them to furnish information about you, and then they will be required to furnish this information in an information return. So GST authority can go to excise authority, income tax authority, your bank, electricity board, local authority, your registrar, any person, GST department can go and ask about your information. Done. Now this rule 88C, this is amendment, so pay little attention here. What is rule 88C saying? See, a person would always be interested in declaring sales in GSTR 1 but not interested in declaring sale in GSTR 3B. Why? Because I do not have to pay anything while I declare sale in GSTR 1, but I will have to declare because my recipient will get ITC only if I declare in GSTR 1. So there will be a pressure of recipient always on me that you furnish sales in GSTR 1, then it will reflect in 2B of my recipient, and then only recipient can claim ITC. But in 3B, if I declare sale, I will have to pay taxes. Therefore, what people started doing, they started showing sales in GSTR 1 so that recipient gets ITC. But then they did not show sales in GSTR 3B. So government came with rule 88C saying that if a person has difference in liability as per 1 and 3B, means showing more sales in 1 but less sales in 3B with some specified percentage, like government is saying that 10% is the difference. So you have shown 100 in GSTR 1, or you have only, and you have shown 120 in GSTR 3B, means there is a variation of more than 10%. 10% is just an example. They can fix any percentage, whatever they feel is okay. So here, see, where the tax payable by registered person in GSTR 1 IFF exceeds the tax payable in 3B by such amount. Now, such amount can be anything as government thinks fit. So, such amount or such percentage as may be recommended by the council. In that case, registered person will be intimated about this difference. Intimation will come in part A of GST DRC 01B. So, under GST DRC 01B, under GST DRC 01B, part A, an intimation will come that see, this is the difference between your GSTR 1 and 3B, and this intimation will come on portal, and a copy will also come on your email along with highlighted difference that see, this is the exact difference between 1 and 3B. Now they will give you two options. Either you pay the differential liability, very much simple, whatever more you have showed in GSTR 1 less in 3B, the differential taxes you pay along with applicable interest penalty, whatever it is, through DRC 03. Or if you have a genuine reason to explain that see, in preceding month or preceding year there was this mistake being made and we were just rectifying the mistake, so you have some valid explanation with you, might be possible, and I am just amending or rectifying my mistake. So in this case, either you can explain the difference that it was done by mistake or whatever. So option A, you pay the differential liability, or option B, you explain the difference. Whatever you want to do within 7 days of getting this intimation. So this is what they will tell you to do. So therefore, what a registered person would do, he would either pay the differential liability and furnish the details in part B of DRC 01B. See, part A, they give me intimation. Part B, I have to furnish information that either I have paid the taxes or I am furnishing a reply that I am not required to pay taxes. See, I have a proper valid explanation. If you do not pay or you do not give an explanation, means the intimation has come in part A of GST DRC 01B, but you are not doing anything. You are neither paying taxes nor furnishing an explanation. In that case, your direct recovery proceeding can start. Means they can directly come to your place, they can sell your properties, they can attach your properties, they can do anything that they want to do to recover the amount, to recover the differential amount between GSTR 1 and 3B. Then if no payment explanation, then recovery under section 47 can begin. Also, until you clear this, so once you get an intimation in GST DRC 01B, now till you pay the differential amount or you furnish the explanation, means till you clear this particular thing, you will not be allowed to file any further GSTR 1. So registered person shall not be allowed to furnish GSTR 1 or IFF for any subsequent tax period unless you deposit the amount or you furnish an explanation. And do we understand that if I do not file GSTR 1 of this period, I will not be allowed to file GSTR 1 of my next period. Also, For 3B, if I do not file 3B of this period, I cannot file 3B of next period. And also, if I do not file GSTR 1 of this current period, then I cannot file GSTR 3B of current period also. See, if I have not filed January month GSTR 1, I cannot file February month GSTR 1. If I have not filed February month GSTR 1, I cannot file February month 3B also. So for a current year, for a current month, you first have to file 1, then only portal allows you to file 3B. Now if I do not file 3B of February, means I cannot file 3B of March also. So as such, if you see, they are just blocking GSTR 1. But eventually everything will get blocked, because if I do not furnish 1 of one period, then I cannot furnish 1 of another period, I cannot furnish 3B of another period, and everything is going to get blocked. So simple one line crux if I have to tell you about rule 88C. If there is difference which is exceeding any such amount or percentage between your 1 and 3B, you will get an intimation. You have 7 days to either pay the differential amount or to furnish an explanation. If you do not do any of these things, your direct recoveries can start. And also they are going to block your GSTR 1 until you clear this. They will not allow you to furnish any further GSTR 1. This is all about rule 88C. Since this is a new rule being inserted by amendment applicable for November 23 examination, make sure you are through with this. Done. So this is all about returns under GST. Now let's start job work. Job work is not A, not C, means you can call it C, somewhere between B and C. Because if it comes in examination, then it comes for a 4 to 5 mark question. If it do not come, then the weightage is 0. So it is not like compulsory it will come, but it comes in every 2 to 3 attempts. So we'll do it in a quick manner. See what the provision of job work says. If a principal wants to follow this optional, see, first of all, job work procedure is optional. Right, so again they are not putting any compulsion on you. If you want to opt for these special procedures under job work, you can. If you do not want, it is fine, you can go by the normal provisions. So here they are saying that a principal sends his inputs or capital goods to a job worker. Why? Because he wants job work to be done. So the principal has sent his inputs or capital goods to the job worker to get job work done. In this case, no GST payment is required to be made. Means without payment of GST, just on the basis of delivery challan plus Eway bill, the principal can send the goods to job worker for job work to be done. Or the principal can also tell his supplier, let's say this is the supplier of principal. In this case, principal will tell supplier that you will first send goods to me, I am going to send to job worker anyways. What you do, you directly send these goods to job worker. Then also it is fine. So either principal can send input or capital goods to job worker, or the supplier of principal can also directly send the goods, the inputs or capital goods to the job worker. In both of the cases, ITC will be allowed to principal. See, under section 16, we have a condition saying that the person has to receive good services. Then only we allow ITC. Now here, principal has not received good services. The supplier has sent directly to job worker. Still, ITC will be allowed is what this provision says. Understood. Now, job worker, after job work is done, can either return the goods to principal, can send the goods to some another job worker, or can also directly supply it to customer. Anything can be done based on what principal says. But whatever is done to be done has to be done for inputs in 1 year, for capital goods in 3 years. There is extension possible of plus 1 year and plus 2 years also. So if principal has sent inputs to job worker has to complete the job work process and send the goods back within 1 plus 1 year. If it is capital goods, then within 3 plus 2 years. But this time limit does not apply to any molds, dies, jigs, tools, fixtures. So if principal has sent any fixtures, molds, dies, jigs, then it is fine. Job worker can keep it for more than 1 plus 1 or 3 plus 2 years also. No time limit applicable there. But in other cases, always time limit will be applicable. Understood? This is entire job work chapter in short. Now, what if, ma'am, job worker is not sending these goods back within the specified period? Then what is required to be done? See, if principal sent the goods to job worker without payment of taxes, now job worker is not returning the goods within 1 plus 1 or 3 plus 2 years. In that case, government is going to assume the original date The original date when the principal had originally sent the goods to job worker. Principal had made a sale. Now we will consider sale from that original date. Means now you have to declare this sale in your GSTR1. You have to pay applicable taxes, and also because so much time has lapsed, you will be required to pay tax also, late fees, interest, penalty, whatever is applicable. All of these applicable amounts the principal is required to pay. Now at a later date, let's say after 6 years. After 6 years, job worker thought of returning the goods to principal. Now in this case, whenever job worker returns back, it will be considered as a sale from job worker point of view and will be added to job worker's turnover. So means if the goods going and coming back is done within this time limit, then no invoice, means it will not be added in either of the person's turnover. But if this time limit is exceeded, it is added in both of the parties' turnover. Originally in principal's turnover when he had originally sent, and job worker when he is returning back. So this is all about job work. I'll just take you through notes once. So if any small point we've missed, we can just cover. See, what is job worker? Doing any treatment on another person goods. Principal always will be registered. Job worker can be registered, can be unregistered. It is fine. Now this is an optional procedure. If you want to follow, you can follow. If you do not want, it is completely fine. Now principal can directly send to job worker, or supplier can also directly send to job workers. ITC will be availed in both cases. Inputs within 1 + 1 year and capital goods within 3 + 2 years. But this time limit is not applicable for jigs, fixtures, molds, dies, tools, etc. After processing, job worker can either give to some another job worker, or dispatch to principal without payment of tax, or can also supply to ultimate customer. But whenever this supply is made to ultimate customer, remember that principal will have to declare job worker's premise as additional place of business. Means if principal has sent certain goods to job worker and principal wants job worker to directly give the goods to customer, in this case, principal will have to declare job worker's premise as additional place of business. But this declaration is not required if job worker is already registered under GST. Means if job worker is unregistered, then only such declaration is required. If job worker is registered, then it is okay if you do not declare that place as additional place of business. And also, if principal is engaged in some notified goods, means whatever commissioner notified, that's for these goods you do not declare additional place, then it is fine. Also remember, time, place, value, everything will be seen from principal's point of view. Let's say principal is in Tamil Nadu. Job worker is in Karnataka. The ultimate customer is in Tamil Nadu. Now job worker directly supplied the goods from Karnataka to the ultimate customer in Tamil Nadu. It will not be treated as an interstate supply. No. We are going to see location of supplier from the original principal point of view only. The original principal is in Tamil Nadu and customer is also in Tamil Nadu, means C plus Tamil Nadu SGST will be charged. So whatever is the place, value, time, everything will be seen from the viewpoint of original principal only. Job worker has done nothing. See, job worker would have sent to principal, then principal would have sent to customer. Just to avoid this unnecessary movement, we are directly allowing job worker to supply. Doesn't mean place and everything will be seen from job worker's point of view. Understood, ma'am? Sure. All of these things very much simple. If timelines are not complied, the goods deemed to have been supplied by principal on the original date, and now subsequently when job worker is returning, it will be added in job worker's turnover. So this is all about it more or less. So when you are delivering, you deliver along with the delivery challan as per rule 55. One job worker can send to another job worker also. If goods are returned in piecemeal, in that case delivery challan issued by the original principal cannot be endorsed back. You issue new delivery challans. Intimation you have to give to GST officer by the principal. So if the principal's turnover is up to 5 crore, he can just give one annual intimation that during this entire year, this is what I've sent to job worker and what I've returned back till 25 April after the end of year. If turnover is greater than 5 crore, then twice a year intimation is required to be given on half yearly basis, 25 October and 25 April. Eway Bill, see, if there is interstate movement for job work, Eway Bill is always required. If job worker registered, he can generate. If principal registered, job worker unregistered, then always principal will have to only generate. Principal compulsory will always have to be registered only. Job worker can be registered, can be unregistered. Job worker is ultimately supplying services because job work is covered as a service under Schedule 2. So in this case, if job worker's turnover exceeds 20 lakh or 10 lakh, as a service turnover, not the goods turnover, because anyways, if principal has sent If principal has sent goods to job worker and job worker sends them back, these goods are anyways not added in the turnover. So whatever supply job worker is making as a job worker, if that supply exceeds that 20 or 10 lakh, then he would be required to take registration. This is all about job work. Yes, everyone, yes or no? Is the Josh high? You are getting confidence. We are done with 200 pages. 270 pages as entire GST. Now 70 pages left. We are done with 200 pages of GST. We are done with what we are required to do as taxpayers. See, understand, if you are a taxpayer, you have to determine whether to take registration or not, is GST charged or not. You take ITC, you issue invoices, you file returns. This is what you do as a taxpayer. Now once you file returns, whatever you are required to do is over. Means now as a taxpayer, I am not required to do any further thing. My responsibility ends as soon as I file my returns under GST. Now whatever we are going to study are the liabilities of a department. Means now after I have furnished my returns, I am free. Now what department can do is covered here. Like department can do assessment, audit, scrutiny, raid, demand recovery. Department can levy penalties on me. So all of these things are to be done by department. Yes, everyone, is the Josh high? Dil laga bomb in the comment section, everyone. Yes, ma'am. Okay. So now let's start with assessment and audit. Okay. So what do we mean by assessment? Assessment simply means determination of tax liability. Means to assess what I am required to pay. Assessment can be self-assessment, reassessment, provisional, summary, best judgment, assessment. Audit means to examine. Now we know audit means examination. What you will examine? Records, returns, documents to verify whether the turnover, taxes, refund, everything is correct or not, and whether the taxpayer has complied with the provisions of the act or not. Now, let's start with section 59, talking about self-assessment. Now, section 59 says that GST is a trust-based regime. So every taxpayer will be required to do self-assessment and pay taxes as per section 39. Means you file your GST at 3B and you pay the taxes. So every registered person shall himself assess the tax, whatever I feel based on my sale and purchase. This is the tax amount and I will pay it to government, payable by him for a period, and file the returns required under section 39. This is all about 59. Now 60 says that at any point of time, I feel like I am unable to determine value or rate. See, how does the GST amount come? Value into rate of tax, right? Value into rate of tax is equal to GST amount. So if I am having any doubt in what is the value under GST or what is the rate of tax for my supply, in that case, I can go to government, I can go to proper officer and request him to allow me to pay tax on a provisional basis for now. After that, officer will do final assessment and tell me what is the final amount of tax. So here, when a taxable person is unable to determine value and rate, see, understand, provisional assessment can be done only for value and rate, no other thing. I can make application to proper officer to allow me to provisionally pay taxes. So proper officers shall issue order within 90 days. So whenever I make application within 90 days, proper officer will allow me that, okay, you pay the taxes once on a provisional basis. And in the provisional order, it will be indicated that I have currently paid based on this value rate, and whatever, if any bond has to be furnished and security has to be furnished, that will also be indicated in the provisional assessment order. Value of security cannot exceed 25% of the bond amount. Now, once the provisional assessment order is passed, within 6 months, plus further extension by additional commissioner, joint commissioner of 6 months, plus further extension of 4 years of commissioner is possible. So 6 months is the normal time limit. So from provisional assessment order, within 6 months, final assessment order has to come. Then further extension of 4.5 years is also possible. Now there can be two cases. That in final assessment, either I had short paid the taxes or I had excess paid the taxes. Means whatever is the determination as per final assessment says that more taxes are required to be paid as compared to what I had paid provisionally. Means I had assumed that for my 1 lakh rupee sale, 5% rate of GST would be applicable and I paid 5,000 GST accordingly. But after final assessment, it came out that 18% rate is applicable on this supply and therefore 18,000 is required to be paid, which means I have short paid 13,000 rupees. So obviously I will have to pay this 13,000 along with 18% per annum interest. Now the question is, interest will start from what date? So they are saying, let's say I got my tax provisionally assessed for January 2023 month. The due date to pay tax here was 20 Feb 2023, right? Well, I would have furnished my January month return. So they are saying your interest will start from this date. Your interest is going to start from the original date from which you are liable to pay the taxes, and it will continue till the final date when you make payment. So from the original date when I was liable till the final date when I am making the actual payment, for this period I am required to pay 18% interest on this 13,000 amount which I had short paid provisionally. So pay differential tax and interest at 18% from date when tax was originally due till the date of actual payment. But if I had excess paid, means whatever is determination as per final assessment is less than what was there provisionally, in this case government will give me refund, right? Let's say originally I had paid 18,000 provisionally, but the final assessment says that only 5,000 are to be paid, means I should get a refund of 13,000. Yes, so they are saying we will refund you the 13,000 along with 6% per annum interest. But see, interest from what date to what date? Once I get the final assessment order, I will make application for refund. That you please give me the refund of 13,000. From this application, if I receive the refund within 60 days, then no interest will be payable. If I receive refund within 60 days from application, then no interest will be payable. If I receive my refund after 60 days, then from 61st day till the actual date when I receive the refund. So from 61st day, so see, after expiry of 60 days from receipt of refund application till date of refund, I will get 6% interest. So when I have to pay the interest from original date till date of payment 18%, but when government is giving me refund, it will be from 61st day, means after 60 days from when I have made refund application till the date when I actually receive the refund. This is all about provisional assessment. And once everything is settled, so whatever security you had furnished here, you can just make an application and release your security within 7 working days from the application. Done. 59 self-assessment, 60 provisional assessment. Now 61 we talk about scrutiny of returns. Now understand, there is no compulsion. Proper officer may. So once I filed my returns, proper officer may select my return for scrutiny, may not even select. Now once they've selected my return for scrutiny, then it could be possible that they found certain discrepancy. They will issue me a notice telling me that you please explain this discrepancy that you are saying that your return that your liability is, let's say, 1 lakh rupees, but we feel your liability is 1,50,000 rupees. You please explain this discrepancy. So the registered person shall reply within 30 days of service of notice, and extension is also possible by proper officer. Ma'am, what extension? It is open extension, whatever proper officer feels okay. So proper officer may select my return for scrutiny. Once it is selected, if any discrepancy is found, they will issue me a notice and I have to reply within 30 days. Now 4 cases possible. Let's say we have Vijay here. Vijay slept yesterday. So Vijay had attended the marathon yesterday also, the part 1 of marathon, and he was extremely tired. So he said good night to her. And he slept. But then he realized that, oh shit, ma'am had told us to watch the valuation chapter video because it is already uploaded on YouTube. So he thought that, okay, I want to finish IDT tomorrow only. Let me just wake up and finish the video that ma'am has said. So he woke up again. His girlfriend saw that he was online. So next morning he got a text. Why were you online after telling me good night? So she did scrutiny and now she had issued a notice to give explanation for the discrepancy. Now see, 4 possible scenarios are possible. Either Vijay accepted discrepancy. He said, I'm very much sorry. I got a text from call and I got a text from my friend, so I had to wake up. So whatever. He accepted his discrepancy. He paid the taxes interest, means he sent her flowers, chocolates, everything. He said sorry and the matter got closed there. So either you accept your discrepancy and whatever are the differential taxes required to be paid, you pay the tax, interest, penalty, everything, inform the same, matter will be closed. Or let's say Vijay accepted the discrepancy. Vijay accepted the discrepancy that yes, I am so sorry, I was talking to her or him. But he did not do anything. He accepted discrepancy. He did not say sorry, did not send any flowers, any chocolates, nothing. You have accepted discrepancy, but you are still not taking any corrective action. Then what to do? Let's wait. Or Vijay is not accepting discrepancy. Vijay gave an explanation. Vijay said, hey, I was watching marathon. You don't know, I told you 2 days I am extremely busy. I have marathon. So, and ma'am had told to complete that video. So I was watching that video. She said, okay, sorry. So Vijay did not accept discrepancy, submitted explanation. Explanation was accepted also. So matter closed. Matter closed, no further thing required. But Vijay gave an explanation saying that, oh, I just opened YouTube, I was searching something, means he tried to give an explanation, but explanation was not satisfactory. Then what to do? See, 2 cases, matter is closed. When he accepted, paid amount, matter closed. Did not accept, give explanation, explanation was good. Accepted by proper officer, matter closed. Now 2 things. I am accepting, but I am not taking corrective action. Or I am not expecting, but my explanation is not accepted by the proper officer. In that case, proper officer can do any of these 4 things. So for these cases, proper officer can either do audit. Special audit means she will tell you, hey, give your phone. I want to check your phone, means she will do your audit. Special audit means she can send someone. See, audit is done by department. Special audit, department hires a chartered accountant or cost accountant to do audit. So either she can do audit on her own, she can send some of her friend, hey, you go and check his mobile. So audit can be done, special audit can be done. Inspection, she will directly come to your house to do raid only. I want to check everything. Chalo, where are all the gifts and everything that I have given you? So inspection, search, seizure can be done. And ultimate, last proceeding is always the demand proceedings. So initiate proceedings under section 73, 74, which are demand proceedings. So here proper officer can take recourse of any of the 4 things: audit, special audit, inspection, or initiate proceeding under 73, 74. Right. So this is all about scrutiny of returns. Now talking about best judgment assessment. Now best judgment assessment can be done in section 62 or section 63. Now section 62 is for registered person who are not filing return. Section 63 is for people who are not taking registration only. So best judgment assessment, 2 best judgment assessments we have, section 62 and section 63. 62 talks about people who are registered but who are non-filers of return, and section 63 who are not registered only. Now see here, if I have failed to furnish my return, also I have got my notice under section 46. See, I had told you in returns that I will link it again here. So section 46 notice issued, but within 15 days also you are not furnishing return. In that case, now proper officer is open to pass best judgment assessment order anytime. What will be the time limit to issue best judgment assessment order? So for any financial year, let's take example of FY 21-22. What is the due date to file annual return? 31st December 22. 5 years from here. 5 years from here. So for any financial year, the time limit to pass best judgment assessment order would be 5 years from the due date of furnishing annual return for that financial year. Now, once you get an order, once you get an assessment order under section 62, you still have a option available with you that if within 30 days also, so if a registered person files a valid return within 30 days of service of order, then also this order will be withdrawn. So say I got an order under section 62 for my best judgment assessment, but within 30 days only I furnished all the valid returns, it is fine. This proceeding will be withdrawn. The order under section 62 will be withdrawn. I just have to pay all the applicable taxes, interest and late fees penalty, whatever is applicable. But now I am not even filing returns now. So I got first notice under section 46. I did not do anything. Then best judgment assessment order under section 62. I still did not do anything. Now officer can come to my premises and do recovery under section 78, 79. Means now they can sell my properties, clothes, everything. They can sell me also. They can sell everything and recover whatever amount they are demanding under section 62. Yes, ma'am. Now section 63 is for unregistered person. Now either you are a taxable person who fails to obtain registration, or your registration is cancelled suo motu by proper officer. In both of these cases, see. Now here they cannot give you notice under section 46. Why? Because you are unregistered. Even if we give you notice, you cannot still file returns because you do not have a registration. So here what they can give you, they can simply give you an opportunity of being heard. So they will issue your show cause notice and you can give reply within 15 days, whatever reply you want to give. That for this reason I have not taken registration or whatever. Now, if reply is satisfactory, matter closed. If not satisfactory, now once they've given you show cause notice, opportunity of being heard, now it is open for them to do your best judgment assessment. Time limit is again same. So for any financial year, due date of furnishing annual return, from that 5 years, best judgment assessment can be done. And no withdrawal is possible here. Why? Because even after getting order under section 63, I cannot still file my returns. Why I cannot still file my returns? Because I am not a registered person. Here I have this option that within 30 days I file my return and free myself from section 62. But here once order is issued, means order is issued, no withdrawal is possible because I am not a registered person. This is all about best judgment assessment under section 62 and 63. So withdrawal is possible under section 62, but withdrawal is not possible under section 63. Time limit is same for both. Time limit simply says that 5 years from the due date of furnishing annual return. Now see, guidelines says that whenever the due date is coming, whenever for any return due date is coming, prior 3 days you get an intimation, you get a mail message that with in 3 days you have due date, furnish your return. Right. Now, after due date is over, a system generated mail message is again sent to all defaulters that due date is over, you did not file your returns, you please file your return. Now, once the due date is over and 5 days are gone, a compulsory notice is issued to everyone electronically. So electronically, notice under section 46 is issued to every person who has not filed returns even 5 days after the due date. Now, once notice under section 46 is issued, means you have 15 days to file return. And now if you don't file your returns under section 40, after receiving notice under section 46, means now your case is open for best judgment assessment. Why government has done? Just to ensure uniformity. That it might, if it is left on proper officer might forget to issue notice under section 46. In that case, best judgment assessment cannot be done if you have not issued notice under 46. So to ensure uniformity, that every defaulter is being issued with the notice under section 46, they have made it electronic only. So here, first of all, you get an intimation that file your returns, 3 days are pending. After due date is gone, they again give you an intimation. Then after 5 days of due date, they issue you notice under section 46. All defaulters electronically that file returns within 15 days. If you file within 15 days, everything is over. If you do not file within 15 days, then proper officer can anytime in that 5 period time do your best judgment assessment. It is not mandatory that best judgment assessment will be done. Proper officer can do, means your case is open for best judgment assessment. Understood? Now, from where officer will get information? Your GSTR1, auto-populated 2A, your Eway bills, or any other information that we got from inspection or anything like that. So, officer can get information from a lot of places based on which he would be doing your best judgment assessment. And last kind of assessment, section number 64. See, we saw 59 self-assessment, 60 provisional assessment, 61 scrutiny, 62 and 63 best judgment, one for registered person who are not filing return and this for unregistered person. And last section 64 talks about summary assessment. Section 64 talks about summary assessment. Now, summary assessment says that if I have proper evidence that this person has incurred liability and I have sufficient grounds to believe that if I let go this person, then revenue will be affected. Let's take an example of any. Let's take an example of Mr. VM. Mr. VM. Okay. So I know that Mr. VM has incurred liability, and if I let go Mr. VM now, he might fly away, and I would never be able to catch him, never be able to recover taxes from him. In that case, officer can quickly do a summary assessment. But before doing summary assessment, officer will have to take previous permission of additional commissioner or joint commissioner. So summary assessment can be initiated to protect interest of revenue with previous permission of additional commissioner, joint commissioner when they have evidence that liability is incurred. And I have sufficient grounds to believe also that if I do delay, it would adversely affect the revenue of government. In that case, summary assessment can be done. Because summary assessment is done in a quick manner, it may be possible that there are some errors in summary assessment. So there is an option to withdraw summary assessment also. So ACJC, Additional Commissioner, Joint Commissioner, can also withdraw summary assessment based on application done by taxable person. So today when summary assessment order is passed, within 30 days, within 30 days taxable person can apply that, see, there is some error in summary assessment, you please withdraw this assessment and do my assessment in a normal manner under section 73-74. So they can apply. Or let's say officer himself thinks suo moto, so on own motion officer thinks that, oh shit, error, the order was passed erroneously, they can withdraw and then follow the normal procedures of an assessment. So here, see, so we saw right from 59 till 64 withdrawal is possible only in two cases. One, assessment order can be withdrawn under section 62 here. If I file returns within 30 days, withdrawal is possible. And second, section number 64. In question bank, you will have this question where they are asking that withdrawal is possible in what cases? Withdrawal is possible only under section 62 and 64. No other assessment order can be withdrawn here. Understood, everyone? Yes, ma'am. And also under section 64, because everything is done in a quick manner, if we are unable to determine who is taxable person, whoever will be the person in charge, we will do summary assessment. Let's say I caught a conveyance while it was in movement in transit. Now the driver is not telling that the goods belongs to whom, means I cannot ascertain who is taxable person. Then I will do summary assessment on the transporter, or let's say there's some go down where I found those goods, I will do summary assessment on the owner operator of warehouse go down. So if taxable person is not ascertainable, but liability is fixed that on these goods tax is evaded, in that case whoever will be the person in charge will be the deemed taxable person, and we will do summary assessment of that taxable person in charge only. That this is possible in section 64. So this is all about assessment. Now audit. So we have two types of audits, one under section 65, one under section 66. Section 65 says that the officer from department will come for audit, and section 66, department hires a cost accountant or chartered accountant to carry out audit under this particular section. So audit can be done of any registered person where, so either at the premises of the auditor, auditee, or the officer can call records at his office also. So either officer can come to your office to do audit, or officer can tell you to send the records to officer's office. Anywhere this audit can be done. Period covered. Now it can be multiple years. Audit can be done for multiple years together, for a part of year, or for a single year also. Now obviously this is not a raid that you just directly come there. You inform that person that we want to conduct your audit. See, audit is done in a very friendly manner, where that person would give you all the records and you do audit of the records. So they will give you at least 15 days time. So 15 working days prior notice is given to the registered person that you please arrange your records and everything, we want to do your audit. Now the period for completion is 3 months. So audit should be completed within 3 months, or plus 6 months extension is also possible. And in case of special audit, audit is conducted by chartered accountant, cost accountant. Here time limit is 90 days plus 90 days. One major difference that you remember is 3 months plus 6 months time limit when officer is doing audit under section 65, but under section 66 it is 90 days plus 90 days. Expenses means who will pay the fees of chartered accountant? Obviously the government department, means the commissioner. Done. So this is all about assessment and audit. You want a small break, or I shall continue? Because it is now like almost 2 hours. You want a small break, or I should continue? Okay, take a small break for like 2-3 minutes, and then we begin with inspection search seizure. Again, this chapter is C category. Very less times question is being asked from this particular chapter. Okay, let's continue, guys. Chalo, back. So let's start with inspection, search, seizure, arrest, as already mentioned, C category. Okay, now starting with section 67. See, till 66 we completed 59 self-assessment, 60 provisional assessment, 61 scrutiny, 62 and 63 best judgment, 64 summary assessment, 65 audit and 66 special audit. Now starting with section 67, power of inspection, search, seizure. Now see, inspection is comparatively a softer provision than search. Search in our common language is what we call as raid. So search is basically a raid. We do not call it raid as per law language, we call it search. Now inspection is kind of a softer provision. When the officer can come to a taxable person's premise or a transporter's premise or an owner operator of warehouse godown's premise. Now they can carry out inspection, but only after they have a written authorization. So the officer can come for inspection for at your place of business to assess your place of business only if he has a written authorization from whom? From any officer not below the rank of joint commissioner. So at least joint commissioner or any officer above joint commissioner can give a written authorization to carry out inspection. Now in this case, when will they give written authorization? When they have reasons to believe. When they have reasons to believe that the taxable person has done says. What do we mean by says? The taxable person has contravened provisions of the act, has claimed excess ITC, or SS says suppression of sales or suppression of stock. So there is suppression of supply or there is suppression of stock. So if I have reasons to believe, I am joint commissioner, I have reasons to believe the taxable person has done says, then only I will give this written authorization to my subordinate officer to go and carry out inspection. Or let's say for transporter or owner operator of warehouse godown, when we have reasons to believe that these people have kept goods which have evaded taxes or they have kept their accounts records which show that they might be likely to evade taxes. In these cases, I will give written authorization that you go and you carry out inspection. Then what about search and seizure? Search and seizure is basically raid what we understand in common language. So it is all carried out in accordance with Criminal Procedure Code. Okay. If you've seen any movie where they have shown a raid scene, this will be very much easy for you to understand. So for search seizure, very much simple. The officer will come and he would be eligible. He would be liable, or he would be, let's say, he would be having a power to seize your goods, to take your documents, books and everything away. And if not possible to seize goods, they can also detain your goods there if it is not practical. Right. And when they are taking your documents, you as a person are entitled to ask for copies or to take extracts, because ultimately they are your accounts records. So if you want any copy extract, you can ask the officer to provide. So if you do not allow the officer to enter your premise or to not open a particular room, officer has power to break the almirah, to open the door, daya darwaza tod do, if you've seen CID. So a proper officer has the power to break or open the door, almirah, seal the premises if access is denied. And then whatever books, documents they've taken along with them, if they are no more required, then they will return you the books and documents within 30 days from whenever they issue the show cause notice. So now show cause notice is issued, I do not require these books, documents anymore. So within 30 days, they will return you your documents. This is all not very much relevant for exam. I am repeating again, but not skipping the chapter, because MCQ or a one short theory question can anytime come. But importance point of view, not very much. Now basic requirements to be observed, very much simple. You cannot go to search anyone's premise without a search warrant. So the officer always has to have a search warrant, then only they can search your premises. Now always if you are going to residence of someone, you need to have a lady officer accompanying you. Always you have to show your ID card that yes, you are authentic valid officer coming from GST department. Also, at least two witnesses will be required while you are conducting search, means two witnesses will sign on the search warrant. Then before start of proceeding and after end of proceeding, the officers will offer themselves for search, means the officer will tell the taxable person that if you want to search, you can search, that we have not brought anything from outside and we are not taking anything away from here. So before start of proceeding and after completion of proceeding, officer and witnesses offer themselves for personal search. And once all the proceedings are completed, in that case, they make a panchnama or merger, means an entire summary of whatever happened during the search. And then this panchnama merger, along with the duly signed search warrant, is returned to the original officer who had issued the search warrant, who had issued the permission to go and conduct the search operation. Now, what are the contents of a valid search warrant? Now tell me quickly, whenever you want to search something, what you do, you go and open VPN. So similarly here also, whenever the officer wants to search, the search warrant, the contents of a valid search warrant would be VPN square, which is what violation you've done, what is the validity period of the search warrant, then what premises are to be searched, what is the place and date of issue, and then N says name and designation of the person who issued the search warrant and name or designation of the person who is going for search operation, and N says that serial number of search warrant. So these VPN square are contents of a valid search warrant. Violation, what you have done, validity period, premise to be searched, place and date of issue, name designation of person who will go to carry out search, and name designation of officer who is issuing search warrant, and serial number of the search warrant. Then confiscation of goods. When can your goods be confiscated? In rare situations. When can your goods be confiscated? This is a mnemonic, rare situations, saying that whenever I have received or supplied any goods in contravention of the act, I do not account for the goods, or I am liable but I have not taken registration, and E, I have evaded payment of tax. So I have contravened provision with an intention to evade any tax. So RARE, rare are the situations where my goods can be confiscated, where I have received or supplied goods in contravention of the act. Let's say fake supplies kind of things. Then A, I'm not accounting for any goods for which I'm liable to pay tax. R, I'm liable but not taking registration. And E, I have contravened any provision with intention to evade payment of tax. Manner of release. Now, once my goods are confiscated, they can be released on provisional basis or actual return if no notice. Now, officer came to my premises, searched my premises and seized certain goods and took those goods along with him. Now it's been 6 months. He has not issued any show cause notice to me with respect to it. Then it would be original return, means now that person will have to return those, the officer will have to return those goods back to me. And if the goods are of perishable nature, hazardous, or there are some storage constraints, then officer can sell those goods also. Inspection of goods in movement. See, section 68 Eway Bill we've already seen. Section 68 Eway Bill. So when the goods are in movement, we require Eway Bill, and while the goods are in transit, inspection can be done anytime. Section 69 Power to arrest. Section 69 Power to arrest. So 69 simply says that if you have done any offense which is exceeding 2 crore rupees, then with the authorization of commissioner you can be arrested. Means if there is an offense which is less than 2 crore rupees, then arrest cannot be done. For any offense greater than 2 crore, only arrest can be done, and that too you require authorization of commissioner. But if you are a repeat offender, means you are doing this kind of offense on a repeated basis, then 2 crore limit will not apply. Less than 2 crore also they can arrest you. Very much simple. Offense can be cognizable, non-bailable, or non-cognizable, bailable, and you have to be produced before magistrate within 24 hours. If it is bailable, then on ACDC's bail you can be released on bail, and code of criminal procedures obviously will apply for arrest operations. Then section 70 says power to summon. So if the officer wants, he can summon you, means he can call you to produce certain documents, whatever he is requiring, but make sure he cannot call entire books of accounts from you. So he need to be very much particular about what accounts records he want and what he want to ask you by calling you under a summon. So during the course of inquiry, if officer thinks he may summon any person to appear before him and give evidences or produce documents, and that person is duty bound to come once a summon is issued to him. Also, you cannot call entire set of books of accounts. What particular things you want, you can call that. Also, see, when officer calls you on summon, you might get scared, you might under pressure say something which you were actually not willing to say. So in that case, a person can also modify or withdraw whatever statement he gave during the summon period, but that should be with not an inordinate delay. It's not like after 1-2 months you are coming after thinking that, oh, I said this, I should have said this. No. With an inordinate delay, within like 1-2 days, or at that point of time only you said, no, I said this by mistake, it is okay, you can withdraw your statement. If you are not appearing, you can be prosecuted under Indian Penal Code. Okay, guidelines, very much simple. Language should not be harsh. Means you do not say, if you do not come, we will do this with you. No, the language should not be harsh, because you're just calling the person for documents or evidences. Be polite. Also, this should be a last resort. Do not keep calling person all the time just for your convenience. This should be used as a last resort. Also, if some senior management, see, today if any GST officer summons Ambani ji, Ambani is summoned, by any GST officer, what will happen of the share prices of Reliance, what will happen of the shareholders of Reliance, means there will be a lot of disturbance in the economy. So they are saying that if you want to anytime summon any senior management official of any large company, of any public sector undertaking, make sure first of all that person is actually engaged in whatever fraud has happened, or that person has done something due to which there is a loss of revenue to government. Do not summon these big people, because that would ultimately have an impact on the economy. Then section 71 talks about access to business premises. So officer can come to your business premises and ask for some accounts records. I am actor accounts records. I am actor accounts records means income tax audit report, audited annual financial statements, cost audit report, trial balance, other relevant records, or any records you have prepared and maintained and you are declaring them to proper officer. So the officer can come to your premises and ask for any of these accounts records, and these I am actor accounts records you will have to produce. Ma'am, this is what we studied under section 67 also. Inspection. Inspection is a softer provision than search, that officer can come and inspect. Now understand, section 71 is very much general. Officer can just like come ask for any accounts records, but 67 is very much particular, right? We saw those SEZ cases. Where you've done those SEZ cases, then only they will be giving you written authorization, and then only inspection can be done. So 67 is some specific situations only, whereas 71 is more of a general case where all of these accounts records can be asked anytime by the officer. And last section for this particular chapter, section 72, that whenever the officer, the GST officer is going for search, operation, inspection or anything, the police, railways, customs, village officers and all of these people will assist the GST officer. So if the GST officer wants to take assistance of any of these officers, he can ask for them. Yes, everyone understood. Done with the chapter of inspection, search and seizure. Now demands and recovery is A category chapter. The sections that I will take in marathon are A category. Other than that, there are some remaining small portions in the chapter which is not very much relevant. So major part of the chapter is A category, and some 20-25% part of this chapter is C category also. Right everyone, dil dil aga bomb bomb, is the josh high? Is the josh high? Hey chalo everyone. Why only 2-3 students are replying? Chalo, every student concurrently watching live now, just give me a thumbs up or give me a dil dil aga bomb bomb emoji. Chalo, waiting for 1 minute. Every student watching live, quickly give me a lot of energy here. Sure. Jitin, Priya, Parvati, Vijay, and students who have not answered yet. Yes, ma'am. Sure. Then let's start with demands and recovery. Now, demands and recovery says that whenever there is a case of tax not paid, short paid, or ITC, wrongly availed, utilized, or refund which you have erroneously taken. See, tax you have not paid, short paid, refund erroneously you have taken, or ITC wrongly availed, utilized. In these cases, demand order can come. Now understand, this thing can be by mistake also, that I declared some short payment of tax by mistake, or I am deliberately trying to do some fraud. So there are two possible cases, section 73 and section 74. Section 73 says that for reasons other than fraud, willful misstatement, means there is a bona fide mistake, I am not deliberately doing it, then I come under section 73. But if I am deliberately attempting to not pay or short pay tax or to erroneously claim refund, means I am trying to do fraud with government, willful misstatement or suppression of fact, then I am covered under section 74. Now more or less provisions are kind of same only. Section 73 simply says that officer will issue you a show cause notice saying that this is the demand order. Before show cause notice, he can also do a communication with you. So proper officer will issue a show cause notice specifying what is the amount of tax along with interest, and notice should state what are the grounds on which you are demanding the amount. Also, PO may do communication before issuing show cause notice. So PO will just give you an intimation communication that I am issuing show cause notice. If you still voluntarily want to come forward and pay taxes, you pay. So that notice is not issued on you. What is the time limit to issue show cause notice? Then see here. Under section 73, the time limit to issue the adjudication order, means the order under section 73 can be issued till 3 years from the due date of filing annual return. So let's say FY 23-24. What is the due date to file annual return? 31st December 24. Till 3 years means 31st December 25, 26, 27, I can issue a demand order under section 73. And show cause notice has to be 3 months prior to demand order, means 2 years 9 months. 2 years 9 months from actual date of annual return under section 73, show cause notice can be issued. But for section 74, they are saying the time limit to issue the demand order is 5 years. 5 years from the due date of filing annual return. And the show cause notice has to be 6 months prior to the due date of order, means within 4 years 6 months. Within 4 years 6 months of due date of filing annual return, I have to issue show cause notice. These due dates are extremely important and you have no other option but to remember them. So section 73, order 3 years from from due date of filing annual return, but show cause notice before 3 months of order. And 74, order you can issue till 5 years, but show cause notice maximum you can issue till 4 years 6 months of due date of filing annual return. Yes ma'am, sure. So the time limit to issue show cause notice would be 2 years 9 months from due date, and that is 3 months prior to the due date of demand order. Now also, if you are repeatedly committing same kind of offense, then there is no point giving you a show cause notice again and again. We will just give you a statement. We'll just give you a statement to avoid duplication, and that statement would give reference to the show cause notice, and that is also valid. It would be deemed assumed that yes, notice is served to you. Now, you have this option that when proper officer has done just a communication, means show cause notice is not yet issued. If before issuance of show cause notice you come forward and you pay all of your taxes and applicable interest, then no notice will be issued to you and no penalty will be levied on you. So a person can voluntarily come forward to pay the taxes along with interest, and in such case department is not going to serve any notice, any statement, and also no penalty will be imposed on you. But in this case, if you short pay, then for the remaining portion notice can still be issued to you. Okay, or even within 30 days, like now show cause notice is issued to you, but even from show cause notice within 30 days you pay the applicable interest and taxes, then also no penalty will be levied on you. So all proceedings shall be deemed concluded if tax plus interest is paid within 30 days of issuance of show cause notice. But once an adjudication order is issued, then you will have to pay tax, interest plus penalty also. And what is penalty under section 73? It says 10% of tax or 10,000 rupees, whichever is higher. So proper officer, after considering representation made by person, if any, pass an order determining the amount of tax, interest, penalty due and what will be the quantum of penalty. They are saying it is 10% of tax or 10,000, whichever is higher. And time limit to issue this order is 3 years from the due date of filing of annual return. Is everyone with me? Yes or no? Yes ma'am. If you know this, you already know section 74. Now all of these things are same. Issue show cause notice, before show cause notice do communication, time limit already discussed. If repeated offense, then you can just issue a statement and do not give show cause notice again. Now, here section 74 you are doing fraud, right? Section 74 you are doing fraud, means no one can save you from penalty. If you pay early, you can maybe save on some penalty, but penalty you will still have to pay. So they are saying here if you pay before show cause notice under section 74, pay taxes, pay interest, but penalty will only be 15% of tax and everything will be concluded. See, 73 before show cause notice no penalty, but 74 even before show cause notice 15% of tax penalty you will be required to pay. Now after show cause notice, 30 days within show cause notice, if you are making payment, then tax, interest plus 25% of tax penalty. Now once order is issued and after order also within 30 days if you pay, time limit to issue order we know. Now after order also within 30 days if you pay the demand, then 50% of tax as penalty, and after 30 days of order it will become 100% of tax which you are required to pay as penalty. Means whatever tax you have short paid, entire amount, same amount you will also be required to pay as the penalty. So before show cause notice 15%, after show cause notice 25% within 30 days. Now once adjudication order is issued, within 30 days of order, it would be 50% penalty, and after 30 days, it will become 100% penalty. But under section 73, penalty only after order is issued, and that is a single penalty, 10% of tax or 10,000, whichever is higher. This is under CGST, means same amount will also be levied under SGST also. Yes, everyone clear with me? Done, ma'am. Now what is this star mark that you've done here? This and this. Now this star mark says that if any amount as self-assessed tax is not paid, or I have collected any amount from any person in the name of tax, but I am not depositing it to government within 30 days. Once again, if any amount of self-assessed tax or any amount which I have collected in the name of tax from any person and I am not paying it to government within a period of 30 days from due date of payment of such tax, in that case, no waiver of penalty, means here when they are saying that no penalty is to be paid, will not apply here, means I will still have to pay the penalty. So no waiver under section 73 will be available and penalty will become mandatory here. For non-payment of self-assessed tax, no need to issue show cause notice also. See, self-assessed tax means you are only declaring that tax in your returns. You are only saying that this is my self-assessed tax. And if you are not paying that also, in that case, no show cause notice is required because you are already accepting that it is your self-assessed tax, means no show cause notice and direct recovery proceedings can start. Direct recovery proceedings can start. But when you have collected any amount in the name of tax from some person and now you are not paying it to government, let's say you sold some exempted goods. Still you collected tax. Still your recipient was not knowing that the goods are exempt and you collected tax. Now you kept it with yourself. You thought that anyways goods are exempt. Why to give this tax to government? No. If you have collected anything in the name of tax, then you will still have to give it to government. In this case, there is no time limit to issue show cause notice. So forget all of this 5 years, 4 years, forget everything. No time limit. Show cause notice can be issued any time if you have collected any amount in the name of tax, not deposited it to government. But for self-assessed tax, show cause notice is not required only. Direct recovery can start. But once this show cause notice is issued for amount collected as tax and not paid, within 1 year from this show cause notice, then final order is required to be passed. See, section 75 I'll take later. 76, tax collected but not deposited. So amount representing tax collected from any person to be paid to government. If not paid, show cause notice can be issued any time and determine what is the amount due. The time limit for issuance of order would be 1 year from the date of issuance of show cause notice, and after giving opportunity of being heard, all the decisions will be taken. Now section 74, some general provisions not very much important except for 1 or 2 points. Now these 1 or 2 points simply says that period of stay, whenever you are computing all of this 5 years, 3 years or time limit, if there was any period of stay by court, you just exclude that stay, means that amount, that period you will get extra if there was stay anytime. Now this particular point, where we have an amendment, means we just have a clarification being inserted with respect to this point. What does the clarification says? Let's see. So here, clarification pertaining to cases where notice issued under 74 are deemed as if notice under 73. Okay. Now here, let's assume department issued you a show cause notice under section 74 saying that tax is not paid and you are fraudulently not paying taxes. Now it is proved that tax is not paid, but it is not proved that you are done fraud. Means it is possible that mistakenly you did not pay that tax. So what? We will just cancel the proceedings? The answer is no. So here government says that when notice was issued under section 74, but we are unable to prove that fraud happened, in that case this notice will be converted as if this notice was issued under section 73, because there is anyways not short payment or erroneous refund or ITC wrongly utilized. So offense is there, but it might be possible that it is not done deliberately. It is a bona fide mistake. So you convert the notice of 74 into 73 is what this clarification says. Okay. Also, if any time court issues any order, court tribunal issues any order, you have 2 years time limit to comply with the new order. So if a court said that you convert this 74 notice into 73, you have 2 years time limit to wind up all of the things that you are required to do. Understood. Now one more important thing. You have to respect the time limit of both the sections. Respect the time limit of both the sections means what? Say for example, under section 74, my time limit to issue show cause notice is 4 years, 6 months, right? So let's assume officer issued me a show cause notice after 2 years, 3 years and 2 months from the due date to furnish annual return. Now this is to be converted under 73 because no fraud is proved. But what is the original time limit to issue notice under 73? It is 2 years, 9 months only. Means, had I known since beginning that this is not a case of fraud, officer would not actually issue the notice only because the time period has lapsed. 2 years, after 2 years, 9 months, no notice can be issued. But this notice was originally issued after 3 years, 2 months. Therefore, this now cannot be converted into 73 order, and now this proceeding will be dropped. Why? Because it is hit by time limitation. It is hit by time limitation. So they are saying whenever you are converting this notice of 73 to 74 to 73, make sure that the original notice under 74 was issued within the original time limit of 73. Then only we will allow you to convert it. If it was issued after the original time limit under section 73, then we cannot allow you to convert it. And in that case, the entire proceeding shall be dropped because it is being hit by the time limitation under section 73. This is clarification, newly inserted clarification. Therefore, it becomes important for your exam point of view. So make sure you are very much clear with all the time limits with under section 73, 74 and plus this additional clarification also. A question can definitely come in examination from this particular chapter and this particular point. Understood, ma'am. 73, 75 and 76 I've already taught you. Now section 77 says that wrong place of supply. Let's say I made an intra-state supply, means actually I was required to collect C plus S GST, but mistakenly I collected IGST and paid IGST to government. It is completely fine. What you do, you now pay C plus S and you take refund of IGST that you paid erroneously. And in this case, no interest will be applicable because your intention was never to not pay tax. It is just that you got confused in place of supply and you paid wrong tax. So they are saying C plus S paid instead of I or vice versa. So in this case, refund shall be available after payment of correct tax. So first you pay the correct tax and then you take refund of the incorrect tax that you have paid. And in this case, no interest will be applicable. This is about section 77. Then section 78 says that whenever a demand order is issued to you, so under 73 or 74, let's say they've issued your demand order that this is the tax interest penalty that we are demanding from you. So within 3 months, let's say you got a best judgment assessment order or any order that you've got, any demand order that you've got. Within 3 months, you are required to pay the amount as per that demand order. If you are not paying, then section 78 says that recovery proceeding can be initiated. So within 3 months from the date of order, you are required to pay the taxes, interest, penalty, whatever amount they've asked. If you are not paying within 3 months, then at the expiry of 3 months, your recovery proceedings can be initiated. And if at any time proper officer thinks that you are going to run away, they can even allow you less time than 3 months also. So if proper officer considers it expeditious, in interest of revenue, he may specify a period less than 3 months also, which is fine, but he will just have to give reasons in writing that why he is allowing you less period as compared to 3 months. Now section 79 says that okay, 78 said that recovery can start. 79 said that then recovery can be done through what modes? It is awesome tales. It is awesome tales. From awesome tales, the department can do recovery. Means, let's say any refund was due from department to you. So any money was owed to you by department, they can just withhold your refund and make your recoveries from there. So recovery by deduction from any money which is owed to you. S means they can sell any of your goods which are under their control. They can sell any of your movable, immovable property. Then they can recover the taxes as if it was a fine imposed by magistrate. So whenever a magistrate of court imposes a fine, how it is being recovered? In a similar way, this can also be recovered. Then T, third party person, garnishee proceeding means, let's say department has issued a demand order to A. A is not paying the demand. Recovery has to be done. Now A has given some loan to Mr. B. Now Mr. B would be repaying the loan to Mr. A. The department can tell Mr. B, you do not give the amount to Mr. A, you give us this amount to government. So here, from some third person which is owing money to this taxable person, we can recover from that third person also. We call it as garnishee proceedings or third party proceedings T. A says that as arrears of land revenue, just like we recover arrears of land revenue, we can recover this also. Then L means recovery from a company in liquidation, E recovery through execution of a decree, and S recovery through surety. If any person had taken your surety, we can also recover from your surety. So, and also the SGST officer does all the recovery, and later they share the revenue with CGST officer also. So recovery is done by one officer and then they share it with the another officer. And also, if there is less recovery, let's say 50,000 CGST plus 50,000 SGST was to be recovered, but the total recovery happened only of 70k. In this case, they will pro rata apportion it 35k and 35k. Not like entire 50 C will take and remaining S will take. No, not like that. If there is any time part recovery, then proportionately it will be distributed between CGST and SGST. Understood? So this is all about mode of recovery. See, section 73, demand in case of tax not paid, short paid, ITC erroneously availed, utilized, refund erroneously availed. In case of other than fraud, 73. In cases of fraud, willful misstatement, 74. 75 talks about the general proceedings, that maximum 3 adjournments can be available, principles of natural justice to be followed. Then your 74 notice will be converted to 73. If due to court anything is to be done, then you have 2 years time to execute the court order, everything like that. General provision 75. Then 76 talks about when you have collected any amount in the name of tax and you are not deposited it to government, no time limit to issue show cause notice and always penalty will be levied. Within 1 year from show cause notice, they will have to issue you a demand order. Then 7. I got confused which 7 is where. I got confused whether to take C plus S or to take I, and I determined wrong place of supply. No problem, you pay the correct taxes and you take refund of the incorrect taxes. Then 78 says that if demand order is issued to you and within 3 months you are not paying that amount, then your recovery can start. Then 79 says that recovery can start, but from what modes I can recover? From awesome tales. From awesome tales they can make a recovery. Done. Now section 80 talks about payment of tax in terms of installments. So they are saying other than self-assessed tax, no installment facility for self-assessed tax. Other than self-assessed tax, if any amount is recoverable from you and you make an application that either you give us please little more time or you give us some EMI facility. In that case, government can give you EMI facility or little more time, but it will come along with 18% per annum interest. So commissioner may extend time for payment or allow EMI. Maximum 24 installments allowable, received from taxable person, but subject to 18% per annum interest. And also, if the amount is less than 25,000, then what EMI facility do you want? So for less than 25,000, no installment facility. And also, if at any time you default on one EMI, entire amount becomes recoverable, or you are a repeat offender. So defaulted earlier also. If you have defaulted earlier, then the amount can be greater than 25,000 also, but we will not allow you installment facility. And no installment for self-assessed tax. If you default in any one installment, full amount becomes recoverable immediately. That is section 80 installment. See, 0. When you make 2 installment of 0, it becomes 80. When you make 2 installments of 0, it becomes 80. So you can remember it this way, section 80 installment facility. See, 73, 74 you will remember anyways because this section comes at lot of places. Now 75 is a general number. Section 75, general proceeding. 76 says that whenever you have collected any amount in the name of tax, not paying it to government, then penalty will be imposed. No time limit for show cause, and within 1 year from show cause, order has to be given. Then 7, I got confused which 7 is where. I got confused means I got confused in place of supply. So in place of C plus S, I paid I, or in place of I paid C plus S. Therefore, section 77. Now 78, 79 again recovery. So 78 says recovery can start after 3 months. 79 says that what are the modes of recovery. Then 2 installment of 0 become 80. 2 installment of 0 become 80. Therefore, section 80 installment facility. I am just trying to give you some kind of linking so that you can just consolidate entire chapter with section numbers. Because if you think, okay, 73, 74, 75, entire chapter you can remember, and this chapter is important. Therefore, I am giving you this kind of linking. Now, section 81 simply says that transfer of property void. Now, this is not very much important for exam, so no need to remember, it is okay. Section 81 says that, means no need to remember the section number. Provisions you still need to know. So, transfer of property void means At any time, if officer, you got to know that demand order is issued or is going to be issued and property will be attached, because for recovery proceeding they can sell your immovable properties. So what you did, you sold the property, you parted yourself with the property and took amount and flew away. So here, if a person creates a charge on the property or parts with the property, why? With an intention to defraud government, so that government cannot make recovery from that particular property. In that case, the transfer of property is considered to be void, means government can still make recovery from that particular property. But there is an exception, obviously. If the buyer was unaware about the proceedings being going on, and the buyer has paid full adequate consideration, means it is not that for less consideration it is being transferred. The buyer has paid full adequate consideration and buyer had a bona fide intention. He did not knew anything about the proceedings being going on. Then in that case, obviously you cannot punish the buyer. So here it is okay, transfer of property, or let's say it was being transferred with the prior permission of proper officer. Okay. 82 GST dues will have first charge. 83 provisional attachment can be done. Your bank account can also be provisionally attached, but maximum for a period of 1 year. All of these is not very much relevant. You can just self-read once. Now here, amendment portion. The amendment part says that, see, section 84 talks about continuation and validation of recovery proceedings. Continuation and validation of recovery proceedings. So here, let's say a demand order is issued to me under section 73. I want to file appeal. Obviously, I can. Officer issued me an adjudication order. I can go to higher authorities. I can go to court to file appeal. In this case, if I file an appeal, my recovery proceeding will stay for that period, because until unless the appeal order comes, officer cannot do recovery. So here, any appeal, revision or other proceeding is disposed of. Now, after appeal proceeding is disposed of, any of these four things can happen. Either my demand order is cancelled, means I appealed at a higher authority and the authority confirmed that whatever I am saying is right, means I won the case. So demand order will be cancelled and now no recovery will be done. Or let's say they confirm the demand order, means they say whatever officer has given you demand order is completely fine. Recovery will continue. So recovery had stayed. Why? Because I had made an appeal. Now if I lose the appeal, recovery will continue. Or they can enhance my dues also. They can enhance my dues also, means I went to them saying that this officer is charging more tax penalty from me. They say, no, they are charging less. We will charge more. So they have enhanced my dues. So in this case, for that enhanced amount, they will give me a new notice and now recovery for old amount as well as new enhanced amount. Everything will continue together. Or let's say they reduced my dues. Now this is possible. I went to them saying that I got a demand order for 10 crore. But as per me, only 4 crore is payable. So they reduced my demand amount. In this case, no fresh notice is required. You just give an intimation of the reduction in the amount. See, when amount is enhanced, for that enhanced amount, new notice is required. But for reduction in amount, no new notice is required. You just give an intimation. You just give an intimation about the reduction. This word intimation is an amendment. Okay. Now rule 161 simply says that the intimation or the notice of enhanced or reduced amount of demand shall be issued in GST DRC 25 and proceedings conducted in IBC are also covered here. See, any appeal revision going on under GST, okay. If any insolvency bankruptcy code proceedings, see here they are saying other proceedings. What other proceedings? So any IBC, insolvency bankruptcy code proceedings are going on, that also will be covered here only in the other proceedings. So means as per IBC proceedings also, your recovery will stay and based on what is the final order, we will continue recovery or we will stop recovery. Yes, Disha, thank you. Chal. So this is all about demand and recovery chapter that we have completed. Again, repeating chapter is important. See these small things that I skipped here. These small things that I skipped here that are C category, you can self-read it once. I would not advise you leaving anything. You can self-read once, but yes, for exam point of view, not very much important. Done. Sure. With me, everyone. With me, everyone, Josh is high. And we are going to stay till end. Done, ma'am. Sure. Liability to pay in certain cases. 5 minutes chapter. Yes, we all know it is C category only. If asked, maybe in MCQ. So for transfer of business, see, for transfer of business, up to the date of transfer, both both transferor as well as transferee will be liable. But after the date of transfer, only transferee will be liable. Means any GST due, I transferred my business today. After that, if any GST dues arise for period pertaining to before date of transfer, in that case, both transferor as well as transferee will be jointly severally liable. But from the date of transfer, after that, only transferee will be liable for any GST dues coming. Agent principal, both jointly severally liable. Amalgamation merger, see, amalgamation merger, your contract date can be anything that is irrelevant. The day when order, means when ROC allows your amalgamation merger. So the date of order will be relevant for GST purpose. So let's say I talk about an amalgamation or merger. In this case, with effect to this date of order. Effective date can be anything. ROC gave order here, but the effective date is some retrospective date. Effective date is not relevant. Contract date is not relevant. The date when you got order will be relevant. Till this date, GST is going to treat both of them separately only. So till this date, if A and B are merged, let's say into AB, A made any sale to B, B made any sale to A, GST will treat both of them separately only, and these respective sales purchases will have to be shown. To supply or receive goods services from each other during this period, including their respective turnovers. But after this date of order, they will both be considered one. Till here, they will be considered distinct only. Company in liquidation. Now, whenever a company goes in liquidation, a liquidator is appointed. So as soon as a liquidator is appointed, he will intimate about his appointment to GST commissioner within 30 days. So the day on which liquidator is appointed for any company, he would inform the GST commissioner that I am appointed and the company is under liquidation. If any of the GST dues are pending, please let us know. Now the commissioner has 3 months time. So the day when he got intimation that the company is into liquidation, within 3 months commissioner can determine if any GST due is pending for that particular company. Now after that, as per waterfall mechanism we know. So liquidator as per waterfall mechanism will make sure to satisfy the GST dues. Now liability of directors of a private company, see, not public. Write public and strike off, not applicable to public company, only private company. So if there is any GST due recoverable from a private company and company is not having sufficient funds, means company is not in a position to pay those dues, we can make the directors of the company personally liable. But only it is applicable for private company, not for public. Even if a private company gets converted into a public company, then also after that, those public company directors will not be liable. So if dues cannot be recovered from a company, directors of private company jointly and severally become liable. But if they are able to prove that they were not under any neglect, see, unless he proves that non-recovery is not attributed to his neglect, then he can be freed. But if he is not able to prove, in that case, he will be jointly severally liable along with the company. Now liability of partner, very much simple. The firm as well as all the partners are jointly and severally liable. But when a partner retires, means after date of retirement, obviously partner would not be knowing what is happening in the partnership firm. In this case, within 1 month. So today, let's say I retire on 20 December 2024. Within 1 month, means up to 20 Jan 2024, I have to give this intimation to commissioner that I have retired from this firm with effect from 20 December only. So from 20 December, my liability will cease. But I inform after 1 month. If I inform after 1 month, then my liability will continue till I inform. Let's say I informed on 20 Feb 2025 that I retired on 20 December. My liability will continue till 20 Feb even if I retired earlier. So they are saying from retirement, either you inform within 1 year, within 1 month. Then from the original date of retirement only we will keep you liable. But you inform later than 1 month, then till you inform, we will keep you liable. Guardians, trustees are liable as if they are the major capacitated person. Ward of court trustees, they will be liable jointly, severally, everyone. Then in case of death of a person, now see, understand. If a person dies and any legal representative, any legal higher representative is carrying on the business, is continuing the business, means you are taking benefits of that business, then obviously you will have to take a share in liabilities also. So legal representatives will be liable for full amount. Let's say I die today and my children, my kids are carrying on my business. Then in that case, whatever liability arises, they will be liable because they are availing benefits of my business. But if they discontinue the business, so the legal representatives are liable only the estate that they receive from me. So if they continue the business, they will be liable for full amount, more than what estate they have received. But if they have discontinued the business, then their liability will be only up to what estate they have received from me in inheritance. Partition of HUF, not just Karta. Every single member will be jointly severally liable. Dissolution of a firm, every single partner will be jointly severally liable. When the guardianship terminates, means the minor becomes now major. So that major person will now become liable. In case of discontinuance of business, change in constitution, dissolution of the firm, partnership, all the members, partners, everyone will be jointly and severally liable. So we understand that this chapter has a lot of MCQ potential. Why? See, 1 month, 3 months, 30 days, this up to this date. So, and here, transfer of business, students get all confused lot of time. That they think up to date only transferor liable. After transferee, no. Up to transfer, transferee both liable. And after transfer, only transferee liable. So this chapter has MCQ potential. So make sure to not skip it, but at least cover the MCQs. Yes, everyone. Yes. Hand it. Done. Sure. Now, offences and penalties, I would consider it somewhere between A and B category only, because since last 3 attempts, we are seeing every attempt a question from offences and penalties. So, would consider it between A and B category, but right, not very much practical for you to learn all the offences penalties. Therefore, whatever is important, I have highlighted. I have also given techniques for you to remember the important sections here. I will not cover up the entire chapter, but let's just go through it once. I am anyways going to share a detailed video on offences and penalties, like a 1 or 2 hour video where we are going to cover each and everything. So if any student is willing to cover offences penalties in detail, he or she can refer that video. But for now, I do not think that entire chapter would be very much important. So I'll just take you through important section. I'll just make you mark that this at least you read. So section 122, see, there are these strict food offences. There are these strict food offences that for all of these offences, there is a single penalty saying that whatever is the amount of tax involved or 10,000, whichever is higher. Now understand 10,000 under CGST. So under SGST, this will become double. Right? Yes, ma'am. So what is strict food? So if you supply goods services without or with false invoice, suppressed turnover. See, strict is everything square. So 2S, 2T, 2R, and then we have food. Okay. Then T, fails to deduct TDS and TCS. So 1 T is TDS, 1 is TCS. Either you do not deduct only, or you deduct and you do not pay to government. Then R says that I have not taken registration, or I've given false information while taking registration, or I am issuing invoices based on some another person's registration number. Then R, I fraudulently obtained refund. I am issuing invoice without supply. See, here I am supplying without issuing invoice. Here I am issuing invoice without supplying. Now ITC, I am utilizing wrong ITC without receiving goods services, or I am distributing excess ITC, means section 20 IST. Then C, I am transporting goods which are liable for confiscation. I am collecting any amount as tax and I am not paying it to government. Transport any taxable goods without cover of documents. Tamper or destroy evidences or documents. F means, F is in relation to financial information. So I am falsifying my financial records, I am failing to maintain books accounts, or I am failing to furnish. See, either I am not maintaining only, or I am maintaining but they are false, or I am maintaining, they are correct also, but I am not furnishing. Any of these things can be possible. See, either I am not maintaining, or I am maintaining but they are false, or I am maintaining, they are correct also, but I am not furnishing with respect to financial information. O says I am obstructing officer on his duty. And D, I am disposing of or tempering any of the detained or seized goods. So for all of these offences, there's a single penalty saying that what is your tax involved or 10,000, whichever is higher. Now understand, if in any case you got a demand order under section 73 and you paid the applicable tax interest penalty under section 73, then again under section 122, no requirement to pay penalty again. Because once you pay all of these penalties under section 73, deemed your section 122 proceedings are concluded. So do not ever think that for one single offence, they will be giving you notice under 73 also and you will be required to pay penalty under 122 also. No. If 73 done, 122 deemed concluded. Now, here where I have made this asterisk marks. When I supply without invoice, I issue invoice without supply, or I wrongly avail utilize ITC or IST provisions. In these 4 cases, if some person is conducting, means let's say I am issuing fake, I am the mastermind, I am the mastermind of the entire thing that is happening, issuing fake invoices and everything. But some another person is involved. So the person who is the mastermind to these transactions, means at whose instance such transactions are conducted, will also be liable to pay the penalty, shall be liable to pay a penalty of an amount equivalent to tax evaded or passed on. Right. Now, where the offense is committed does not involve fraud or willful misstatement, means let's say any of these things is done, any of this strict food things is done, but the intention was not of fraud, in this case only 10% of tax involved or 10,000 whichever is higher will become the penalty. See, here they are saying full tax involved, right? Full tax involved or 10,000 whichever is higher if you deliberately did it, but your intention was not of fraud, still that offense happened. In that case you get a relief that only 10% of tax involved or 10,000 whichever is higher is what you are going to pay as a penalty. But if fraudulent intention was there, then the normal penalty that we have studied here will apply. Right. Now when a person is not directly involved, say I'm not directly involved, I'm also not the mastermind, I am just a party to it. Let's say I'm the chartered accountant, I know everything, I'm helping them out, I'm not the mastermind, I'm just helping them out, or I'm like I'm trying to aid or abet any such person, not attending summons or any of these general things. In that case, penalty can extend up to 25,000 rupees. So when a person is not directly involved in any of these offences, but I am a party to evasion, or I aid or abet by any such offence, or does not attend by the summons or produce documents, then my penalty can go up to 25,000. Then if you remember, I taught you about information return. The department can ask about your information from any of the third person. Means department can ask for information, let's say from your registrar, from your bank, from your electricity board, and if they are not furnishing returns, penalty can be levied on them also, 100 per day and maximum 5,000. Now this all is under CGST Act. So similar penalty under SGST Act will also come. Is it relevant for exam? No. Is this relevant for exam? No. But still will we study? Yes, let's just study and wind up entire chapter here only. So let's see. So fine for failure to furnish statistics under section 151. So fine up to 10,000 rupees, and in case continuing default, then further fine. See, 10,000 is flat penalty, but if you still continue the default, then 100 per day and maximum 25,000. Again repeating every time, this is under CGST Act. Section 151 is covered under miscellaneous provisions, right? Where to carry out the provisions of any of the act or anything like that. If there is some statistics required to be furnished, you are required to furnish those statistics. If you fail to furnish statistics, this is the penalty, not at all relevant for exam point of view. Then general penalty, where you have committed any offense, but no separate penalty is given for that particular offense. General penalty can apply, which may exceed to 20,000. Means it is not flat 25,000. Any amount, right from 1 rupee to 25,000, it can extend up to 25,000, where you have committed an offense but it is not covered anywhere. Then a general penalty of up to 25,000 can be levied on you. Then some general disciplines saying that no penalty where there is a minor breach. Means I have done less than 5,000 rupees fraud. I guess this question came in recent November 22 or May 23 exam only, where they asked an MCQ with respect to this 5,000. They played on less than 5,000 or more than 5,000 or up to 5,000. So make sure that these small things can sometimes come in examination for 1 to 3 marks also. So here no penalty if there is a minor breach, means less than 5,000, no penalty. Or in case documentation errors are apparent on face. So for small documentation errors, you are not going to charge any penalty. Penalty imposed shall be commensurate with the degree and severity of the breach. Now understand, here we have an option to levy anything right from 1 rupee to 25,000 rupee. So while fixing the penalty, make sure you are levying penalty as per what is the severity of the breach. And you will never impose any penalty without giving opportunity of being heard. So first of all, every time the person will be required, get this right to get an opportunity of being heard. And after following this principle of natural justice only, penalty will be levied. And voluntary disclosure. If a person voluntarily comes forward saying that I have committed this offense mistakenly, it happened with me. So if a person is voluntarily coming forward, make sure to use it as a mitigating factor, consider that thing and levy little less penalty from that person. This will encourage other person to also voluntarily come forward. So if there is a voluntary disclosure, you consider it as a mitigating factor while quantifying the penalty. Power to impose penalty. See, proper officer can levy penalty if he is of the view that person is liable, even if person is not covered in any of the provision. So 62. Best judgment, summary assessment, demand, or 129, 130 liable for confiscation. If this person is not covered anywhere, still if officer thinks that penalty has to be levied on this person, officer still has the power to levy penalty on this person. Power to waive penalty, yes. So government may by notification, on a lot of times government anyways waives the late fees of the returns and everything. So government has the power to either waive the full or part late fees and penalties. Now, detention, search and release of goods and conveyance in a transit. So notwithstanding anything contained in this act, where any person transports or stores any goods, means we are talking about the transporters or owner-operator of warehouse who are transporting or storing goods while they are in transit in contravention of the provisions. All such goods conveyance documents shall be liable for detention and seizure. Means not just those goods, not just those documents, even that entire conveyance can be detained by the government, by the GST department. After detention or seizure, shall be released on payment of penalty. Now you will have to pay penalty. If the owner of the goods comes forward, then penalty will be 200% of tax payable. But let's say exempted goods were being transported in contravention of the provision. Then for exempted goods, tax payable will be 0. So 200% of 0 will be 0. So in this case, government says that for exempted goods, it will be 2% of the value of goods or 25,000, whichever is lower. So for normal taxable goods, penalty where owner comes forward will be 200% of tax payable. But if the goods are exempt goods, then 2% of the value or 25,000 rupees, whichever is lower. But if the owner is not coming forward, means we will be levying penalty on the transporter or owner-operator of warehouse. In this case, it will be 50% of value of goods or 200% of tax payable, whichever is higher. So if the owner comes forward, 200% of tax. If the owner is not coming forward, then 50% value of goods or 200% of tax, whichever is higher. And here for exempted goods also, this 2% will become 5%, but maximum 25,000 remains same. Means whichever is lower, we are going to see. So this is when the owner comes forward and when the owner does not come forward. Now, these goods conveyance shall be released either on payment of opposite penalty, or you can also furnish a security of that amount and you can get your goods released. No detention seizure without serving an order. Obviously, without giving you an order for detention, directly detention seizure cannot be done. So proper officer shall issue notice within 7 days of detention or seizure specifying the penalty payable. So once they seize your goods, now make sure to stay with me for this 7 days timeline. Stay with me for this 7 day timeline. See, once here they have seized your goods, within 7 days from here, they are required to issue you a show cause notice saying that you pay this amount of taxes for this seized goods. Thereafter, pass an order within 7 days from date of service of such notice for payment of penalty. So today I seize your goods. Within 7 days, I give you a show cause notice that I am going to levy penalty of this particular amount. If you have any explanation, you please give us. Show cause notice is a kind of opportunity of being heard. Now, I gave my reply and everything. Now, within further 7 days from service of such notice, I will issue a final order. That this is, so I seized the goods within 7 days notice. Next 7 days, I issued an order that this is the final order. You pay the penalty now. Okay. Now, when a person makes payment of amount within 7 days of show cause notice before order, then inform proper officer and proper officer shall issue order concluding all the proceedings. So here, when I got the show cause notice, I did not wait for order and I paid all the penalties. So here my proceedings will get concluded. Now, no penalty under section 129(3) without giving opportunity of being heard. See, taxes and interest will always be levied anyways. For penalty, without opportunity of being heard, no penalty can be levied. Now, on payment of amount under 129(1), all proceedings in respect of notice under 129(3) shall be deemed to be concluded. So once you pay this amount, all these proceedings going on. So this amount, see, amount given under 129(1). So if you pay this penalty under 129(1), whatever notice here was issued under 129(3), those proceedings will be deemed concluded. Now, owner transporter fails to pay penalty within 15 days from date of receipt of copy of order, the goods conveyance so detained shall be liable to be sold, disposed of. See this timeline here. Seize. The day they seized, within 7 days show cause notice. Next 7 days order. Now I have 15 days to make payment of the penalties which they are asking in order. If I do not pay within 15 days from here, then whatever they have seized, they will be eligible to now sell or dispose of those goods. So they are saying if within 15 days the owner or the transporter is not paying the penalty from wherever I have received the order, my goods, so my conveyance for transporter and goods for owner, so my conveyance or goods will now be liable to get sold or disposed of, and then officer can recover the penalty, provided that conveyance can be released on payment by transporter of penalty or 1 lakh rupees, whichever is less. So as such the goods are the goods on which duty is not paid or duty is short paid. So in that case we are still giving an option to transporter, that if transporter wants, transporter can get his conveyance released on payment of whatever penalty we've studied here. So whatever penalty we've studied here means whatever penalty they were asking you in the notice, that penalty or 1 lakh rupees, whichever is less, you can pay and you can get your truck released. So you can get your conveyance released as a transporter. If goods are of perishable hazardous nature, then even less than 15 days we can give, because after that even if we sell, we will not get anything because the goods will perish in 15 days. Now, who will be considered as the owner of the goods for the purpose of 129(1)? So is the invoice or other specified document accompanying the consignment? If the consignment while it was in transit had an invoice with it, yes, so either the consignor or the consignee should be the deemed owner. But if no, proper officer to determine who should be declared as the owner of the goods. So if there is a proper note, if there is a proper invoice or any document which is accompanying the goods, then either the consignor or the consignee, anyone can be considered as the deemed owner. But if there is no document with the conveyance being transported, then in that case, proper officer should determine that who will now be the owner of these goods and on whom we are going to levy the penalties. Right, ma'am. Now recovery of penalty by sale of goods or conveyance retained. Now understand. They seized my goods. Within 7 days from here, they gave me a show cause notice. Within 7 days, they gave me an order. Within 15 days, I have to make payment. If I do not make payment within 15 days, now they are open to sell my goods. So when penalty is not paid within 15 days, my goods or conveyance can be sold through a process of auction, including e-auction, for which notice shall be issued indicating. Now here, government will issue me a notice. That 15 days are gone. You have not paid the taxes. Therefore, we are now auctioning your goods. So provided that if all penalty and expenses relating to safe custody and handling are paid, then we will cancel the auction process. Now they come forward, they pay all the amounts, then it is okay, we will cancel out the auction. Last day for submission of bid or date of auction shall not be earlier than 15 days from the date of issue of above notice. Now see here. Here a notice for auction is issued. That now we are conducting an auction. Now at least you give 15 days time to people. From notice, at least you give 15 days time to people so that they can submit their bids for the auction. So here we are saying that last day for submission of bid or date of auction shall not be earlier than 15 days from the date of issue. So once you give notice, at least give 15 days time to conduct auction or to submit the bids. But if the goods are perishable, then obviously less period can be given. Now proper officer may specify pre-bid deposit to be furnished. Now if proper officer thinks there should be a pre-bid deposit, they can also ask for a deposit. If you win the auction, deposit will be used. If you lose the auction, then deposit will be returned to you. So deposit will be returned to unsuccessful bidder, and if successful bidder fails to make payment of full amount, it may also be forfeited. So if I win the bid but I am not paying the remaining amount, then whatever pre-bid deposit I gave, that can be forfeited. Proper officer shall issue notice to successful bidder requiring him to make payment within 15 days of auction. Now see, goods were seized, 7 days show cause notice, next 7 days order, 15 days I have to make payment. If not, notice for auction will be given. From notice, 15 days time given to submit your bid and for auction. Now let's say here auction was conducted and I win. Now I will be given 15 days time to make payment. See, I won the auction, means I have to pay the amount to purchase those goods. I will be given 15 days time so that I can make payment and purchase these goods. So here they are saying that proper officer will give a notice to successful bidder requiring him to make payment within 15 days of auction. So from 15 days of auction, you please make payment. Again, for perishable hazardous goods, less time can be allowed. On payment of full bid amount, proper officer shall transfer the ownership to the successful bidder. Now proper officer shall cancel the process and proceed for re-auction if no bid is received. So if no bid is received or bid is like not that competitive, means we can actually get more amount than this, we can cancel this process and we can also re-auction those goods. Now if appeal filed by person, proceeding of recovery to be stayed. So if the person of whose goods I had seized, I being an officer seized goods of someone and he filed appeal against the officer saying that no, these goods are not liable for confiscation, then these recovery proceedings shall stay. So this is all about the time limit. Where goods are seized, 7 days show cause notice, next 7 days order, 15 days from order you pay the taxes. If not, then we can auction. For auction, 15 days notice given. Who wins the auction, we give 15 days time to that person to pay the amount of the auction. Right, everyone is with me, clear to all of you? This as such in paragraph form might seem a lot to you. You can simply just take 10 seconds to draw this timeline and then you will not be required to read everything. And for all time limits, if the goods are perishable or hazardous nature, means this time limit can be reduced based on the perishable nature of the goods. Yes, everyone. Done, ma'am, understood. Now disposal of proceeds of sale of goods, conveyance and movable property. So what to do from the amount that we have received from recovery? So appropriated against administrative cost of recovery process. So first of all, whatever expenses department did to recover that amount, first of all, we will use this amount to first of all appropriate against the cost of recovery. Then appropriate against the amount to be recovered. Then what was to be recovered? Then any amount due from defaulter. If any other amount was due from us, and if then any balance is left, it will be given back. So let's say they sold my goods. They sold my goods for 5 crore rupees. Now to do all of this auction and everything, 28,000 expenses they incurred. So first of all, 28,000, all the administrative costs they will recover. Then penalties and everything recoverable from me was only 1.4 crore. My goods were worth a lot more. So 1.4 recovered from whatever was payable. Then if any other amount is due from me, if any other previous amount CSIGST is due from me, let's assume it to be 1 lakh rupees. Then they will recover that also. Now whatever is left that they have excess received from the recovery, that they will give me in my e-cash ledger if I am a registered person, or they will give me in my bank account if I am an unregistered person. And if not possible to pay you this amount, even within 6 months from date of sale, in that case it will be given to Consumer Welfare Fund. Let's say you escaped. We tried to find you a lot to give this amount back, but we are not able to give you this amount. Then after 6 months, it will go to Consumer Welfare Fund. These rare cases where your goods are liable for confiscation, we have already covered. And with rare, we have one more point of conveyance, right? So rare, we see that if you're receiving supplying goods or you are not accounting liable but not taking registration, evading tax, and we also know conveyance of transporter can also be seized. So one point with respect to conveyance also. Understood, everyone? Yes or no? Yes or no, is everyone with me? So this is more or less what is important in the chapter and also section 132. Now I cannot just sit and explain, I cannot just make you remember section 132. It is something you will only have to sit and self-read. Why? Because what is section 132 saying? That for all of these offences, you can be, and if amount is exceeding this or this, what will be the penalty? So you can be imprisoned for 5 years and with fine 3 years and with fine 6 months, or with fine or both 5 years and with fine. So whatever offense you are doing here, what will be the penalty and what will be the imprisonment term is what I have given here. Exact module things I have reproduced here. So this you can just self-read once. Now if cognizable, non-bailable, we know that without warrant also you can be arrested and you will be produced before magistrate. In case of non-cognizable, bailable, less serious offense, so bail can be given based on AC or DC. Liability of officers, very much simple. Persons engaged in statistics compilation have access to or agent to common portal. Now see, they shall be punishable if they release the statistics. So here, lot of government officials have access to all the statistics, access to whatever returns we are filing. If at any time they willfully disclose the information, or contents of any return, they will also be liable to imprisonment up to 6 months or fine up to 25,000 or both. If you are a government person, then first of all we'll have to ask to government that this is a government servant and he has done this mistake. In that case, with previous sanction of government, we can get them arrested or we can levy fines on them. And if other person than government, then we will take previous sanction of commissioner. Right. Now, no court shall take cognizance of any offence under this act without previous sanction of the commissioner. So, once GST commissioner gives sanction, then only court can take cognizance of any offence in relation to GST. And no court inferior to that of magistrate of first class shall try any of such offence. So, any of the offence of GST shall not be tried by any court lower than magistrate of first class. So, at least magistrate of first class or higher court can only try all of these offences. Right. So more or less this is what is there. Compounding of offences means payment of money instead of undergoing prosecution. You do not want to go prosecution, and if it is permissible for some of these clauses specified here, let's say I have given this list, so for some of these clauses specified here, you can match those clauses. Compounding is allowed, means no prosecution will be done on you. You can just pay the amount and get yourself freed. So here they are saying minimum limit for compounding 50% of tax involved or 10,000, whichever is higher. And upper limit for compounding 150% of tax involved or 30,000, whichever is higher. Right. Now this particular case, this clarification, what is this saying? See, let's say there is a person Mr. A. Who has not done any supply but has issued a fake invoice. So I have issued a fake invoice to Mr. B so that Mr. B can take ITC, maybe I can show sales, whatever is our arrangement. I have issued a fake invoice to Mr. B, but there is no underlying supply. Now, when there is no supply, you cannot issue a notice under section 73-74. But under 122, we have seen that supply without invoice or invoice without supply, penalty under section 122 can be levied. So, if Mr. A is issuing fake invoice without supply, in that case, this is not a supply only, it is just a fake invoice case. Means section 73-74 cannot be invoked, but penalty under 122 can be levied. Now Mr. B can do two things. Either Mr. B can also make further invoice without supply. So Mr. B is also further issuing a fake invoice but not supplying. When not supplying and fake invoices means 73-74 cannot be invoked. But now under section 122, I have done two offences. One, I have issued a fake invoice without supply, and second, in order to issue this fake invoice, I utilized my fake credit from a fake invoice. I myself issued a fake invoice. I got a fake invoice from Mr. A and I utilized this wrong ITC, means fraudulent ITC, to make this supply. So for these two offences, I can be punished under section 122. Or let's say Mr. B makes an actual supply by utilizing this fake ITC. Now I have done actual supply, but for payment of this actual supply, I utilized the fake ITC that I got from this fake invoice. Now I have made an actual supply, means your 122 will not apply. Demand order under section 74 will come. By 74, because I am doing a fraud here using fake ITC to make my actual payments under GST. Chalo, quickly tell me yes or no. This clarification, very much simple it is, but can be asked. It was an amendment of May 23. Yeah, it was an amendment of May 23 if I am not wrong. And I guess it was asked also in May 23 exam, but still recent amendments are always important. So Mr. A has not made a supply but issued fake invoice, means no notice under 73-74 but penalty can be issued. Now Mr. B can do two things, either making further fake supply, then two penalty. One, issuing fake invoice, second, availing wrong ITC. But if he makes actual supply and utilizes fake ITC, then section 74 will be invoked. And as I said, once you pay penalty under 73-74, you are not required to pay penalty under 122 again. So this is all about offences and penalties. Quickly, everyone is with me. Say yes or no. Josh is high. Done. I told you to not cover the chapter, but then I thought let's just, because we have not left any single chapter in our marathon, why to leave one chapter? Done, everyone. Yes, ma'am. So now let's start with appeals and revisions. Now understand, section numbers are not important for appeals and revisions. What is important is the hierarchy. Means, from the original adjudicating authority, order, if I am aggrieved, I will go to appellate authority. If I am aggrieved by the order of original adjudicating authority, I will go to appellate authority. If I am still aggrieved from the order of appellate authority, I will go to appellate tribunal. Now, appellate tribunal has two benches. One is state bench and one is national bench. Now, national bench also has some regional benches in it and state bench has some area bench. So, I can say there are area benches under state bench and regional benches under national bench. If my issue is with respect to place of supply, so I got an order from appellate authority, I am aggrieved. I want to appeal further to appellate tribunal. If the matter is with respect to place of supply, I will directly go to the national bench. But if the matter is other than place of supply, I will go to state bench. Now, if you want to do any further appeal from national bench, you will directly go to Supreme Court. But if you want to do further appeal from state bench, you will go to High Court and then final Supreme Court. This is the hierarchy of appeals. Once again, everyone with me. The hierarchy, everyone with me. Sure. Chapter is B category. There are some small amendments in this chapter. Amendment portion A, otherwise B. So amendment portion would be A and otherwise the chapter would be B category. Sure. So if I am aggrieved by the order of adjudicating authority, I will go to appellate authority. If I am aggrieved from appellate authority, I will go to appellate tribunal. Now, appellate tribunal has two benches. One is national bench and one is state bench. If the matter is with respect to place of supply, I will directly go to national bench. If the matter is other than place of supply, I will go to state bench. Further appeal from national bench can be directly done to Supreme Court. Further appeal from state bench can be done to High Court and then further Supreme Court. Is everyone clear with the hierarchy here? Yes, ma'am, done. Sure. Now, what is there in entire chapter? Within what time period I have to go here? What pre-deposit I have to pay? All of these cases. What is important is this hierarchy. Now, section 107 talks about appeals to appellate authority. So, from adjudicating authority, first appeal I will do to appellate authority. Case A, when taxpayer is aggrieved. So, I have 3 months time plus 1 month condonation of delay in which I can go and make an appeal. Appeal is done in GST APL 01. And as soon as I file GST APL 01, a provisional acknowledgement is immediately issued. Then a certified copy of decision order I have to file. Now, there is an amendment here. What this amendment says, let's see. Earlier, the provision said that if I am aggrieved from the adjudicating authority's order, I go to appellate authority. Now I file GST APL 01. Within 7 days of filing this appeal, I am required to file a certified copy. of the order against which I am appealing within 7 days only. If I file this copy within 7 days, then my date of filing appeal would be the original date of provisional acknowledgement. But if I file this copy after 7 days, then my date of filing appeal would be whenever I am submitting this copy. But now the amendment says that this copy will not be required to file if the order issued by adjudicating authority is already uploaded on common portal. See, such certified copy has to be submitted only when decision order has been passed manually. Means it has not been uploaded on the common portal. If it is on common portal, appellate authority can access it from there. What is the need for me to go and issue that certified copy? So here they are saying where the decision order appealed against is already uploaded on the common portal, means a final acknowledgement would be directly issued at the time of provisional acknowledgement only, because now I am not required to submit this certified copy within 7 days, right? Because the decision order can be viewed by appellate authority on common portal anytime whenever they want to view. But if the order is passed manually, in that case within 7 days I will be required to file a certified copy and thereafter final acknowledgement will be issued to me. Also, while filing this application, I am required to make a mandatory pre-deposit. Now, what is the amount of pre-deposit? 100% of admitted amount. Here they have written amount. Means, let's say there was this order telling me to pay 10 lakh rupees of tax plus 50,000 interest and let's say 2 lakh penalty. I agreed on 6 lakh tax plus I agreed on 35,000 interest and I agreed on 1 lakh penalty. So whatever I have admitted that this is, yes, I am required to pay. So 6 lakh plus 35,000 plus 1 lakh. 61 lakh 35,000 entire amount I am required to pay. So whatever is the tax, interest, fees, penalty I have admitted, full 100% I have to pay. Now what I have not admitted, 4 lakh tax I have not admitted, 15,000 interest and 1 lakh penalty. Now out of things that I have not admitted, only 10% of tax in dispute I have to pay. Means forget this penalty, forget everything, only what is the tax in dispute. 10% of that tax in dispute you are required to pay. So very much simple. Mandatory pre-deposit. Mandatory pre-deposit says that whatever you are admitting, everything, tax, interest, penalty, fees, 100% you pay. You admitted, then why wait? Why to wait? Pay that amount. But anything that you have not admitted, then 10% of tax and dispute, and that to maximum 25 crore. Now this is under CGST Act. So same amount will also be there under SGST Act. Understood. Provided that when appeal is against that 129(3) that we studied, seize confiscation wala, so pay 25% of penalty before filing appeal. Right. And this is again, then this pre-deposit is refunded to you along with 6% interest. Understood. Sure. Now case B can be when department is aggrieved. Means department only wants to go and file a review application. So in this case, if commissioner on own motion or after receiving any request from CGST, SGST commissioner wants to reopen the case, wants to examine the records of any proceeding, then in that case, they can also go to appellate authority. Now here time limit would be 6 months plus 1 month. So when we are agreed, time limit is 3 months plus 1 month. But if department is agreed, want to go for review application, time limit will become 6 months plus 1 month. And obviously, no pre-deposit will be required here. Now, Rule 109C says that the appellant may withdraw appeal, means APL 01 or 03, at any time before issuance of show cause notice or order, whichever is earlier. Let's say I was aggrieved by the order of adjudicating authority. I went to appellate authority, but nothing is done. Appellate authority has not given me any order and notice, nothing is done. And before that, I want to withdraw my case. See, earlier there was no rule for withdrawal only. This is inserted now. So applicable for your attempt amendment. Now here they are saying that if I want to withdraw this anytime before any order or show cause notice being issued, here they are saying, okay, if final acknowledgement is not issued, means let's say I've just filed appeal, but final acknowledgement is not issued to me, I can withdraw anytime wherever I want. But if they have issued me a final acknowledgement, see, here when I file appeal, they issue me a final acknowledgement. So if final acknowledgement is issued, in that case also I can withdraw, but I will have to ask the authority. So where final acknowledgement has been issued, withdrawal would be subject to approval of the appellate authority. So I will just give an application to appellate authority saying that I want to withdraw my appeal, and within 7 days they will give their decision whether they will allow me to withdraw or not. Okay, and further any fresh appeal pursuant to this, you have to respect the original time limit. Means what? Let's say my original time limit to appeal against the order of adjudicating authority is 3 months. Forget extension, basic time limit 3 months. Let's say after 2 months I filed an appeal. Then 2.5 months I withdrew this appeal. I made an application that I want to withdraw this appeal. After withdrawal, if I want to file it again, after withdrawal, if I want to file the fresh application again, I can, but within this original 3 months only. So 2.5 months gone. So I have only 15 days. Within this time period only, I will have to file fresh application. Means they are not saying that once you withdraw, you do not get fresh 3 months. Within the original 3 months only, if you want to withdraw and file again, you can do, but respect the original time limit that was given to you. So again, important because it is an amendment. Now appeal process very much simple. They can permit additional grounds, opportunity of being heard and everything. Now, appellate authority cannot refer back the case to adjudicating authority. Appellate authority cannot refer back the case to adjudicating authority, but appellate tribunal can refer back the case. So one distinction here, appellate tribunal can refer back case to appellate authority also or adjudicating authority also, but appellate authority cannot refer back the case to adjudicating authority. Yes. Now they can also increase the rigor. I made an appeal saying that 4 crore are only payable, not 10 crore. They are saying no, 14 crore are payable. So they can increase the rigor also. They will always pass a speaking order. There is no time limit. There is an advisory time limit. No stat time limit, but it is advisable that within 1 year from the filing of appeal, you give an order. Right. Now section 108, power of revisional authority. What if adjudicating authority issued an order? 6 months are gone. 6 months are gone. Department did not file any appeal to appellate authority, means no review application being filed. But they still want to revise. They still want to see. So here they are saying if no appeal made by department within 6 months, they still have an option to go for revision. So here, revision of order by subordinate officers. So revisional authority can on own motion or when they've received any information or on request of CGST, SGST commissioner, they can call and examine records of any of the proceeding. Now on examination, if revision authority find that order was erroneous, order was not proper, more taxes, more penalty would have been should have been implemented or anything like that, or let's say in consequence of observation by C&AG. Now all government audits are done by C&AG. When C&AG was doing audit of this department, C&AG thought that no, see, this order is issued erroneously. In that case, all of the operations will be stayed. Means whatever operations were being carried out as per the order of adjudicating authority are going to stay. Now the revisional authority will issue a new order and then everything will now be done as per the order of revisional authority. So now revisional authority will give opportunity of being heard, will make inquiry and then pass a new order to enhance, modify or annul the decision and order. So department has this option also available. So if from the order of adjudicating authority within 6 months department has not made any appeal to appellate authority, then after 6 months but before 3 years, after 6 months but before 3 years, they can anytime carry out revision. Now revision will not be carried out if appeal is already filed. Obviously, if appeal is already filed to appellate authority, tribunal, high court, supreme court, anywhere, then no revision is possible. But understand, let's say there are two matters. I supplied two products P and Q together. I got a show cause notice. I got a show cause notice with respect to both P and Q. But ultimately, the adjudicating order was also for both P and Q, but appeal was only made for product Q. So the original order was with respect to P and Q both, but appeal was only made with respect to product Q. So here government says that with respect to product P, for which appeal was not made, revision is still possible. So they are saying if there is any matter of a particular order for which appeal was not made, in that case they are saying that for the remaining matter for which appeal is not made, revision is still possible. What will be the time limit? We have this original time limit that from original adjudicating order 3 years. And also for Q product appeal is made, right? So the appeal order of Q, 1 year from there or the original order 3 years from there, whichever is later. So I can do revision of P because P matter was not raised in appeal. P but till what? The original adjudication order, anyways we have a 3 years time limit to go for revision, that is there. But for one matter you went in appeal, right? So for that matter for which you went in appeal, 1 year from appeal order, you can just refer this example also later, you will get more better clarity. So 1 year from appeal order or 3 years from original order, whichever is later, you can do revision. But remember, before 6 months you cannot do revision because there you have to go and file appeal. And after 3 years anyways you cannot do revision. If a matter is already taken for revision at a previous time, then no revision can be done again. And whenever you are calculating this time period of 3 years or any year, always exclude the limitation period, always exclude the stay period and everything. So while calculating this limitation period, if any stay order or anything like that, exclude it. Understood. Now if I want to appeal against order of appellate authority or revisional authority. Now if I want to appeal against order of appellate authority or revisional authority, with whom I will go? I will go to appellate tribunal. Again, for department, time limit is 6 months and for assessee, time limit is 3 months plus extension of 3 months. Everything is same. You file the certified copy within 7 days, but if it is issued manually, then only. If it is uploaded on portal, then no need to furnish this copy, and all of these things remain same. That provision acknowledgement, final acknowledgement and everything. Now, here fees is also required. See, apart from pre-deposit, fees is also required. So for every 1 lakh rupees of tax amount involved, 1000 fees you will pay. So let's say if 10 lakh rupees of taxes involved, then I have to pay 10,000 as fees, but maximum it will go to 25,000. So for every 1 lakh rupees of tax involved, 1,000 rupees I have to pay, and the maximum it can go to 25,000 fees. Pre-deposit double. So when I go from adjudicating authority to appellate authority, I pay 100% of admitted, that is paid. 10% of tax and dispute, maximum 25 crore. Here they are saying 20% of tax and dispute and maximum 50 crore. And it will be refunded along with 6% per annum interest. Alright. Memorandum of cross objection. So when appeal is filed against you, let's say I filed an appeal. So the opposite party will give memorandum of cross objection within 45 days plus 45 days. Now appellate tribunal. This is less than equal to 50,000. This is not 50,000. This is less than equal to 50,000. Just correct this. So refuse appeal. So tribunal can refuse appeal if the amount is less than equal to 50,000. That whatever is decided by adjudicating authority is final. I do not want to accept this appeal. It is possible. And if the amount is less than 5 lakh, in that case, even a single member bench can listen to your case. Now, if the disputes are for place of supply, you go to the national regional bench. If other than place of supply, you go to state area bench. Okay. Now, if I want to go further from state or area bench, I will go to High Court. Now, High Court will accept the case only if there is a substantial question of law. If there is a question of fact, then case will not be accepted. Whatever is the decision of appellate tribunal will be now final. Appeal within 180 days plus extension. High Court can give as much extension as High Court wants. To be heard with at least a bench of 2 or more judges. And civil procedure code shall apply. And here now then 100% pre-deposit of everything you will have to do. Then only High Court will accept your case. Now further, if you want to go, if High Court certifies that yes, this is a fit case to go to Supreme Court, then only you can go to Supreme Court. Otherwise you cannot from High Court. But from national or regional bench, you can directly go to Supreme Court. Again, everything as per civil procedure code, as per Supreme Court. Whatever Supreme Court thinks fit, you can do. And again, 100% payment of pre-deposit. If you are still aggrieved, you cannot do anything. Supreme Court is the highest authority for you to seek justice in India. Done, ma'am. Now, rectification of error. Rectification of error says that whenever any order is issued by tribunal, in that case, within 3 months from the date of order, if it is apparent on record, tribunal can just rectify it. See, understand, they are not reviewing the entire case. They are not reviewing the entire case. No power to review. It is just that there was some mistake apparent on face. They can rectify it within 3 months from the date of order. But always opportunity has to be given if liability is getting enhanced. Done. Then authorized representative. So relative, regular employee, advocate, CA, anyone can be a representative, means anyone can go to court tribunal to represent you for the case. But if they are dismissed or removed from government service, convicted by an offense, found guilty of misconduct, or they are insolvent till insolvency continues, these people will be disqualified to act as your authorized representative. And for section 121 orders, for 4 orders under section 121, you go and fall in pits. You go and fall in pit, but we will not allow you to file appeal. So if there is an order sanctioning prosecution, if an order under section 80 installment or direct transfer of proceeding from one officer to another officer, or an order permitting to seizure of your accounts records, for these 4 orders, for these PITS pits 4 orders, you go and fall in pits, but you cannot file appeal with respect to these 4 orders. So this is all about appeals and revision. Is everyone with me? Yes, ma'am. This was a very big chapter in itself as such, but if you understand the hierarchy, the chapter will become simple for you. Adjudicating authority, you go to appellate authority, then you go to appellate tribunal. In tribunal, you have national bench, you have state bench. For state bench, you go to High Court and then Supreme Court. But for national bench, you directly go to Supreme Court. If you know this, your mind will automatically start working that, okay, from here, when I go and make appeal, I have to give pre-deposit, then 10%, 25 crore, then pre-deposit gets doubled. And all of these things automatically will start working in your brain. Yes, ma'am. Done, 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 done. Quickly give me a lot of energy. Dil dil aga, bomb everyone. Sure. Starting with advance ruling. Now, every 3-4 attempts, a question is being asked, but there are fixed areas from where they are asking questions. So, chapter as such is C category only. Sometimes it becomes B. A category never, means there will not be very much weightage from this chapter. Now, it is extremely simple. See, if you have question with respect to C trials, this is a list that you need to memorize, because if the question comes, most of the times it comes from 2 to 3 areas of this particular chapter only. So there is a list of C trials for which you can go and seek advanced ruling. Now we have authority of advanced ruling, and above it we have appellate authority of advanced ruling. So you can go and ask for advanced ruling, but not with respect to any question. Only and only the questions which are mentioned in section 97 you can go and ask questions to the authority. Now these are C trials question. These are C trials question C. One second. Huh. So if I have any doubt with respect to classification of my goods, if I have any doubt with respect to classification of my goods or time or value of supply, R says, I am confused whether I should take registration or not. I says that my ITC is admissible or not. A says that any notification is being issued by government, is it applicable on me or not? L, what will be my liability to pay in respect of certain transaction? And S says that whatever I am doing, will it result in supply? Why I need to know this? Because supply is a comprehensive taxable event. If whatever I am doing results in supply, means GST will be levied, because once supply is done, GST is being levied. So these are C trials list. C trials list only and only if I have question with respect to C trials, then only I can go and ask it to government. C trials means classification, time and value, whether I am required to take registration. I says admissibility of ITC, A says applicability of notification, L liability to pay, and S says whatever I am doing, will it become a supply? Is place of supply covered here? No. Time of supply is covered and value of supply is covered. Place of supply is not covered here. Make sure this is repetitively asked in examination, that whether place of supply related question can be asked. The answer is no. So question in relation to place of supply cannot be asked, and also any matter which you have already asked, do not ask again. So matter already pending or decided can also not be questioned. Right. Now, why we cannot ask place of supply related matter? Because authority of advanced ruling as well as appellate authority of advanced ruling, both of them are constituted under respective state act, SGST Act, and not under CGST Act. Means every authority will try to make its state place of business so that they can get the revenue, and there will always be a conflict of interest. Because of this, you cannot ask place of supply related matter. So whatever ruling they have given will only be applicable to jurisdiction of that particular state only, and government shall appoint officer, at least joint commissioner and above them, to be the members of appellate authority. Now this procedure and all not very much important. So applicant along with application and 5,000 fees under CGST, means same fees under SGST, will go to appellate authority. Appellate authority will forward my application to concerned officer and call for whatever records. Now appellate authority has my application and records given by the officer. Now either they can reject my application if the matter is already pending or raised. In that case, they'll just give me a speaking order that we are rejecting your application, or they can admit my application. If any further material, any further explanation they need, they will ask. They will give opportunity to me as well as my officer both, and within 90 days of receipt of application, extremely important, within 90 days of receipt of application, they are required to issue advance ruling, and they will give a copy to me, to my officer. Also, they'll give a copy to applicant, concerned jurisdictional officer. Now, three situations possible. Either the members of R are unable to come to a common conclusion. So both of these have some difference of opinion. Or let's say I, being an applicant, is agreed, or let's say my officer is agreed. So either of us is agreed, or there is no common decision being taken by authority of advanced ruling. Then the case will go to appellate authority of advanced ruling, because they are smarties. See, they are smarties. So R will refer the case to appellate authority, or aggrieved person can go with application and fees of 10,000 now, and application only to be filed by officer, no fees required to be filed by the department officer within 30 days plus 30. 1 second. What happened? Okay. So within 30 days of the order of authority of advance ruling and plus 30 days extension, either the applicant or the officer can go and file the appeal with the appellate authority of advance ruling. Again, they will give opportunity of being heard to both the parties and then they will issue their order. Ma'am, what if they are also not able to come to a common conclusion? Then no advance ruling can be passed in respect to that matter. If members of AAA are unable to come to a common conclusion, then deemed that no advance ruling will be given in that particular matter. If any rectification of mistake, either they have rectified the mistake on their own, or applicant has went to them, or the concerned jurisdictional officer identifies any mistake, points out any mistake in that case, rectification can be done within 6 months from the date of order. If the rectification results in reduction of ITC or enhancement of liability, obviously opportunity of being heard has to be given. Applicability of advance ruling. This is also important. One second. Okay. Yes. So applicability of advance ruling simply says that binding on applicant. So whatever advance ruling has been issued by AAR or AAAR is binding only and only on the person who made that application and the concerned officer of that particular person. Means if a person is under similar circumstances, then also he cannot use the whatever the ruling has been pronounced by the AAR or AAAR. So here they are saying not applicable to any other person who is in similar situation. Only the person who is seeking advance ruling can avail the benefit of that particular advance ruling. And for what period it will be binding, there is no specified period. Till there is a change in law or there is change in the facts of your case. If nothing is changing, the binding will continue. So no fixed time period, binding till original law, facts and circumstances change. Advance ruling can be void if at later any period, any time we got to know that you did fraud or suppression or misstatement of facts, misrepresentation of facts, your advance ruling can be considered as void and obviously you will be given opportunity of being heard. What are the powers of advance ruling authority and appellate authority of advance ruling? It is caped. Means they have the same power as of civil court, issuing commission, enforcing attendance. P, compelling production of books. Then E, examining on oath. And D, discovery and inspection. Also, proceeding deemed to be judicial proceeding and authority as well as appellate authority have the power to regulate their own procedure. If you studied NCLT under law, all of these things are covered there because NCLT is also given with all of these powers and they have the power to regulate their own proceedings. Quickly tell me yes or no. Done with advance ruling. Done with advance ruling, everyone? Yes or no? Chalo, are you all with me? We are almost there to complete GST. Now what is left? Import, export under GST, refund and miscellaneous provisions. So we are almost there. Is the Josh high and you are all with me? Quickly. Yes, ma'am. Now again, exports under GST, not very much important chapter. Import, export under GST are C category only. Very much simple. Export can be done with payment of tax also, can be done without payment of tax also. For with payment of tax, whenever you export goods or services, in that case, you make an application and you get your refund process. See, if goods are there and import export of goods is taking place, then obviously customs department is going to play a role. But for services, customs has no role to play. For services, everything is done by GST department. But for export of goods, the refund is processed by the proper officer of customs. But when you are making export without payment of tax, in that case, you want refund of your unutilized ITC. Now, in that case, customs officer cannot do anything because ITC is with respect to GST. So, here your refund is processed by GST department only. You can just self-read this because I do not find it very much important for examination point of view. Covering it in marathon would unnecessarily be wasting our time. So, simply they are saying that whatever. First, we talk about with payment, because without payment refund are covered under refunds of GST, refund under GST chapter. Here we are saying that whenever I make an export with payment of tax, means let's say I made export worth 1 lakh rupees, applicable rate was 18%. So I paid 18,000. Now this 18,000 I can pay through cash also, through credit also. That is not a limitation here. So I can pay through cash also or through credit also. Whatever I paid, I will get this 18,000 back as a refund in my bank account. But when I am doing export without payment of tax, means understand, when I make purchases, I would be paying certain taxes and availing ITC. Now, here when I'm making with payment of tax, I use my ITC to pay this, and therefore my ITC balance has also gone in, and also I get this as a refund. But when I am exporting without payment of taxes, means I do not have to pay anything. I export under bond or LUT. I will keep accumulating my ITC balance. Now in that case, I can claim refund of this unutilized ITC. Now this we are going to study under refunds under GST chapter. Here they are simply saying that whatever taxes you pay, either through cash or credit, you get as refund. Simply your shipping bill will only be your refund application. So once the goods are exported, everything is okay. The customs officer and you file your GSTR1 under GST. The details are sent to the IceGate portal of the customs. The customs officer matches your GSTR1 with your shipping bill and everything, and your refund is processed. This is all what is written here, so you all can just simply self-read it once. Now see here, exporter has to execute bond LUT when you are exporting without payment of taxes. In that case, exporter has to execute bond LUT prior to export, binding himself that if 15 days after expiry of 3 months or such further period. So here they are saying, whenever my goods are exported, or let's say whenever I am furnishing the bond LUT, see, whenever I am furnishing the bond LUT, whenever is my invoice. See, this is my invoice date. Within 3 months from here, within 3 months from the date of invoice, I am actually going to export, is what I am saying to them. So I am furnishing a bond LUT saying that within 3 months from the date of invoice, I am going to export. If I do not export within 3 months from the date of invoice, in this case, after expiry of 3 months, within 15 days, I will have to pay all of these taxes along with 18% interest. So I am binding myself to pay taxes along with 18% interest 15 days after the expiry of 3 months or such further period as may be allowed by commissioner from the date of issue of invoice for export if goods are not exported. So if the goods are not exported within 3 months, then after 15 days of 3 months, I am going to pay all of the taxes to you. But in case of export of service, we know there is one more condition, that you need to realize forex. So here they are saying that if I do not realize forex within 1 year from the date of invoice, then after expiry of 1 year, after 15 days after expiry of 1 year, I am going to pay all of the taxes along with applicable 18% interest. Understood? Chalo. So more or less this is all about that. Subcontracting is also very much simple. Now subcontracting says that, let's say there is ABC company. There is a company ABC in India. Now here I got an order from USA. I got an order to supply certain services to USA, let's say worth $2 lakh, or let's say $20,000. So worth $20,000, I was required to supply certain services export. Now what happened? I subcontracted it to someone else. Let's say there was a supplier in USA only. There was my distinct person or some other supplier. There was some other supplier in USA only. I subcontracted. I said, what you do? $5,000 worth of supply you give directly, and remaining $15,000 I will give. I have taken the entire order of $20,000 worth of supply, but I have subcontracted it to someone saying that you please give $5,000 worth of supply, remaining 15 I can give. Now to my recipient, I told that you pay 5,000 directly to that person and you pay 15,000 to me. Now the question arises here is that export. When I am exporting, there is a condition that I have to receive forex realization. Now here I have received only $15,000 because 5,000 I told him to directly pay to the subcontracted person. So export will be considered only for 15 or export will be considered for entire 20. Here government has issued a clarification saying that we will still count your export to be of $20,000 only. Now what treatment we will explain here. We will say that ABC has exported $20,000 worth of supply and has imported $5,000 worth of supply. So on exports you get all the export benefit, but on this import of $5,000 we will make you pay RCM. Because ideally, essentially, you see, I am only the one who is entitled to supply entire 20,000. It is just I subcontracted some part and I took benefit of some other company to supply that particular thing. So I have exported $20,000, but I have imported $5,000 is what will be the treatment here in case of subcontracting. Done. Then you know the difference between exempted supplies and zero rated supplies. Exempted supplies are exempted, but zero rated are considered as taxable. Means zero rated supply are not exempt supplies. Also, with respect to zero rated supplies, you get all ITCs, but with respect to exempted supplies, you do not get ITC. If you are doing only exempt supply, no need to take registration. But if you are doing zero rated supplies, you will be required to take registration. So these are the basic differences that we all understand. Import under GST, again C category chapter, saying that import as such, all of the things we have covered in some or the other chapters. Import of service, we know that place of supply of services, supplier is outside India. Now import we are talking about means supplier outside India and place of supply in India, recipient in India, means it is import. If it is for consideration, then be it business purpose, be it personal purpose. We know section 7(1)(b) says that if import of service for consideration, it is always a supply. But if it is for business purpose, you pay RCM. If it is for personal purpose, then it is exempt. It is a supply, but it is exempt. Only one exception. If I import OIDAR services, if OIDAR services are there, which are not business purpose, in that case, we know that the OIDAR service provider is required to take registration and collect and pay under forward charge mechanism. So for non-business purpose import, only OIDAR is taxable. Other than everything that is exempt. But for business purpose, it is taxable also, and recipient will be required to pay under reverse charge mechanism. Without consideration, we know that related person and in course presence of business, then supply. Otherwise, it is not a supply. Understood. Other point, if you are in 100% EOU importing certain goods, you are exempted from customs duty, IGST as well as GST compensation cess. High C sale covered under negative list, one-to-one transfer also covered under negative list. But later, when the goods reach India, today when I do high C sale, no GST. But ultimately when the goods reach India, then whoever will be the ultimate buyer clearing these goods will be required to pay GST on the last transaction value. For bond-to-bond transfer also we understand that when the goods are lying in the warehouse and I am making bond-to-bond transfer, that is exempt from GST. But ultimate buyer who is then going to clear those goods from warehouse will be required to pay custom duty also and GST also. Custom duty on the original assessable value. Let's say when the import was done, the assessable value was 10 lakh rupees. Now the goods are sold for 12 lakh rupees. Custom duty will still be paid on 10 lakh only because custom duty can be levied only till the point of importation. But GST will be levied on entire 12 lakh. So they are saying for GST, you see both of these values. Means the value under customs and the transaction value, whichever is higher. Means 12 lakh I levy GST. Customs I levy only on the original assessable value under customs in case of bond-to-bond transfer. SS unit developer, again, if goods are imported by SS unit developer, then they are exempt from IGST. OIDAR we have already covered in the chapter of place of supply, this same to same definition. So there is this test applicable, and I told you if OIDAR services supplied B2B, RCM. B2C, OIDAR service provider is required to take registration discharge liability under forward charge mechanism. And there are these two conditions for you to qualify as an OIDAR service provider. Condition number 1, delivery has to be online, and condition number 2, there is no or very much minimum human intervention. Means today if I say a PDF is emailed to you manually, means delivery is a PDF is emailed to you via online. In this case, PDF is delivered to you online. Therefore, condition A is satisfied, that delivery is through a information technology. But is there no human intervention? The answer is no. There is human intervention because a person is manually emailing the PDF. Therefore, this is not OIDAR service. But when a PDF is automatically downloaded or automatically emailed, means delivery is also through information technology and there is no human intervention also. then I consider it yes as an OIDAR service. So two conditions are there. That's delivery is mediated through information technology, and second, they are automated, means impossible without information technology, no human intervention or very less human intervention. If I satisfy all of A and B, both the test, then I can say that it is OIDAR service. Yes or no, everyone? Are we clear? Oops, sorry. Screen has gone. Sorry. I did not see. I was so engrossed in it. Sorry. What happened to the screen? I don't know. 1 second. Okay. When was the screen not visible? I can repeat it again. From when was the screen not visible? High C sale and bond to bond was clear to you? Just tell me in the comment section once. I'll repeat when the screen froze. Chalo, quickly. Page. Okay, so OID, so I think high C sale you understood, right? For high C sale and bond to bond transfer are covered under negative list of GST. So when I'm making high C sale or I'm making bond to bond transfer, no GST. But ultimately when the goods reach India after high C sale, so the ultimate buyer who has purchased these goods in high C sale will now clear the goods from customs. So this person will now be required to pay all the GSTs on the transaction value through which he has purchased these goods in the high C. But if I talk about bond to bond transfer, then in that case, customs will be levied on the original customs assessable value. Means I imported goods worth 10 lakh. I kept them in warehouse. Now I made a bond to bond transfer for 12 lakh rupees. Customs will still be levied on 10 lakh only, but GST will be levied on the original customs value or the transaction value of 12 lakh, whichever is higher. Done, ma'am. OIDAR service provider, we know. This same definition we have covered in the chapter of place of supply, saying that everything is done online, means there are two tests that you have to see. Test number 1 saying that delivery. Test number 1 saying that delivery is done online through information technology. And test number 2 is saying that it is impossible without information technology, means the human intervention. The manual intervention is either zero or there is no manual intervention, means zero or very less manual intervention. If I satisfy both of these conditions, then only I can call it as OIDAR service. If any one of the conditions is not satisfied, let's say PDF document manually emailed. Manually emailed means delivery is still done through information because I have emailed it. I have used information technology to do delivery. But a person is manually sending the PDFs, means it is not possible without human intervention. Therefore, it is not an OIDAR service. Let's say you purchase pre-recorded online lectures, means delivery done online and now no human intervention because lectures are already pre-recorded. It is OIDAR service. But if you say you purchase online lectures where you have a support from a live tutor, means it is not then possible without manual intervention. Therefore, it is not an OIDAR service. So, two tests we apply. Delivery has to be online, and second, there is no or very minimal human intervention. Both conditions satisfied, then it is OIDAR service. If this OIDAR service is provided to B2B person, then RCM applies. If NTOR, non-taxable online recipient, means B2C person, in that case, forward charge mechanism, means this OIDAR person will now have to take registration in India. If not having physical presence, appoint a representative who will take registration, and this representative or agent will be liable to do all the compliances. Who are NTOR? Any individual, any other person who is unregistered, receiving for non-business purpose, simply Netflix, Amazon Prime, all of these things, or any CGSG or local authority. If it is done through intermediary, we will make intermediary liable. Let's say Play Store. Play Store is involved in this OIDAR service, then we will make Play Store liable, intermediary liable. But if intermediary is not involved anywhere, means the invoice clearly identifies what is service, who is supplier. Also, intermediary is not involved in payment process, intermediary is not involved in delivery process, and no terms and conditions are decided by intermediary. Everything is done by supplier only. Then supplier will be liable. If intermediary anytime gets involved in payment process or authorizes delivery or let's say decides terms conditions, in that case we will make the intermediary also liable under OIDAR service providers. Say yes or no, everyone. Done? Clear? Done with me, everyone. Yes, ma'am, understood. Okay, so finally we are left with only refunds under GST and miscellaneous, which is anyways a 2 minutes topic, because miscellaneous chapter is actually miscellaneous C category. There is only one small amendment in miscellaneous chapter that we are going to see. Other than that, normally none of the teachers would ever consider taking miscellaneous as a part of marathon, but amendment here, so we will see. Then ma'am, understood. Now see, refunds will take little time because refunds is obviously a category chapter, important for exam point of view. So might like come for 4 to 5 marks or MCQ also. See, refund was asked in last attempt. Refund was asked in last attempt. So therefore, this attempt, it is still important. I would not say it is very much important. I don't know if it will be asked or not. But if it is asked, it will cover a good chunk of marks. So obviously it is for us important. We cannot take that bet or we cannot take that risk. So now covering all the formula along with question answers in refund will take a little time. So I think we should take a lunch break now. Now after lunch break, we will continue with refunds, miscellaneous and then the pending portion of customs, because valuation, warehousing and duty drawback. These three chapters, these three big chapters of customs I have already uploaded along with question answers, means not just provisions plus question answer, a 3 or 4 hour video it is, I have already uploaded for these three chapters, like all ICAI study material questions of valuation we have solved. That video is done. So only 3-4 small pending topics of customs we have to do. So let's just go on a lunch break. We'll come within 1 hour. We'll complete refunds and miscellaneous, and then next 2 hours we will wind up entire customs. So by 3:30 p.m. we will wind up today's session. Done? Okay, sure. So we will resume at 12:30. It is 11:55. Go for a 35 minutes break. Let's resume at 12:30, everyone. And you are going to come back, right? Promise me that we are not going to sleep after having lunch. We are going to come back and complete entire IDT with you. Chalo, promise me and then go on a lunch break. Yes, everyone. Back after the lunch break. Yes, ma'am. Okay, then let's start with refunds under GST. Obviously important A category chapter. Now, from this chapter, what is most important are the two formula that we're going to study. First, how to claim refund in case of export without payment of tax, and second, inverted duty tax structure. Other things are also given in the chapter which you can self-read and understand. I'll just take you for a walk for the remaining provisions, but the two formula we are going to do nicely along with example also. Yes, ma'am. Sure. So starting with refunds under GST, what is the time limit to make refund application? So first of all, applicant can be any person. Applicant can be any person who is required to do refund application within 2 years. Right. 2 years from which date? 2 years from the relevant date table that I've given here. So you're going to file your refund application in GST RFD 01. So GST RFD 01 is your refund application form. So subject to Rule 10B, which is Aadhaar authentication, you get your Aadhaar authenticated and then you apply for refund. Plus you give certain documentary evidences. Why? To prove that refund is due. So let's say I want refund for export of goods. So I will have to give my shipping bill, bill of export, etc. to prove that yes, refund is due. Also, I need to prove that there is no unjust enrichment, means refund is due to me only. I have not passed on the burden of this particular tax on someone else. So first I need to make application with documentary evidence that refund is due, plus a documentary evidence showing that refund is due to me only, there is no unjust enrichment. Now for unjust enrichment, if the amount is up to 2 lakh rupees, you can self-declare it. If it is more than 2 lakh rupees, then you need a chartered accountant certificate. Relevant date and relevant documents you can just self-read once. Now, for these cases, there is no need to prove that there is no unjust enrichment, means you can directly file the refund application. Let's say when you've paid taxes on export of goods, services, or ITC refund, means the inverted duty tax structure or the export. Now it would be evident on the bill of export and shipping bill and everything only, means there is no need to separately prove any unjust enrichment. If there is an unutilized ITC where you've supplied to SEC supplies, tax paid on advance and no invoice, means you have paid taxes on advance, issuing receipt voucher. Now subsequently you are issuing a refund voucher, you have not made any supply. Now in that case you need refund, no need to prove unjust enrichment. For wrong place of supply, C plus S was required to be paid. I paid IGST by mistake. Now I will pay C plus S, which is correct tax, and then I will claim refund of IGST. No unjust enrichment required to be proved because it is evident. I have paid the correct tax and I want refund of the incorrect tax and any other thing which is notified by government. Now, this clarification, which is an amendment for your exam, let's see it. See. Here they are saying that in cases where an unregistered person is claiming for refund. Why would an unregistered person claim for refund? Let's say we entered into a service contract where you paid me. You paid me an advance of, let's say, 7 lakh rupees. Now, for services, we know time of supply comes when, even if my date of payment is earlier. So I, being the supplier, paid taxes on this 7 lakh rupees to government. Done. Let's keep it 10 lakh so that ease of figures we can see. So for 10 lakh, let's say 18%, 1.8 lakh taxes paid by me to government. I collected 11.8 lakh from my recipient. Now, I cancelled the contract. I, being a supplier, cancelled the contract. So the recipient would want the refund of the entire amount back. I gave 10 lakh to my recipient and I did not give 1.5 lakh. Recipient asked me, why are you not giving me the remaining 1.8 lakh? I said, because this is the amount I have paid to government. Also, the last date to issue credit note has lapsed, means 30 November is gone. I cannot issue a credit note, also means government will not allow me to get this amount back or to reduce my outward liability. I have paid this amount to government. I do not have this with me. How can I return you? You go and ask it from government. So I got 10 lakh from my supplier. But this 1.5 lakh, I will have to ask as a refund from government because the time limit to issue credit note is also gone, means this person cannot issue me a GST credit note. In this case, even this unregistered recipient can go and apply for refund application. Now here they are saying what documentary evidence will be required. So first of all, your original contract, then the proof that you had paid the amount to the supplier, a proof that supplier has paid this amount to government, and he's a declaration that he is not going to ask refund of that amount from government, which the supplier will not ask refund, and also the supplier is not going to utilize that amount anywhere. Also an evidence showing that, so one payment initially that I did to my supplier, second payment that this taxable amount of 10 lakh supplier gave it back to me, a declaration by my supplier that he is not going to ask refund for the same, the original contract and the cancelled contract, all of these things as a documentary evidence I have to give to government, and the relevant date says that date of issue of letter of cancellation by the supplier will be the relevant date from where within 2 years I have to run and file a refund application. Yes ma'am, so this is all about it. UIN holders also within 2 years from the last date of quarter in which supply received, but their form is GST RFD 10. So normal application GST RFD 01. For UIN holders, it is GST RFD 10. CSD canteens, it is GST RFD 10A, and whatever 50% of total GST they get as a refund. Now understand the procedure. So once I make an application, that application is transferred to jurisdiction officer. So as soon as I make an application, ARN number is generated. Right. As soon as I make an application, ARN number is generated, application reference number, and the amount is debited in the respective ledger from where I am claiming refund. Let's say I am claiming refund from my credit ledger. Turant se, as soon as I make a refund application, my credit ledger will get debited. Or if I am claiming refund from cash ledger, my cash ledger will get debited. Now this application is transferred to jurisdictional officer to check for whether the application is complete or not. Now within 15 days from generation of ARN, if my application is complete, they will issue me an acknowledgement saying that yes, application is complete and this is your date of filing application. If my application is incomplete, in that case they are going to issue me a deficiency memo. And understand, whenever a deficiency memo is issued, you cannot make rectification in that particular application. That application will get cancelled. Now you will have to make a fresh application for refund. So issue deficiency memo, amount recredited. Because as soon as I make a refund application, amount gets debited. Now if it is rejected, the amount gets recredited. And file fresh application, and limitation period of 2 years shall exclude the time period. See, what is this limitation period thing saying? From relevant date, I have to make application within 2 years. Let's say I made application when 1 year, 11 months had passed. Now, officer said my application is incomplete and rejected my application giving a deficiency memo. Now to again file application, whatever time I wasted from filing RFD 01 to getting deficiency memo under RFD 03, this time I will get additional more after 2 years so that I can file a fresh application. Now, all this scrutiny, everything is done, verification is done, and finally if refund is admissible, they give me refund sanction order. If not admissible, they give me cancellation order. But this verification might take some time. So if I am a zero rated supplier, I am being granted with 90% provisional refund. Means whatever refund I am asking for my zero rated supplies, they are saying that within 7 days from acknowledgement after prima facie evidence, we will give you 90% provisional refund. And if we are satisfied here only that no further scrutiny is required, then we can give you full refund here also. But for once, provisionally, within 7 days, they will give you 90% refund. And after that, after completion of full verification, whatever is the final refund will be given to you. Now, refund is sanctioned under 06, RFD 06, but the payment order is given under RFD 05. Now, it may be possible that I have sanctioned my refund of, let's say, 1 lakh rupees, but there was some outstanding demand, there was some provisional refund already being given. So after reducing all of that, what is the final payment which they are going to make me? That payment order is issued under RFD 05. Understood. Now, can they withhold my refund? Can they withhold my refund? The answer is yes. So commissioner or the proper officer. See, if the refund is subject matter to an appeal, they think there should be an appeal and it will likely affect the revenue interest of the government, they can withhold my refund. Or also, proper officer, if there is any other penalty, any other amount due from me and they want to recover that amount, they can withhold my refund. But if they're satisfied that no withhold is required, they can give me back the refund along with 6% interest for the period that they had withheld my refund. Now, whatever is the original mode, let's say for example, my actual liability was 100 rupees, but I used credit of 1000 I used credit of 1000 mistakenly, and now I want this 900 rupees excess credit that I used as a refund. So government is saying here, we will give you refund, but we are not going to give it to you in the bank account. We'll give you originally in your credit account only, because people started using this as a misuse. They were using the balance in their e-credit ledger deliberately. They were using the balance in their e-credit ledger deliberately in excess so that they can claim this refund in their bank account. Therefore, government said that we will give you the refund in your original mode only. But obviously we know about the exceptions, that for inverted credit structure and all, we get refund in our bank account. Understood. Now all of these payment orders under RFD 05 are consolidated and sent to the PFMS Public Financial Management System website, which ultimately gives you the refund in your bank account. So refund credited to your bank account within 60 days. So the day when you had filed your refund application, within 60 days from there, means within 60 days of filing GST RFD 01, refund has to be given to you. If it is not given within 60 days, then as soon as 60 days expire, interest at the rate of 6% will begin. But if the refund arises from a court order, then you get interest at the rate of 9%. So after expiry of 60 days, your interest period will start. And if you erroneously take refund, then obviously demand recovery proceedings can start under section 73-74. For cash ledger, there is no limit. Means in cash ledger, you can ask for whatever amount of refund you want. Even 10 rupees you can ask for refund. But in credit ledger, no refund will be given to you below rupees 1000. If at least 1000 or more refund you want, then only you apply from credit ledger. But this limit is not going to apply for cash ledger. Anything that you have in cash ledger, you can ask for refund any time. Understood. Can I withdraw my application? Yes, by filing RFD 01W. I make application in RFD 01. If I want to withdraw, RFD 01W. Now by default, all the refunds go to Consumer Welfare Fund. By default, all the refunds go to Consumer Welfare Fund. If I prove unjust enrichment, then refund will be given to me. If I do not prove unjust enrichment, then by default, all the refunds go to Consumer Welfare Fund only. So Consumer Welfare Fund get amounts from the refunds. So all the GST amounts they get, they invest this amount. So whatever is the investment income also is credited in this Consumer Welfare Fund only. And then government constitutes a standing committee to take decisions. They take decisions and they recommend that what should be the utilization of this particular balance that we have in our Consumer Welfare Fund. Okay, now is the most important part of the chapter, which is important for exam, which is refund claim in case of zero rated supply and inverted rated structure. So refund claim in case of zero rated supply, right? Let's see. What is this, guys? Do not spam the comment section, please. If you are genuinely here to study, answer in the comment section, but do not spam the comment section. You are allowed to spam the comment section only using dil dil agak bomb bomb emojis. Other than that, do not please put all of these messages. Okay. So refund claim in case of zero rated supply. Let's understand it. So understand, I purchase a lot of things, right? I purchase a lot of things. Let's say I availed some input A, I availed some input service B, some other inputs also. Means I will accumulate my ITC. But now what I do, these are all my inputs. Now I manufacture something, or let's say as it is, I export them. So when I make zero rated supplies, that too without payment of tax. Zero rated supply, that too without payment of tax. Now in that case, I have nothing to pay on my outward supply. Means my ITC will keep getting accumulated. I want refund of this particular ITC. But it is not that I am only making zero rated supplies. I might also be making some domestic supplies. And these inputs are common for both of the things. In that case, how to get refund? So they are saying whatever is my total net ITC, where I only take input plus input services, I do not take capital goods. So no refund with respect to capital goods you get, only input and input services. But this ITC is for my total adjusted turnover. Whereas I should be getting refund only for the zero rated supplies that I have made. So zero rated supply of goods plus zero rated supply of services is what I should be getting as refund. So my net ITC, input services, but I have to make it a proportionate that this ITC is for total adjusted turnover. But I deserve refund only for zero rated supply of goods as well as zero rated supply of services. So this is how you derive the formula for refund under zero rated supply. Now let's understand every single term one by one. All the ICAI study material question answers plus one or two important past exam questions of refund under GST I have already uploaded in the question answer playlist on this channel only, and it is in 100% English. So if you find any of the question of refund to be tough, you can just go and refer to that question answer video. I will also put the link in the description of the video itself. Okay. So refund amount maximum would be turnover of zero rated supply of goods plus services upon total adjusted turnover multiplied by net ITC. Now what is turnover of zero rated supply of goods? You have to exclude the turnover of subrule 4A 4B. So 89 subrule 4A 4B turnover you are going to exclude. Other than that, whatever is your zero rated supply, you compare it with 1.5 times of the domestic value of those goods, whichever is lower. Means if I export certain goods for 200, but I normally domestically supply those goods only for 100 rupees, then maximum export price that I can take is 100 into 1.5, which is 150. So even though my actual export price is 200, but it will get restricted to 1.5 times of the domestic value, whichever is lower. This is my turnover under zero rated supply of goods, where I exclude my subrule 4A 4B turnover. Now, turnover of zero rated supply of services. Very much simple. Whatever is your total payment that you have received in a particular period, whatever is your total payment that you have received in a relevant period for which you are taking refund, that you take that payment. Plus you add whatever payment you had received earlier. You add whatever payment you had received earlier, and now you are going to supply service in this relevant period. So payment that I received in a prior period, but service is completed in relevant period, you add this. And what you will reduce from it will be all the advances that I received in the current period. See, I took all payments that I received in current period. But if there is something in relation to which service I am going to give later, so advances received in relevant period, but service I am going to give later, it is not completed yet, I will reduce this particular amount, and this will be my turnover of zero rated supply of services. So once again here, very much simple, nothing you have to do. Just you take the total payment in a particular period, reduce the payment that you have received now, but service you are going to give later, and add the payment that you have received earlier, but service you are going to give now. And this will give you the turnover of zero rated supply of services. Now net ITC. Net ITC simply says that whatever is your net ITC availed on input and input services, write capital goods and strike it off. That no ITC for capital goods will be taken, only input services, and that too other than subrule 4A 4B. Why? Because you anyways get full 100% refund for subrule 4A 4B. Now 4A 4B is deemed export. So in case of deemed export, if my recipient, see one more important thing here, in case of deemed export, if my recipient is not claiming any ITC or refund, then it is considered as a deemed export under subrule 4A 4B. Means I will get 100% refund of the same. Do not take its ITC in net ITC, and do not even take its turnover in turnover as per zero rated supply of goods. But if the question anywhere mentions that it is a deemed export under 4A 4B, but my recipient is availing ITC or refund, then in that case it will be treated just like a normal supply, and you will add its turnover as well as ITC in the calculation of refund questions. I am repeating once again, if the question says there is a 4A 4B turnover for which recipient has availed ITC, or refund, in that case it is no more a subrule 4A 4B for you. You will consider it as a normal turnover and include everything. But if they have said that no, it is a 4A 4B thing, and they have nowhere mentioned that recipient has availed ITC, then you treat it in this manner, that you do not consider its turnover here, and you do not even consider its net ITC here. And the last portion. So we saw ZRS goods, we saw ZRS services and net ITC. Now let's say total adjusted turnover. So whatever was your zero rated supply of goods, as per numerator you take it. zero rated supply of services as per numerator, you take it. Plus any non-zero rate. See, because total adjusted turnover means we're talking about the total turnover. So whatever is non-zero rated, left other than zero rated, I add it. If there is any exempt supply, I will not consider. Why? Because ITC in relation to exempt supply is blocked. So in my net ITC amount, I will not be having any ITC which is in relation to exempt supplies. Then what is the point of taking turnover of the same? So if there is any exempt supply other than zero rated supplies are anyways not exempt supplies, so they have clarified it here only. Zero rated supplies are not exempted supplies. So you are going to take zero rated supplies, but do not take any exempted supply. And also 4A, 4B turnover, we are not taking in numerator and we are not taking in denominator also. So subrule 4A, 4B turnover also you are going to exclude. This will give you total adjusted turnover. Make sure to refer the question answer video I have uploaded it on YouTube in this English videos playlist also, and in the question answer playlist also you will find 100% English only it is, so you can just practice questions from there once. Now for explanation purpose, if there is a difference between the amount mentioned in shipping bill and what amount you are mentioning in tax invoice, then whichever will be less will be taken as the zero rated supply. Now let's see. Manup supplies one type of goods overseas as well as in domestic market. Net ITC they've already given 270. So net ITC I know 270. Now I want zero rated supply. Now there is no services means only zero rated supply of goods. Services I put 0. For goods they are saying locally I normally sell it for 200. My export price is 350. But my export price can be maximum 1.5 times of my domestic supply, means I can maximum take export price as 300 only, which is 1.5 times of the domestic supply. And I have supplied 5 products domestically and 5 products internationally. Means my domestic turnover is 200 into 5,000 and my export turnover my actual export turnover is 350 into 5, 1750. But this will not be relevant for me. Why? Because I can maximum take my export turnover as 300 into 5, which is 1500 only. So my zero rated supply of goods becomes 1500. Now my total adjusted turnover. Total adjusted turnover says whatever you have taken as per numerator, that zero rated supply only you will take. And other than that, what is my non-zero rated supply? 1000. So this becomes my non-zero rated supply. So my maximum admissible refund would be 270 multiplied by 1500 upon 2500, which is 162 will be my maximum admissible refund as per zero rated supply. Yes, everyone. Done, understood. Now, then 4A, 4B, refund in case of deemed export and refund in case of merchant export, EOU and all. Here you get 100% refund. So do not consider this in this particular formula. Now let's talk about refund in case of inverted duty tax structure. What is inverted duty tax structure saying? This you will be able to understand only with an example. Let's see. So here we are saying whatever inputs I am availing. Now no input service, no capital goods, only input. For zero rated supply, input plus input service, here only and only input. So whatever input I am purchasing, let's say the rate on my inputs is 18%. Now I manufacture something from these raw materials and whatever I finally sell means the rate on my outputs. The rate on my outputs is less, let's assume 5%. Means I will keep getting accumulated ITC of 18%, but I will never be able to set off this ITC because my outward payable is at a very less percentage. In this case, I can take benefit of inverted duty tax structure, which says, what is your net ITC? Only and only of inputs. No input service, no capital goods. So what is my net ITC with respect to my inputs? But this net ITC is obviously for my total adjusted turnover. This ITC is for my total adjusted turnover. This total adjusted turnover is same as it is that we saw in the export formula. But I will get refund only for my inverted rated turnover. So I will get refund only for my inverted rated turnover. But I will not get full refund obviously because there is something. I cannot get entire 18% refund. Why? Because 5% anyways I have to pay. So I should get only the differential refund. So here they are saying minus what I will actually pay on inverted duty structure. What I will actually pay on inverted duty structure. But why to assume that this entire I will pay from 18% input only? I will also be having input services. So we are saying make it proportionate. So you multiply here with net ITC, which is only with respect to input, upon you do your total ITC with respect to input plus input service, assuming that we will use some portion from input ITC and some portion from input service ITC, and by this you derive the formula of imported rated structure. Now let's see an example. So let's say I purchase certain inputs of 100 at the rate of 12%, means 12 rupees I paid as I availed as ITC. I purchased some inputs at 200 for 5% ITC, and here also 10 rupees ITC. I availed some input services. I availed some input services of 50 rupees at the rate of 18%, means 9 rupees ITC for input services. Now my outward supply. I make outward supply of product A. I sold product A of 1000 rupees at the rate of 18%. That means 180 is outward payable, and I sold 500 worth of product B. I sold 500 worth of product B at, let's say, 5%. So in that case, 500 into 5% will be 250 rupees is my total payable. Now in this case, I want you to calculate what will be my refund under inverted rated structure. Now see, what is my net ITC? So first of all, we know for net ITC, we only consider input and we do not consider input services. Means my net ITC will only be 12 plus 10, which is 22. So my net ITC will be 10 plus 12, 22. But this is total ITC. I will get refund only for inverted rated. So what is my total turnover? 1500. So this ITC is with respect to my total turnover, which is 1500. But I should get refund only for inverted rated structure. Now what is inverted rated? See, my inputs are taxable at 12 and 18. At 12 and 5. My inputs are taxable at 12 and 5. Okay, let's do this ways. It is fine this ways also, but to make example more better, I can take 18 here and I can take 12 here. So 120 and 18. Okay. So my total inputs are 28. Total inputs are 28, but it is for 1500 of turnover. Now my outward supply is taxable at 12 and 5. 12 and 5, but my inward is 18 and 5, which means this is not inverted rated. B is not inverted rated because B's percentage is less than the, B is inverted rated, A is not inverted rated because A's percentage is anyways more than, the question was appropriate only, which is fine. So A's percentage is 12%. Let's get back to the original question only. The question can be solved either ways, but I'm making it simple for you. Okay. So I am selling for 12 and 5, but I am purchasing for 18 and 5. Means what will be inverted rated? Only and only B, because the rate of B is less than this, the rate of A. What happened? One second. Cannot see it here. Give me a thumbs up, everyone, once. Yeah, it is fine, I guess so. Okay, it is fine. So let's continue with the question that we were doing. So my total ITC would be, let's keep the question as our original question only, which was 22 here. This was 10, 200 at 5%, yes. And this I had taken at 18%, which is 180. Okay, so my total ITC, it is recording, yes, okay, done. Chal. So my total ITC was 12 plus 10, which is 22. Now multiply by what is my total turnover? 1500. But what is my inverted rated turnover? So my rate of inputs are 12 or 5. But my rate of outputs are 5 or 18. Now 12 is greater than 5 as well as 18. But 5 is less than this. So my rate of input has to be higher as compared to my rate of output. So if I say 18 is anyways higher than my input rates. So 18 cannot be considered as my inverted rated turnover, but 5 can be considered as my inverted rated turnover, right? 5 can be considered. Now see, even if I keep 12 here, still only 5 will be considered as my inverted rated turnover. If I make it 18 or I make it 12, it will not make a difference. Why? Because even if it is the same rate, then also it is not inverted. Only 5 is less than 12 or 18. And therefore, even if you have 5 or 5 same here, you will not consider that, but you have one rate which is greater. I have one rate which is greater than my outward rate of 5, then I will consider this as my inverted rated turnover. So my inverted rated turnover here is 500. Understood, ma'am? Now minus what I actually have to pay on my inverted rated turnover. So I have to pay 250 actually. But why will I assume that this entire 250 is required to be paid out of this 22 only? Means why have I to assume that this entire 250 will require to be paid out of my input only? So here I will assume that what is my total net ITC? Okay, so what is my total net ITC? It is 220, and upon input plus input services. So upon input plus input services will give me 120 plus 100 plus 90. It will give me 120 plus 100 plus 90. Means upon 310. Now see, if we solve this, so 220 multiplied by 500, the answer will come into negative because obviously we've taken more outward payable as compared to inward. But this is how we solve it. Okay. With respect to figures, I have made this error here. The answer will go into negative because I have to reduce more amount as compared to this. So whatever is the answer here, we understood the concept as such. If you want to take one more example, I can take. Okay. I think we should be taking one more example here for better clarity because I messed up with the numbers. Okay. So let's talk about inputs here. So I purchased 1000 rupees of inputs. At, let's say, 18% rate. Means 180 is my outward payable. Okay, 180 is my outward payable. It will go into negative because our sales is higher than inputs. Then obviously, what is the point of claiming refund here? I will take another numbers and another example. Okay, I purchased 100 rupees of inputs at the rate of, let's say, 12%. So here 12 is my outward payable, or let's take it 2000 and make it 240. Okay, I also availed certain input services worth 500 at the rate of 18%, giving me 90 here. Let's take capital goods also and understand what will be the final effect of capital goods. So here capital goods I purchased worth 10,000 at the rate of 28%, which will give me 2,800 as my total ITC. Now let's talk about sales. Okay, so I made sales worth 500. okay, let's not take same figures. I made sales worth, let's say, 400 at the rate of 5%. So 400 at the rate of 5% will give us 20 rupees. I also made sales worth 380 at the rate of 12%. I also made sales at 380 at the rate of 12%, which will give me 45.6. Okay, so these are my purchases and sales. Now understand what will be my net ITC. So my net ITC here will be 180 plus 240. So net ITC here will be 180 plus 240, which gives me 420. But this 420 is for my total turnover. My 420 is for my total turnover, which is 400 plus 380. 400 plus 380, which is 780. But what is my inverted turnover? See, understand. My rate of inputs are 18 and 12. My rate of inputs are 18 and 12, whereas my rate of output are only 5 and 12. Means, can I consider 5 and 12 both to be lower than 18? 5 and 12 both to be lower than 18? Yes. Means it is entire inverted rated supply. It is entire inverted rated supply. Now here, if I add one more sales, let's say I also made a sales of 100 at the rate of 28%, means here. So now I can say that my total sales is 880, but out of this, what is inverted? Only and only 5 and 12, because 28 is more than the rates I am paying on my input. So my inverted rated turnover will only be 400 plus 380, right? Yes. But now, why to assume that entire payable will be from input only? So I will assume that my payable will be apportioned between input services. So what I have to pay on my inverted rated turnover? So I have to pay 20 plus 45.6. I have to pay 20 plus 45.6, which is 65.6. But this 65.6 I am not paying entirely from 420. I will be paying it from 420 upon 420 plus 90, which is input plus input services, 510. Now this will give me the answer, which comes to 65.6 multiplied by 420 upon 510, means minus 54.0235, and here I will do 400 plus 380 upon 880 multiplied by 420, which gives me, again it is coming negative. What mistake I am doing? 1 second. So 420 multiplied by 400 plus 380 and divided by 880. Yes. So it is 372.27 minus 54.0235. So it gives me 318.25. Now 318.25 is my maximum refund that is admissible. So very much simple. When your output rates are lower than your input rates, when your output rates are lower than your input rates, you consider only those turnover as your inverted rated turnover. Apportion it with your total turnover and multiply it with your net ITC. Means this is the ITC attributable to your inverted turnover. But when you reduce, what you actually have to pay, that I have to pay, that I will reduce. But why to assume that this actual payment will be 100% from inputs only? I can obviously apportion it between input and input services. So this will be my maximum refund admissible under GST. Sorry for the previous example. If you want to note down this example, you can. But I have already shared a better example on my Telegram channel, so you can download it from the files section there if you wish to. Okay. Now let's get back to notes. Now this is the new formula which is applicable after 5 July 2022. This is the new formula applicable after 5 July 2022. Till 5 July the formula ended here only. Means we were not apportioning. this with net ITC and input services. The formula used to end here only, but after amendment applicable from 5 July 2022, now we apportion this amount payable from net ITC also. Understood. And your net ITC will only include inputs, not input services, not capital goods, and it will be other than sub-rule 4A and 4B. So this is all what is important in the chapter of refunds under GST. Now we understand that this formula answer will also not be the final answer. You compare it with, so whatever you got as per formula, you compare it with the credit ledger balance that you have at the time of filing the application. So balance in e-credit ledger that I have at the time of filing application, also I will compare it with the balance that I have after the period for which I am filing application. Means let's say if I am filing refund application for Jan Feb March quarter, means after filing my return of March month, what was my balance in GSTR 3B that I will take. So the period for which I am filing application, after filing 3B of that particular period, what balance I am having in e-credit ledger that I will take, I will compare it with the balance that I have at the time of filing refund application, and I will compare it with the formula. And lowest of all three figures will be taken as the final refund amount in case of inverted rated structure and zero rated supplies also. Then what will be the manner of debit? Now see, if my total refund is, let's say, 500 rupees, I have IGST balance as 300, I have CGST balance as 80, and I have SGST balance as 120. How am I going to get the refund of 500? They are saying first of all you get entire IGST. So first of all entire IGST I will get. I need 200 more. Now, as far as possible, try taking equal amount from C and S. So they are saying take equal amount. After you exhaust I, take equal amount from C and S. Now C I have only 80. Means from 200 I can take 80 from C and 80 from S. I can take 80 from C and 80 from S, means I got 160. I need 40 more. Now this 40 I can take from SGST. This 40 I can take from SGST. So here they are saying, first of all, you take entire refund from IGST. Then for remaining amount, as far as possible, take it equal from C and S. Let's say here I had 180 and 220. Then what I would do, I would directly take 100 from C and 100 from S, because it is possible to take equal. But this is only 80 and not 180, means I cannot take equal from both. So I can take up to 80 equal, yes. So from 200 I will take 80 equal from C and S, and then remaining 40 I will take from this 220 of SGST. This is the manner in which refund is given to you from the credit ledgers. Done. Other points and clarifications you can self-read. Nothing much in that. Okay, sure. Now let's come to miscellaneous provisions, the final chapter under GST. Again, the chapter is C category. Only one topic I will make you do here, which is anti-profiteering measure. So this is important because of this amendment. Otherwise, entire chapter is C category. It basically explains you who are the officers under GST, what are the modes to serve notice, or what is the rounding off done in GST. Like in income tax, you round off to nearest 10. But in GST, you round off the figures to nearest 1. So all of these basic things are given in this chapter. But what is important is anti-profiteering measure. Now, what is the meaning of anti-profiteering here? What is the meaning of anti-profiteering here? So the meaning of anti-profiteering simply says that, understand, let's say there is a coffee being sold for 228. A coffee is being sold for, let's say, 250. I went to the coffee shop owner saying that, why are you selling so expensive coffee? He said, my base price for the coffee is only 195 rupees. Now government is levying 28% GST on coffee. What can I do? So therefore, adding 28% to 195 makes it 250. Okay. Then a lot of people had this problem saying coffee is a very much basic necessity. How can you levy 28%? This is just a hypothetical example. So government came out with a notification reducing the rate of coffee from 28 to 12%. So in this case, now what should be my revised price of coffee? 195, which is the base price, right? And if I do 195 into 12%, it comes to 23. Means the now the revised price of the coffee should be 218 rupees only. but still the coffee shop owner is selling it for 250. Coffee shop owner thought that government keeps bringing such notifications. Common public never knows about the GST notifications coming. They are used to paying 250 rupees. My customers are used to paying 250 rupees. Let me do one thing. Let me increase my base price. So what this person did, he did back calculation. 250. He did back calculation. 250 divided by 112 percentage. He said now my basic price of the coffee is 223 rupees. Plus I will charge 12% GST and I will still continue charging 250 from my customer. Now this is, if you see, not actually correct in moral terms. If government had ever increased rate, let's say government increases rate from 18 to 28, you will charge more from your customer. But if government is reducing rate, you are not passing on the benefit to your ultimate customers. Government did not bring this rate down to give you more profit. Government brought this rate down so that ultimate customers could get the product at a lower rate. So here government is saying that if you increase your base prices, you increase your profit and do not pass on the benefit of the reduced tax to your customers, we call it as profiteering. We call it as profiteering, and to counter this profiteering, we have anti-profiteering measures, saying that section 171 makes it mandatory that if there is any reduction in the rate of tax or benefit is given, you have to pass on that benefit to your ultimate recipient by reducing the prices. If you do not do so, in that case, we can take actions against you. Okay, what is the amendment, ma'am? The amendment is for earlier, for all these anti-profiteering things, the matters were handled by National Anti-Profiteering Authority. So it would be National Anti-Profiteering Authority looking after all of the anti-profiteering measures. But now, with effect from 1st December 2022. With effect from 1st December 2022, National Anti-Profiteering Authority is replaced by Competition Commission of India. National Anti-Profiteering Authority is replaced by Competition Commission of India, CCI, which means from 1st December 2022 and onwards, all of the anti-profiteering cases will be handled by Competition Commission of India. One more amendment. Earlier they used to call duties of the authority. Now this word is striked off and they say these are not the duties, but these are the functions of authority. This can come in exam for 4 to 5 marks. That last question 6, no, we have question 6C theory question. In that this can come, which is asking functions of authority. Means what are the functions that Competition Commission of India is going to carry out? Very much simple. They will determine whether the reduction, the benefit has been passed on to ultimate customer or not. You identify those taxpayers who are not passing the benefit to the ultimate customer. You order them to reduce prices. You order them to give that amount back. You impose penalty on them. You cancel their registration, and also by 10th of the month, means for every quarter, for Jan, Feb, March quarter, till 10th April, you also give a performance report that what did you do for this entire quarter. These are your functions. They were earlier using the word duty, which is now replaced by the word function of the authority. Now, what orders authority can pass? Obviously, authority can tell you to reduce your prices. Authority can tell you to give that amount back to the ultimate recipient. Authority can tell you to give that amount to consumer welfare fund. Authority can levy penalties on you. Authority can cancel your registration. All of these are the powers with Competition Commission of India that they can levy on you. Alright, so first of all, the application goes to State Screening Committee. If it is intrastate supply related matter, if it is interstate, it goes to Standing Committee. If you mistakenly go to State Committee, they will refer you to the Standing Committee if it is a matter of interstate supply. Now they will take 2 months plus 1 month time to just see the prima facie evidences that okay, does it even appear like anti-profiteering? If yes, then it goes to Director General of Anti-Profiteering. So now the Director General of Anti-Profiteering is going to do further investigation whether profiteering is there or no. And now if it is final profiteering is there, and then ultimately the National Anti-Profiteering Authority, which is replaced by Competition Commission of India, will now exactly determine that what quantum of profiteering is there and what reduction in price should be there. Now what you are required to actually do. This final decision will be taken by Competition Commission of India. Also, 10% of such profited amount will be your penalty if you do not deposit within 30 days of passing the order. So when Competition Commission of India passes an order saying that this is the amount that you have profiteered, you please give this amount back. If you do not give within 30 days, then an additional penalty will also be levied on you, and that penalty would be 10% of whatever amount you have profiteered. Is it clear? Yes or no? Done, everyone? So this is all about GST, Goods and Services Tax. We started yesterday right from GST in India and introduction, and without skipping any particular chapter. If some chapters are less important or we had less time constraint going by the marathon time limitation, we have still tried to cover all of the important sections and provisions which are relevant for your examination point of view. So yesterday's marathon was 8 hours including 40 to 45 minutes break, and today 5 hours including our 40 minutes lunch break that we had. So 8 plus 5, 13 minus 1 to 1.5 hour break, which means somewhere approximately in 11.5 hours, we have completed entire GST right from introduction section 7 till last section 171 anti-profiteering. Do you all feel confident? Say yes or no. Do you all feel confident? Say yes or no that it is possible to wind up entire GST, every single provision. In that I have also made you do multiple revisions for section numbers. Yes ma'am, quickly give me some dil aga bomb emojis, a lot of energy in the comment section, and then we shall start with customs. Yes ma'am. Done. We also did a small revision for all the sections that we completed yesterday at the beginning of today's marathon. And today's section numbers are anyways not very much important, that I've told you earlier also. You just need to know the provisions. Section numbers are fine even if you don't remember for the later on chapters that we did today. Done ma'am. Okay, so now let's start with customs. The weightage, if you are appearing for November 23, I'm talking about November 23 only, May 24 weightages have changed. So for November 23, 75% paper is GST and 25% paper is customs plus FTP. This 75 portion we have completed. Now talking about 25, which is custom and FTP. Again, in turn, 20 marks is for customs and 5 marks approximately are for FTP. Now sometimes 1 or 2 mark, 1 mark MCQ is also being asked. So this becomes, let's say, somewhere between 4, 5, 6, 7 marks. It can range, but not more than that. So 6 is the maximum weightage given to FTP. So now we know that 20 marks customs will come. Now including optional, it can go to 25. I am talking about 100 marks paper, but the paper comes for 114 marks, right? Because one question is optional. So going by that optional question also, 25 would become customs, but talking from 100 point of view. From this 20 also, 5 marks paper comes from valuation. So it has been a trend since years and years of attempt, and they've not skipped on this trend any time, that 5 marks question is asked from valuation under customs. Now whatever is remaining, whatever entire customs is remaining means for 15 marks you are studying everything. Understand? 279 pages you have studied for 75 marks. 279 pages you have studied for 75 marks. Now leave FTP and leave valuation. Remaining everything, remaining 100 pages you are studying only for 15 marks. So you need to understand. That what is important and what is not. Also in this 15 also we see a kind of trend that one question is always either from baggage. There is normally a question from baggage or from duty drawback, or we also have a question from So we have a question from baggage, duty drawback or warehousing. So from this also you get a question. So what is left here? We are only left with the import-export procedure or the case laws under custom or chapter 1. Then we have a chapter of classification, types of duty or refund under customs. So all of these other chapters cumulatively carry only a weightage of approximately 10 marks only. So you have to be very much smart when you are revising customs, that you need to know. More of your focus should be on question answer and not on theory. Because remembering theory in customs will not yield you much benefit, because from this 20, hardly sometimes 3, 4, 5 marks they ask a theory which is not a regular theory being asked in questions. So but this 5 marks is all of that effort that you are giving. Otherwise, you can easily score. You can easily score 20 plus out of 25 if you have practiced good number of questions in customs and you've just gone through the revisions once. So it is easily possible. It is easily possible to follow question answer approach in customs. Practice a lot of questions so that you gain that edge over questions and you can simply attempt paper in a very good manner. For GST, you need to remember provisions. You need to know how to write the provisions. You need to know the linking. You need to solve the questions. Customs part, when you come, your preparation strategy might deviate from the regular strategy that you follow under GST. Sure. Now let's start with chapter 1, which is levy and exemption from customs duty. Now very much simple. The Customs Act 1962 ranges to whole of India, means every single state, entire India is covered under Customs Act 1962. Okay. Now it is covered under list 1. So we know the 7th schedule of article, which has union list, state list, concurrent list. Now customs is covered in the list 1, which is union list, means the power to make laws with respect to customs, to collect customs, everything is with parliament, is with union, is with central government. Now we have Customs Act, we have Customs Tariff Act, and rules issued by central government, regulations issued by CBIC. Is everything on our syllabus? The answer is no. Only and only the bits and parts which ICAI thinks is applicable for us are only in our syllabus. So entire Customs Act, entire Customs Tariff Act is not in our syllabus. Okay. Definitions not very much important for exam. Just once you have to read. You do not even have to remember the definitions as we did in GST. Now talking about levy and exemption. Now charging section says that customs is levied at whatever rates are given in the Customs Tariff Act. So for the HSN code, for every HSN code, there is a rate for import, there is a rate for export given in the Customs Tariff Act 1975. Now understand what is the taxable event for customs. The taxable event for customs is import or export of goods. Means no services are covered for customs. No services are covered for customs if you import or export goods. If you import goods into India or you export goods from India, only then customs is being levied. So goods imported or exported is the taxable event under custom, is what we can say. Again, custom duty are not levied on a person. They are levied on these goods which are being imported or exported. So here the taxable event is import-export of goods. The charge of customs is on the goods and not on the person who is importing them or who is paying duty. Now if I talk about taxable event, now understand, if I import something, I have two options with me. So when the goods come to India, either I can directly clear them for home consumption, pay my duties, or I can deposit these goods into customs bonded warehouse without payment of duty, and ultimately I can clear my goods from this warehouse paying the duties later on. So when I deposit the goods into customs warehouse, I file an into bond bill of entry, and when I take the goods out of this warehouse, I file an ex bond bill of entry. Right, ma'am? Understood. So talking about taxable event, we say whenever goods are cleared for home consumption directly, the goods reach the customs barrier. When I file my bill of entry for home consumption, I clear my goods. That is the taxable event. But in case of warehousing, filing into bond bill of entry is not taxable event. Ultimately, when I pay my taxes and take my goods out of the warehouse, means filing ex bond bill of entry. Filing ex bond bill of entry is treated as my taxable event. So when goods are sought to be taken out of the customs warehouse, when I take my goods out of the customs warehouse, file my ex bond bill of entry, that is my taxable event. And for export, it is very much simple. As soon as the goods cross the territorial waters of India, we consider export has happened. So when goods cross the territorial waters of India, export has simply happened. Now come to last page of the book, where I have given a list of case laws. Ekdam last, page number 350, whatever, I guess it is 360 or something. Page number 355. So customs important case laws I have given. These are the case laws relevant for chapter number 1. So whenever you try solving the question bank of chapter 1. Make sure to first go through these case laws. I've given all of these in a summary format here. Now, garden silk mills. Garden silk mills talks about when goods are cleared for home consumption directly. Import will start. As soon as the goods reach territorial waters of India, import will start. Now the vessel will come to the customs station. Then I file my bill of entry, clear my goods for home consumption. At that point of time, import ends. So my taxable event will continue for this entire period. When the goods have crossed territorial waters of India, they're coming to customs station and I'm filing bill of entry. So when goods cleared for home consumption, import commences when goods cross territorial waters of India. But it completes when goods reach the customs barrier and bill of entry is filed. It is known as taxable event. Then Kiran Spinning Mills says that in case of goods cleared for warehousing, taxable event would be the ex-bond bill of entry. Abunlight Chilies Offshore says that if goods are imported on some oil rigs in EEZ, see, I told you this is India, territorial waters of India, and then we have exclusive economic zone. Certain designated areas where oil exploration, etc. are carried out are also India. So if I import something in this exclusive economic zone oil rigs, that will also be considered as import in India, and import duty will have to be paid on same also. So if goods are imported on oil rigs situated on exclusive economic zone, which is deemed to be part of India, it will attract import duty. Mangalore Refinery Petrochemical says that whenever I import some crude oil or any such resources which evaporate during transit, in this case, when my exporter has exported, his bill of lading would be showing some different quantity. But while the goods are in transit, few goods would have evaporated. In that case, I receive a lesser quantity. I will pay duty on whatever I have received. Whatever I have received, I will pay duty on the same and not on the quantity which is showed by the exporter in the bill of lading. Bharat Surfactants Private Limited says that we will consider the date of final entry of the ship to be relevant. Let's say this is territorial waters of India. A ship came here, but there was no place for the ship to berth. In that case, ship went back, ship came back. So whatever will be the final entry, date, that will be relevant for my import duties valuation. Rajkumar Knitting Mills Private Limited says that date of importation is relevant and not the date of contract. Means whenever you are importing the goods, that date is relevant. Contract you would have entered any time, that is never relevant for us. So whatever duties, whatever applicable at the time of contract, not relevant. At everything at and place of time of importation will be relevant. Then Sun Industries and Rajendra Dyeing Mills together say, this is India, territorial waters of India. Now, a ship left the customs station. While it was still in territorial waters of India, it sank. Case number A. And case number B, this is territorial waters of India. A ship was here. It crossed the territorial waters of India, but then there was some damage in the ship. So the ship returned back. To the customs station. Case number 2. Tell me if ever any export duty is to be levied on these particular goods, in what case export duty will be levied? Case number A or case number B? Means when I will say that export has happened, in point number 1 or in point number 2, when export has happened or export has not happened in both of the cases. Quickly give me answer, everyone. Yes. So when the vessel has crossed the territorial waters of India and it returns due to damages, still I will say export has happened, because once this ship has crossed the territorial waters of India, taxable event only says that as soon as the vessel crosses the territorial waters of India, export has happened. But here the vessel just left the customs port, it is still in territorial waters of India and it sank here, then I will say export has not happened. Right. After that, Associated Cement Companies Limited. Associated Cement Companies Limited says that if any design or any drawing, technical manual, anything that you have imported, we consider them as goods. Means do not think of it as supply and do not levy duty. No, they are goods and we are going to levy import duty on the same. Tirupati Udyog Limited says that supply from domestic tariff area to SEZ unit is kind of a deemed export, right? We get a lot of benefits there. But if any export duty is levied, if I say if you export this calculator, we are going to levy export duties on you. But if you send this calculator from DTA to SEZ, no export duty will be levied, because we, as per definition of export, we say if goods cross territorial waters of India, then only export has happened. So DTA to SEZ, no export duty will be levied. Now, Hanil Era Textile Limited says that there was no restrictive clause in the notification and no violation with respect to surplus electricity. Now, what had happened in case of Hanil Era? They had imported certain machinery for generation of electricity. That electricity was to be used for captive consumption of certain goods that were to be exported. They generated electricity, they exported their goods. So whatever was their obligation, they fulfilled. Then they were left with some surplus electricity. Now what to do of this surplus electricity? So they sold it in the domestic tariff area. Now government said here that whatever benefits we had given you on the import of capital goods, we will take away your benefits back. Here the case law said that in the notification there was not any restrictive clause. Nowhere it was mentioned that if there is any surplus electricity, what to do? You cannot store it, so you sold it. So there was no restrictive clause for selling electricity after you have completed all of your export obligation, and therefore you cannot deny Hanil Era to take benefits, and here Hanil Era won the case law. So there was no restrictive clause in notification. Hence, there is no violation by Hanil Era with respect to any surplus electricity sold in DTA after it was used for the specified purpose for which it was required to be used. Okay. BPL display devices says that benefit of notification cannot be denied in respect of goods which are intended to be used but cannot be used. Now here BPL had imported certain materials to make a television, and it was this condition that if you make this television, then only we will exempt your import duties on these materials that you've imported. Now what happened? I wanted to use this material, but while the screen or something was coming, it got leaked or it got cracked. Now my raw material are damaged. I want to use it to make it, but I cannot use it because they are damaged. In that case, you cannot deny me the exemption benefit. So here my intention is to use them. My intention is to use it for the materials, but I cannot use them. In that case, due to shortage or leakage, you cannot deny me with the benefits. And Tulo India Operations Limited says that importers' claim for exemption cannot be rejected owing to non-compliance of a condition which is not in his hands. Let's say I imported certain goods. Now government gave me exemption. Government said that okay, you do not pay any import duty on these particular goods. It is fine, but with a precondition saying that you will have to get an eligibility certificate from government. So from some of the government department. Now I applied for that eligibility certificate to government, but government delayed it. So I applied within the time that was permitted. Government department took 3-4 additional months or days or years, whatever it is, to give me this eligibility certificate. Now my claim for exemption cannot be rejected because government department can take as much amount of time as they want. It is not in my hand. I cannot do anything. So government department did not issue certificate on time. It is not in importer's hand. Importer's hand was to only make application that I made on time, means you will have to allow me the benefit of the notification. So these are all the case laws relevant for the question answers of chapter number 1, and it might also show up in examination. So make sure you've done it nicely. If you do not remember the name of the case law, it is completely fine. No need to remember that. But at least you should know what is written in the case law. Means you should know the provisions of the case law. Remembering the content of the case law as such. Remembering the content is important, not remembering the name. Okay. Now come to import procedure and export procedure. Quickly come to import procedure and export procedure. Okay, so here we come to importation and exportation of goods. As such, not very much important. I'll just quickly take you through the entire procedure. So first of all, they are saying in case of import procedure. And this is only relevant for exam point of view because normally export procedure is not asked and it is similar to import procedure only. Just everything is reverse. Like we have entry inward in import, we have entry outward in export. So all of these cases are same only as such. Okay. So they are saying, if you want to come to India, do come, we do not have any problem, but come to customs airport or port only. So the aircraft or the vessel will be allowed to come to India only and only at customs designated port or airport only. If you come at any other place, we will think that you are trying to illegally enter into India. So contravention of this provision will be a presumption that person in charge has an intention to illegally come to India. Okay, but what if, ma'am, there is some emergency, some accident, or there is some a kind of damage in the aircraft or vessel or weather stress? So in all of these emergency cases, it is okay, you can come to any port or airport, but you will have this obligation to inform the nearest officer that we have come to this airport or port due to this emergency condition. Also, you will not allow the passengers or the goods to unload and leave the vicinity. See, understand, if there is a fire in the aircraft, then obviously we all have to run. But if everything is okay, just one person on the crew on the aircraft had some heart attack, due to which we landed. Now the other passengers can be seated in the aircraft only, the goods can also stay in the aircraft. So do not allow, without any reason, do not allow the goods to unload or passengers to leave the vicinity of the aircraft unless it is necessary for safety reasons. And third, whatever the officer tells you, means you come and you inform the nearest customs officer or the police officer that we've come due to this reason to this port airport. Now whatever that officer gives you directions, you will have to comply with those directions. Now before coming in case of aircraft vessel, anytime prior to coming electronically, and if you are coming via land, then in case of 12 hours within coming to the land customs station, you are going to give arrival manifest, import manifest or import report. Means what goods you are bringing, so all the details with respect to the goods, that you are bringing, you will have to declare in this import manifest, import report as we call it. And only the goods that you are mentioning here will be allowed to be unloaded. Any goods that you have not mentioned in your import report, we will not allow you to unload those goods in India as a part of import. And also, if you want to make an amendment, you can make, but amendment will be allowed only if the officer is satisfied that there is no fraudulent intention. It is okay, means you mistakenly missed on something to mention in that report, it is okay, we will allow you to amend it. If you are not giving this import manifest on time or everything, penalty can be levied up to 50,000 rupees. As we have import manifest for goods, we also have it for passengers. So arrival manifest, import manifest or import report under section 30A says that what passengers or crew members are in that particular aircraft or vessel, you give information about it to proper officer. Again, only those passengers can come, and penalty can be up to 50,000 if you are not complying with the provisions. Then let's talk about entry inwards. Now entry inwards is applicable only and only in the case of vessel. Means if you are coming from land route or if you are coming from aircraft, entry inwards is not applicable. So you just write vessel here and circle it 100 times that this provision only applicable for vessel, not by aircraft or vehicle. So if you are coming from vessel via sea route, then entry inwards will be applicable to you, which means whenever you are filing your arrival manifest, import report, with that only you make an application for entry inwards. After the officer gives you entry inward, then only you can bring your ship here. See, giving of entry inward means officer is saying that yes, we are ready for your ship to come, we have place at the port. If the officer is not giving entry inward, the ship will wait outside the port, it cannot come to the customs port. So the goods on a vessel shall not be unloaded until order has been given granting entry inwards. Giving of entry inward means acknowledgement that yes, customs is ready to supervise your unloading. Now, once we allow you to unload, doesn't mean entire port is yours. Only and only at the designated places that proper officer tell you, you can unload your goods. So loading and unloading will be only at places approved. Entire customs port does not belong to you. Then the goods will be loaded or unloaded only in the supervision of customs officer. If the customs officer is supervising the unloading, then only you can do the unloading. Otherwise, you will have to wait for the officer to come. Then restriction on goods being waterborne. Let's say my vessel is too big. My port is not having a dock only which can berth my vessel, it is so big, or this vessel has some hazardous goods that we do not want this vessel to come to our port. In that case, we use small vessels or small boats. We use small vessels or small boats and we put the goods from port in vessel and take them to ship, or we put the goods from ship to vessel and take them to port. So here they are saying that no goods shall be waterborne. Means you will not put your goods in these small vessels unless they are accompanied with a boat note. So you need to issue a boat note and the goods shall accompany, the boat note shall accompany the goods, and then only you can use these small vessels to transport goods from port to ship or ship to port. Other controls, officer can no loading unloading on holidays, but if you still want to do, you can pay merchant overtime fees and get your goods unloaded. Then proper officer can at any time board your conveyance, check all the things that are in your conveyance. He can also ask for explanations and you will have to furnish all of the explanations. Okay. Then as till the goods are not cleared, they lie in the custody of custodian. Till the goods are not cleared, they lie in the custody of custodian. Now understand for port trust and other custodian. If port trust is your custodian, and goods are pilfered, in that case, you can ask for value of your goods. You being an importer can ask for value of your goods from port trust because port trust acts as a bailey. Port trust acts as a bailey for your goods. But department cannot demand duty on these pilfered goods from port trust. But if there is some other custodian and not port trust, in that case, department can demand duty. But you cannot demand the value of your goods because other custodians do not act as the bailey of your goods. So you can just write this small difference between here, that port trust you can ask value, department can't ask for duty. For other custodians, department can ask for duty on pilfered goods, but you cannot ask for the value of the goods that have been pilfered. Yes, ma'am. Okay, understood. Now what custodian will do? So till the goods are cleared, right from unloading till the goods are cleared, it is the responsibility of custodian to look after the goods. Custodian will make an outturn statement, means custodian will say that these particular goods are unloaded, and then officer will match it with the import manifest that you had filed. That okay, the goods that have unloaded are actually matching with the import manifest that you had filed earlier. Okay, now filing of import bill of entry. How you pay your taxes? You file your bill of entry and along with that you pay the applicable duties under customs, and this bill of entry only later becomes an assessment order. Now, if you directly want to clear your goods for home consumption, you file form 1, which is white bill of entry. If you want to put your goods into warehouse, means you want to file into one bill of entry, you fill form 2, which is yellow bill of entry. And ultimately, when you clear your goods from home consumption by filing X bond bill of entry, in that case you issue form 3, which is a green bill of entry. So white bill of entry for direct clearance for home consumption, yellow bill of entry for depositing the goods into warehouse, and green bond bill of entry for clearing the goods from warehouse by filing X bond bill of entry. A, say yes or no. Understanding? Is this very important for exam? No. But is it little important? Yes, because anything can be asked. Okay, now we also know about warehousing without warehousing. If I am unable to get some documents or some proceeding is pending, I want to keep my, when the goods lie on the customs port, dock charges are being levied. And dock charges are extremely high. So high dock charges are levied when your goods are lying on the customs port. So until you have some query, you want to get it resolved, or there is some document which is missing. So for some period of time, you want to save your dock charges. So you can put your goods in warehouse. You can put your goods in warehouse without warehousing provisions applying to you. Means you will not find any into one bill of entry. You will not find any X1 bill of entry. You actually want to clear your goods only. Let's say there are some pending proceedings, or let's say some necessary information or supporting documents are missing. So for some shorter particular period, I want to keep my goods into warehouse. Officer can allow me to do so, but this is known as warehousing without warehousing. Warehousing without warehousing means such goods shall not be deemed to be in the warehouse and no warehousing provisions are going to apply here. Now, when to file bill of entry? 1 day prior to arrival. So if I am going to come on 20 December, my vessel is coming on 20 December, then bill of entry to be filed by the end of 19th December. In certain specific particular cases, department can allow me later also, but not later than not later than, in exceptional circumstances also, not later than the date of arrival. So at least by the end of 20 December maximum I can file my bill of entry. Done. So based on self-assessment, just like GST, based on self-assessment, along with filing my bill of entry, whatever I feel is the duty required to be paid by me for import, export both, I pay on my own based on self-assessment. So importer, exporter shall pay self-assessed duty. Now proper officer will verify, and if at any time proper officer feels that this duty is not appropriate and he wants to reassess, he can also reassess your duty. Now, circumstances for provisional assessment. What do we mean by provisional assessment? Here they are saying when importer or exporter is unable to make self-assessment. So importer or exporter is not able to make self-assessment, or let's say proper officer thinks that he wants to undertake some chemical test or any other test. He is not satisfied with whatever description you are giving, or you have furnished all of your documents but officer is not satisfied, or you have not furnished documents only. So I have furnished my documents but officer thinks that further inquiries should be done, or I have not filed my documents only. So in these four cases, my provisional assessment can be done, and I will have to just furnish a security of the differential deficiency amount. Now, what is the interest applicable? This is very much important. This is very much important. In case of provisional assessment, so the month in which provisional assessment is done, from first day of that month, let's say I get my provisional assessment done on 5 December 2022. My interest, if there is any short payment at the time of final assessment, if there is any short payment, my interest will start from 1st December only. Yes, it is kind of irrational, but this is how it is. In the month when I am doing my provisional assessment, from the first date of that particular month, my interest will start if there is any short payment at the time of final assessment, and this interest will continue till I actually make payment. So till the date of actual payment date, my interest is going to continue at the rate of 18%. See, in GST we had seen from due date till date of payment. Here not due date, here they are saying first day of the month in which you do provisional assessment. From that date you will take the actual date of payment and 18% interest will be paid. And if there is any excess payment, means for short payment we take 18% interest, but if I had excess paid at the time of provisional assessment, but now final assessment amount is lesser, means I get 6% interest for refund. Now GST interest starts after 60 days. Here interest starts after 3 months. So if there is any excess payment, interest will start at the rate of 6% per annum after 3 months from the date of final order. Right. Then what is important? Audit and everything is okay. Sure. Remaining things are not that much important. It is okay. You can self-read once. So this is all about importation. So this is how I pay my duties, and I am required to pay all of my duties electronically only. See, audit we can see transaction-based audit and premises-based audit. Transaction-based audit is for a particular event, like particular import or export consignment. But premises-based audit is for entire period. Premises-based audit may be for entire financial year. Like all of the transactions taking place in this period will be covered in premise-based audit, but transaction-based audit is for some specific transactions only. Now at any point of time, I can convert my transaction-based audit into premise-based audit also. And then ultimately when I pay all of my duties and everything, I can clear my goods for home consumption. Right. Now, for certain specified people, we allow them to pay duties later. See, normal people have to pay duties along with bill of entry only. But for some people, government allows them to pay duty at a later date also. Deferred payment as we call it. Now, this deferred payment for all of the months, whatever bill of entries pertain to 1st to 15th date. So, for any particular month, from 1st to 15th date of any particular month, on 16th date, you make all the payments together. So goods corresponding to bill of entry returned for payment for 1st to 15th day of any month, you pay it on 16th day of that month. From 16 till the remaining period of the month. From 16th date of that particular month till the remaining period of the month, you pay everything on 1st of the following. So from let's say 16 to 28th February, whatever bill of entries are there, I pay the amount together on 1st March. Only and only for March month. only and only for March month, which is the year ending month. I do not take it to first date of the next year, but I take it as 31st March only. So for all bill of entries from 1st to 15 March, I pay on 16. But from 16 to 31st, I pay on 31st March only. Except for March month, for every other month, you pay on the 1st of the next month. This is with respect to deferred payments. Right. Pays this assessment, everything is okay. And whatever other duties, you are required to pay them electronically only. But here in some cases, like it is baggage, or there is no customs automated system in place for a particular place, or there isn't any amount other than all of these duties. So other than all of these duties, you can pay via normal bank cash account. But other than that, you need to use your electronic accounts. Payment relating to courier shipment. Earlier, they were allowed to do other than electronic cash ledger also, but now with effect from 1st May 2023, going by this amendment, for courier shipments also, you will be required to make payments from your ECL only, which is electronic credit cash ledger only. Done. Disposal. See, if you import certain goods and it has been 30 days, you are not paying taxes, you are not filing your bill of entry, bill of import, then in that case, government is saying we can auction your goods and we can dispose your goods. So we will give you a notice that we are auctioning your goods, and ultimately if you are not getting your goods cleared, we can auction those goods. And whoever will be the successful bidder will now pay the duties. Done. Sure. Now let's get back to chapter number 1, which we had left in between. Okay, so we had completed till taxable events here. Now let's see re-importation of goods. Now see the normal general rule, page number 285. The normal general rule says that re-importation should always be considered as fresh importation only. So if I re-import certain goods, I will treat them at par with fresh importation only, and whatever will be the applicable duties that I have to pay on fresh importation, I will have to pay on re-importation also. But there are certain exceptions to it, saying that if I had exported my goods earlier, availing some benefits, let's say I took refund under GST, or I exported it under the benefit of advance authorization, DFIA, EPCG, all of these schemes. So I took advantage of some scheme, or I saved my duty at that point of time. Now when I am re-importing my goods, I will not be required to pay entire import duty again. I will only pay what I did not pay at that time. Let's say when I exported goods, I took a GST refund of any X particular amount. Now when you are re-importing these goods, you do not treat it at par with fresh importation, means you do not pay the entire import duties again. You only pay this amount that we had given you in the form of incentive. So for these cases, we are saying pay during re-import what you didn't pay at the time of export. Now if you had exported certain goods only for repairs, I exported this calculator for repair. Now I am re-importing it. After repair, I am re-importing this calculator. Now government is saying no need to pay duty on entire calculator. You only pay duty on your fair cost of repair plus your freight and insurance both ways. Means freight and insurance from India to outside India and also from outside India to India. Now even if my ultimate supplier did not charge any amount to repair this calculator, I will still add fair cost of repair to pay import duties. So they are saying re-importation of the goods sent for exports for repairs and then re-imported. Customs duty leviable on fair cost of repair, cost of whatever material used to repair, and insurance plus freight, which has to be both ways. And in some cases, even no duty is to be paid. Let's say I had sent certain goods for exhibition purpose outside India on approval basis, that if they will like the goods, they will keep, otherwise they'll give me back. In that case, if those goods are coming back, no duty is required to be paid. So normally re-importation is fresh importation only. You pay entire duties, but for these cases, concessional duties will be applicable. And here, when you are sending for export or anything, for repair, anything like that, when you are re-importing, you have a time limit that maximum within 3 years you have to re-import those goods, and plus 2 years extension can be given. So within 3 plus 2 years, you have to re-import those goods back. But for these schemes, for DFIA, the Advance Authorization EPCG scheme, in these cases the time limit becomes 1 year plus 1 year. If you are sending your goods for repair, there should be no change of ownership. The goods were yours when you sent them for repair and you are bringing those same goods back, means no change in ownership. Understood. Now here we are saying, originally the goods were manufactured in India. Originally the goods were manufactured in India. I exported them. Now there is some issue with the goods. I am re-importing to repair them. I am re-importing just so that I can repair these goods and send back. Originally I exported, there was some issue. I re-imported so that I can repair these goods, and then after repair I sent back these goods. So here government is saying, here when you re-imported for repair, no need to pay any duty. No need to pay any duty, but there are certain conditions that you need to fulfill. So see, originally goods manufactured in India were exported. Now I am re-importing them. So re-import within 3 years. If they are coming for repair or reconditioning, then 3 years. If I am bringing those goods back to India for repair or reconditioning, then 3 years. If any other thing, let's say reprocessing, refining, remaking, redump, means anything other than repair or reconditioning, then I have to bring within 1 year only. Originally I made exported. Bringing for repair, reconditioning, then bring within 3 years. Bringing for reprocessing, refining, remaking, bring within 1 year. Whatever repair you want to do and export it back within 6 months. Export it back within 6 months, extendable till 1 year. Means 6 months plus 6 months, extendable till 1 year. I have to re-export them. Here also the time limit for re-export is same. In this case, when I am importing these goods, no need to pay any import duty. I will just have to furnish a bond saying that if I do not export in this period, then I will pay the duty. So you just have to give a bond security, nothing other than that, and you will not be required to pay any import duty. Here in case of repair and reconditioning, to import back, this 3 years become 10 years in case of Nepal. Now if the goods are derelict, jetsam, flotsam, wreck, means you threw some goods out of the vessel so that the vessel did not sink, the vessel broke down, and all of these goods have ultimately reached India floating, then also they will be treated at par with the normal imported goods and duties will be levied. IGCR rules, import of goods at concessional rate of duty rules 2017. You can 2017 it was earlier, but now it is superseded by rules 2022 and this was applicable for May 23 examination. Also, this is not very much relevant for exam point of view. It simply says that if for certain goods government is allowing you to pay concessional duty or certain goods which are prohibited, but let's say some drugs which are prohibited in India, but you specifically applied, you want to import them to make some medicine and government allows you. So certain goods which are prohibited but they allow you, or certain goods which are allowed only but they allow you at a concessional rate owing by some notification, and you need to use it for some specified end use. That normally if any person imports plastic, rate of duty is 60%, but if someone imports plastic to make calculator, then rate of duty is only 25%. So government is giving me this concession based on what end use I am doing. So for that purpose, I actually have to use it for end use. And how government is going to make sure going by these provisions means I need to take IIN number. Then whenever I'm filing bill of entry, I will say that I have this IIN number and this is the purpose of my import. They will allow me by paying less duties and everything. I need to maintain all of the accounts records, and every month by 10th of the following month I file a statement on common portal showing that okay, this is what I imported and this is finally my end use, what I am doing. You can send these goods to job worker also, and job worker will have to mandatorily finish his work within 6 months. Within 6 months from the date of sending and return back to importer. Job worker can not directly, unlike GST, job worker cannot directly supply it to customer. No, he will have to give this goods back to importer within a period of 6 months only. Job worker will also be required to maintain all the accounts records. I can unit transfer my goods to my own another unit. Both of us will also have to maintain accounts records and such rules, but not very much important for exam point of view. Now, rate of date and duty I have covered in the chapter of valuation. As I said, I have already uploaded the revision of valuation, so you can refer it from there. It is given in a better format in valuation chapter. Bharat Surfactants and Rajkumar Knitting Mills we have already completed. Now, remission, abatement and exemption. Directly we are going to do from difference between. Now see, if there is any petty theft, small pilferages, section 13 applies. So after unloading but before clearance, after unloading but before clearance, if there is some small petty theft pilferage, in that case section 13 applies, means no requirement to pay duty on the goods which are pilfered. So duty is exempt. See, anyways you have not cleared your goods, means goods are just unloaded lying with custodian, but goods are not cleared yet. Now in this case, and also this is not applicable for warehouse goods, right? Not applicable for warehouse goods also. I've just unloaded my goods, not cleared, not warehouse, nothing I've done, and there is some petty theft happening. In that case, government is saying we will exempt your duty, do not pay duty. And if any time in future, those goods, we catch the thief and the goods are caught back, it is okay. So duty leviable if the goods are subsequently restored. And importer has no requirement to prove. See, understand, if there is any pilferage, petty theft, let's say this is an entire cartoon. There were 100 units in the cartoon. Now these 5 units are missing because they are pilfered. So it will be very much apparent that yes, the pilferage has happened. So there is no requirement to prove anything and my duty will be exempt. But what if I have already paid the duties? And here when I go to get my goods back, I got to know that my goods are completely damaged, completely destroyed. No restoration is possible. I have already paid the duties. Now I went to custodian, let's see, this is my bill, I have paid the duties, give me my goods. And now I get to know that my goods are completely lost or destroyed. I will have to first of all prove that there is no chance of restoration possible. My goods are completely lost, completely destroyed. Then whatever duty I have already paid, that duty will be remitted to me. This is applicable on warehouse goods also, and here before clearance, after clearance, anytime your goods can be destroyed. But section 13 is very much particular, talking about after unloading but before clearance only. So major difference between section 13 and section 23. Also you can relinquish the title to your goods. If you have seen Badmash Company movie, I don't know if you've seen or not, but what they used to do, they used to deliberately import certain goods and then relinquish title on the same, so that they can purchase those goods at a cheaper price from the auction of the customs. So here, anytime if you import these goods and the goods are not as per specifications, you do not want these goods, government says okay, you leave the goods, we leave the duty. So what you are required to do, you just have to relinquish the titles that I don't want these goods. Government will say okay, we do not want duty. Government will then make an auction and will collect the duty from the auction winner. But if there are some offensive goods, let's say you imported a gun and now you got to know, okay, shit, I will be caught. And then you think, let's just relinquish the title. That is not possible. So owner will not be able to relinquish the right if it appears that you have imported certain offensive goods. Now talking about abatement. Now what is the meaning of abatement? Let's say I imported certain goods and those goods are destroyed or deteriorated. Sorry, damaged or deteriorated. Two things are possible. Damage or deterioration. Means when I imported the goods were worth 15,000. When I imported these goods were worth 15,000. But now due to some damage, the value of these goods are now 10,000 rupees only. So government says that if originally on 15,000 you were required to pay, let's say 4,000 of duty, then we will give you abatement that for 10,000 you pay some less duty. This is known as abatement. Now abatement can be for damage also, can be for deterioration also. Damage means the physical damage, right? The physical damage that the goods are no longer fit. But deterioration means just a deterioration in quality. Let's say I imported mangoes. Obviously, every single passing day, the quality of mango will start to reduce because the mangoes will start to ripe. So your deterioration means there is a reduction in quality of the goods due to natural causes. But damage is a physical damage to the goods. Now I get abatement for damage at any point. Means if it is before, during unloading, while the goods are in warehouse, at the time of clearance, for damage I can get abatement anytime. But for deterioration, I can get abatement only and only till unloading. Now after unloading, no abatement, because understand, this is very much natural. If you are an importer of mango, If you are an importer of mango, do you not know that after unloading, your mangoes are going to get deteriorated? Yes, everyone knows that due to natural quality, due to natural causes, the quality will get deteriorated. So here the customs says that we will give you abatement for damage at any point of time, but abatement for deterioration only till unloading, means no abatement possible after unloading. For point number 2 and 3, after unloading, we will not give you abatement for deterioration, but for damage, we can give you abatement anytime. How to calculate? Duty before damage. So 4,000 is what I was supposed to pay before damage. But before damage, my value of goods was 15,000. But now my value of goods is 10,000. So okay, you pay the proportionate duty. This is just a simple cross multiplication. No need to remember the formula. As I showed you that original value was 15,000. I was required to pay 4,000 duty at that point of time. Now after damage or deterioration, my value has fallen down to, let's say, 12,000. So proportionately, what are the new duties or what I am going to pay? So for this amount, I get abatement. Understood? Sure. What is denaturing or mutilation of goods? Again, very much simple. Let's say import duty on machinery is 28%, but import duty on scrap is only 20%. I import a machine and then I tell department that no, this is not a machine, this is just a piece of metal, a scrap for me. Department says okay, department will break the machine into small pieces, means department will mutilate the machine. Or let's say I import some chemical which is not normally allowed, or the rate on that chemical is, let's say, 60%, but I say that no, I'm going to use it for some other purpose material, rate on which is only 30%. So government can put some chemical in it and denature it. So denaturing and mutilation means they will denature or mutilate the goods, making it fit for only one use, that I am saying, and then less duties can be levied. Otherwise than that, they will levy duties as I have imported machine only and not scrap. If you want to pay duty as a scrap, then allow them to mutilate your goods or to denature your goods. Understood? Exemptions and everything, not very much important. Importation and exportation already done. Valuation under customs also done. Transit, transshipment, very much simple, saying that if the goods are coming to India from some exporter country, now some goods are unloaded here, now some goods are going to some another country. Now it might be possible that they are going in same vessel, means this vessel came to India, unloaded certain goods, and now this vessel is only going to another country. Or let's say entire vessel is changed, the remaining goods are transferred to some another vessel, and now that vessel is going to another country. If the goods are allowed to remain on same conveyance, we call it as transit. If there is a change in conveyance, then we call it as transshipment. In both of the cases, they are allowed to go without payment of duties. Means only the goods which are unloaded here, I required to pay duty. The goods which are not unloaded here, but we are going further to any other country under transit, transshipment, no duty is required to be paid. For transit, because same conveyance continues, the records can continue, but under section 54, I need the records will not say continue, but I will have to furnish new records for the same. Classification of goods, again see category chapter. Now classification says that how to determine what rate as per Customs Tariff Act will be applicable. Now see, Customs Tariff Act has this kind of classification where, let's say, they, as per HSN code, the goods are arranged. So here we are saying to understand this, we have 3 general explanatory notes and 6 rules of interpretation. General explanatory notes are very much simple, saying that what is the meaning of dash. So if I say I am a CA student. In CA, I am in CA final. Now I am appearing for group 2. For group 2, I am giving paper number 8 IDT. So dash signifies that you are going in the sub-classification. This is what the point number A says, that the relevance of 1 dash or 2 dash or further dashes means it is sub-classification, sub-classification of the immediately preceding item. So here if I say HSN code 0801, now there can be sub-classifications in this HSN code possible. This is a general explanatory note explaining the meaning of dash. Then they talk about percentage. So if I say for dried desiccated coconut, the rate of duty is 70%. Percentage means whatever will be the value, 70% of that value will require to be paid as the duty. This is the meaning of percentage to be applied on value of the goods. And last point says that for these goods we have standard rate of taxes and we also have preferential rate of taxes. So they are saying unless otherwise mentioned, always standard rate is only applicable. For preferential rate, you will have to make a specific claim for preferential rate. And if anywhere preferential rate is not given, then also by default standard rate is going to apply. So as per the third general explanatory note, they say standard rate is applicable if preferential rate is not available. Yes, everyone. Now the sixth rules of interpretation for first schedule. Now see, first schedule talks about rates of import duty and second schedule talks about rates of export duty. We are now talking about rules of interpretation for first schedule to Customs Tariff Act. Rule number 1 is the general rule, saying that you read whatever are the chapter notes given, you read the description, and based on that you classify that your goods are falling under what HSN. So classification to be determined according to the terms of headings, sections and chapter notes. So if I want to classify, let's say coconut, very much simple. I will see the chapter name that okay, fruit plant, my coconut might be a part of this. Then I see okay, coconut, now my coconut is a dried coconut, fresh coconut, other coconut, whatever it is. Based on the description, I will classify my goods. Now, chapter notes are a part of statute, but the headings are not a part of statute. So here we are saying that this title which is given, it is just for ease of reference. This title is not a part of statute, but these chapter notes, the explanations that are given in these chapter notes are very well a part of statute only. Means based on this properly you can do your classifications. You can also fight a case going by these chapter notes. Okay. But title do not have any legal enforcement. They are only for the ease of reference. Now, if I am not able to determine my HSN code as per general rule number 1, then I will sequentially follow rule number 2 to 6. Means go by chronology. After 1, you go to 2, then go to 3. Do not directly go to 3. Rule number 2 says that classification for incomplete, unfinished articles. So incomplete, unfinished or unassembled articles. Let's say I imported a car. Everything is there. The car is having engine, the car is having chassis, the car is having body. It is just that seats are missing in the car. Then also I will classify it as a car only. So classify under the heading of finished completed articles only if there is an entire character given to that particular. Let's say if I import car without seat, it will still be classified as a car only. So just importing the goods in incomplete form, so that I can save on some duties. Like for car, let's say duty is 90%, but for some other metal structure, duty is only 50%. I say, no, this is not a car. See, there are no seats. They will say, no, it is car only, and still 90% duty will be applicable. Or if there are some mixtures or combinations of materials, let's say I import cornflakes, and there are few dry fruits also in the cornflakes, or some dried fruits, means not dry fruit, dried fruits, means let's say some dried strawberries or apples they've put in the cornflakes, which is normally a trend. Then also I will classify it as cornflakes only. So if there is any such mixture when one article is exactly a main article, let's say coffee mixed with chicory will be classified as coffee only. Natural rubber mixed with some synthetic rubber will be still classified as a natural rubber only. But here also if you are not able to classify, then you go to rule number 3. Now rule number 3 says that whenever the item is classifiable in 2 headings, I will see specific over general. Let's say I want to classify this calculator. Now there is one heading. There is one particular heading saying that any of the machine working on cells. There is some another heading specifically talking about calculators, or specifically talking about machines which run on cells for mathematical operations. Means I have a more specific heading as compared to this, that any normal machine under cell, no, I have a calculator separate heading, then I will go for this specific heading over general heading. Means let's say I am importing electric shaver, then I will classify it as shavers or clippers with motors and not with electric domestic appliances. As such, they are also electric domestic appliances. But I have a specific heading, then I will prefer the specific heading over my general heading. Then essential character principle. Let's say I imported a laptop and a software is also pre-installed on that laptop. What is more essential? Means if there are mixtures, composites in a set, both are equally specific. In that case, you see what gives essential character. Let's say if I import a pencil we have erasers attached at the back of pencil. Now erasers can be individually used to erase, pencils can be individually used to write. Both of them are important. But do you purchase the pencil for eraser, or do you get that eraser just because you purchase the pencil? So pencil is main. So here lead pencil with eraser at back will be classified as pencil only. A software loaded with laptop will still be classified as the laptop only. But if I am not at all able to classify both of the things are extremely important, then it will be letter the better. Letter the better means whichever HSN code comes later, because HSN codes are arranged in ascending order. So the first HSN number, like let's say if I say 1801, will have lesser rate of duty as compared to 1901, because as you proceed in the HSN codes, the rate of duty starts to increase. So here let's say Mahindra Imperio, which is as such a passenger transport car also, but you can also transport goods in that. So it looks something like this, where I can sit here as a passenger transport, but I can also load my goods here. So Mahindra Imperio, I cannot classify as passenger also, I cannot classify as goods also. Both of them are equally important. Then you see letter the better rule. So whichever HSN code comes later, that HSN code becomes my relevant HSN code. Rule 4 talks about Akin rule. Let's say when tablets were first time brought. When tablets were first time brought, there was no HSN code for tablet. Now, what is Akin rule? And tablets are similar to mobiles. Tablets are similar to mobiles, I can say, then I can classify them with the HSN code of mobile only. Let's say if I purchase iPad, there is no specific HSN code for iPad. They are similar to laptops only, means I can classify them as laptops only. So they are saying Akin rule means classify. Classify like plastic films for cars classified as plastic shutter builderware only. So applied when above rules cannot be classified under the similar goods headings. Rule 5 talking about packing cases or containers. Packing cases or containers which say that camera, musical instruments, or let's say gun. The containers of these particular things are specifically designed. So if I import a guitar, the guitar cover will be in the shape of guitar. If I import a gun, the gun cover will be in the shape of gun. Means the outer packaging is specifically dedicated to that particular product. Then you classify the packaging with the product only. So they are saying you classify it with the specific set of article only. Or let's say there are some general, normal packing materials which come with those goods, that also you classify with the goods, with the articles only. But if they are durable containers, means let's say I import gas cylinders. Now after the cylinder is empty, I can refill the gas and I can use the cylinders repetitively. So they are durable containers. Now in that case, you classify the container as a separate good and you levy the duty as if the container is being imported in its form, and the other goods, the goods that you've imported, classified separately, the container classified separately. So if my containers are durable, in that case suitable for repetitive purpose, I will classify them separately. Or let's say I imported a guitar. Now the cover of guitar is in the shape of guitar only, but this cover itself is extremely expensive, studded with diamonds. Means let's say a diamond studded jewelry box. Now jewelry box is in the shape for jewelry, but the box in itself is studded. Means the container in itself is having whole of its essential character. Then you classify the container separately and the original goods separately. And last rule 6 talks about classification of subheading. So this is how I determine my headings. Now under headings also, if I'm confused which subheading to take, then also rule 1 to 5 only I apply. So apply terms of subheading and subheading notes, and rule 1 to 5 shall apply mutatis mutandis as we have studied. Market parlance theory says that whatever market thinks, let's say softie, will you classify softie as an ice cream or a general dairy product? Obviously as an ice cream. Rate on ice cream is higher, but rate on milk dairy products is lower. Just to take this benefit, you cannot classify softie as dairy product, because normally everyone would view softie as an ice cream only. So if a product not defined in Customs Tariff Act, it should be classified according to its common understanding in trade by the dealers and consumers. And last topic of this chapter, which talks about project import. Now project import simply says that for certain notified projects like power projects, industrial plants, oil miller exploration, irrigation plants, which government have notified. If you are setting up a new project, or let's say You are substantially expanding your existing project. So you are setting up a new project or substantially expanding your existing project. Substantial expansion means at least greater than equal to 25% of whatever it is existing. And for this, you are importing certain machine, appliances, instruments, apparatus. You do not classify all of them separately. The 9801 single HSN heading 9801 will apply to all of the machineries being imported. So whatever is the customs rate under 9801 HSN code, this single consolidated rate will apply to all of these machineries that you are importing. Means they have done it ease of compliance for you. You can also import some raw materials or spare parts with these machines if you want to, but maximum with a value cap of 10%. So whatever total you are importing, 10% of it can be these consumables or raw materials, but other than that, majority things have to be machinery, appliances, instruments, apparatus, and you can take benefit of a single consolidated rate 9801. Now let's say I imported machine A, machine B, machine C for project import. Apply single consolidated 9801. But the machine B is actually exempt. Means if I import machine B individually, no duty will be applicable on machine B because it is exempted via notification. Still, I will have to make it a part of 9801 and levy duty? The answer is no. They are saying if any particular exemption is there on a particular product, that exemption will continue. Do not levy duties on that particular product. But other than that, whatever is left, consolidate everything under single heading 9801 and you levy a single rate of taxes on all of these articles. Quickly tell me yes or no. Yes, ma'am, done. Now, valuation, warehousing, duty drawback. I have shared already. Other than that, this was important. Now for chapters like refund under customs and payment of taxes, they are very much simple. Refund under customs is just a 10 minutes chapter. Or for payment of duties also a lot of theory is given. But ultimately what is important are few practical questions that are given in the question bank that you can just self-practice. Also, if you understand a little bit of Hindi, I have also uploaded question answers with respect to same that you can check out in the playlist section. So this is all that I had to share with you in these 2 days. Also, give me 10 more minutes. I will show you my certified copy for May 2022. So that you get an idea about how to write the paper. So see here. Make sure to see valuation, drawback and warehousing from the video that I have already uploaded. Okay, so this is my CA final paper of May 2022. So I have put 30 in MCQ, 53 in description. So the total is 83. Now here, first of all, how to approach MCQs is a major question asked by a lot of students. The most important thing first is time allocation. So once when you start your paper, maximum I am saying 25. Means 20 to 25 you can decide, but maximum 25 minutes is what you can give to MCQs initially. If you are able to complete your MCQs within 20 to 25 minutes, very good. If you are not able to complete, leave your MCQs there and there only and start with your descriptive part. Whenever those last 10 minutes are left and the bell rings, you can get back to MCQs and finish your remaining MCQs. At that point of time, your brain will be working at a much faster capacity. Otherwise, you can think A, B, C. Now, thinking about what option to take can take 15-20 minutes of yours without even you realizing. So, first important thing is time allocation. Initial 20-25 minutes for MCQ, more than enough. If not able to complete within this time, leave the MCQs and get back at the end to solve these MCQs. Okay. Second thing, do we need to solve entire ICAI MCQ booklet? Is it required to solve entire ICAI MCQ booklet? The answer is no. Because if you are thinking that if you solve entire booklet and 5-6 questions are going to come as it is from the booklet, the answer is no. The questions as it is from the booklet do not come. It is just for practice purpose. You might find some questions similar to it because it is for practice purpose, but the exact same question is not going to come. You have to be extremely confident with the provisions under GST. Multiple revisions understanding the provisions can only help you score better in MCQ. Talking about myself, I had only solved, I would say, 20% of the MCQ booklet. That is it. Just to know whether I'm able to approach the MCQs or not. I also did not solve the entire MCQ booklet. Still, I managed to get 30 on 30 in IDT. My MCQ score in Audit was also 30 on 30. In law, I had scored 29 or 27, I don't remember. So MCQs has obviously helped me boost a lot of my score. But the major thing I think helped me to score in MCQ was only and only going by provisions again and again. For additional MCQ practice, RTP of November 23, RTP of May 23, mock test paper of November 23 both, and mock test paper of May 23 both. These all MCQs you are going to solve without fail. See, there are no major amendments from May to November. There are small clarifications being inserted. Nothing much has changed. So you can safely solve the MCQs for RTP and MTP of May as well as November. Now RTP you have to solve entirely. Means entire May as well as November RTP you will solve. For MTPs, if you have time, you can solve full. If you do not have time, at least all the MCQs of these 4 MTPs and plus that 14 mark comprehensive question. So question number 1, comprehensive question and the MCQs of all of these RTPs and MTPs. Now understand, this MTP will be having 30 marks MCQ, 2 MTPs, right? So 30 into 2, 60. Same 60 here. RTP has a good 7-8 MCQs with 1 or 2 case studies. Means approximately 80 marks. Approximately MCQs worth 80 marks you are going to solve from these RTPs and MTPs itself. Means if I am not wrong, some odd 60 MCQs which are new MCQs, relevant MCQs for your exam. These kind of MCQs which they give in RTPs, MTPs are actually asked in examination. So these will be latest good MCQs for you to practice. So rather than solving MCQ booklet, your first preference should be to solve MCQs from here. Now if you have completed your syllabus and you have extra time, you can any day move to the MCQ booklet and then go for the additional MCQ practice under the booklet. Okay, see, tukka, what do you call it? Tukka, fluke. Fluke is not going to work in MCQs. If you think that I'll say, okay, A or B is going to work, no. Whenever you attempt MCQ by fluke, it is never going to be right. Every single person feels this only, that my fluke never works. See, none of the person's fluke works. It is very rare cases it does. Ultimately, provisions, if you know, you can solve the MCQs. You can someday use elimination method if you are not very much confident. Like, do not be so blank to not even look at the options and you know by question I do not know, you just attempt D and come. No, at least you have to use elimination method thinking that okay, D is not at all right answer, I know as per the provisions. A is also. So at least that probability of being wrong is reduced from A, B, C, D option. I am sure that D is not at all an answer. This I have read. So from A, B, C, at least I can now think that what should be the answer. So if you are not much confident, do not start by thinking what is correct. You start eliminating the options that okay, this is not correct, this is not correct. Now remaining 2, I feel something has to be correct. Also, if option A is correct, you read the question, you are 100% sure that the answer in option A is correct. Still, you will wait for 1 minute, read option B, C and D also. Majority of the times students do this mistake. They find the correct answer in option A just to save time. They do not read B and C. What if they've given an option saying A and C both in option D and C is also correct? You will unnecessarily lose marks by not reading all of the options. So make sure to read all of the options given, even if you are sure. Means you need to know A is correct. I know A is correct. I also need to know why. Why B, C and D are incorrect. So whenever you are solving these RTP and MTP MCQs, now for practice purpose, do not just focus on why option A is correct. Also try to find out for remaining three options that why they are not correct. By practicing MCQs this way, you will inherently develop that habit that your mind will start working faster to think, okay, this is correct and this is not correct, and you will be more confident while solving the MCQs. So this is all about how to score good in MCQ. Now we talk about the descriptive part. Never start your answer with question 1. For IDT, I am talking. For IDT, I would never advise you to start your paper by question number 1 because that will take a lot of time. Also, there would be some 1 or 2 adjustments in question 1 which you are not confident with because that question is intended to be little tricky for your IDT paper. So always start with any question from question 2 to 2, 3 or 4 or 5, whatever you are comfortable with. So any question that you are most comfortable with, it can also be question number 6, no problem. So when they give you that 15 minutes time to read your paper, you just have to identify 2 questions. You have to identify 2 questions that you are most confident with, and you start your paper with that question only. So I thought question 4 I knew very nicely, and I started my paper with question 4. And yes, it was a good choice because I scored 13 out of 14 in question number 4. Now, what advantage it will give you? See, first 20 to 25 minutes we had given for MCQ. Now I am starting my paper with the question that I am most comfortable with, most confident means I can write faster. I do not have to think much because I already know the answer. So my target would be in 20 minutes. In 20 minutes, I wind up entire question. Means question 4, A, B and C, 20 minutes I complete entire question because I know everything. It is just the time that I need to write. I do not have to think anything. Means my paper has just started. It is 45 minutes, right? So for first 25 for MCQ and 20 for first question. So in first 45 minutes, what is happening here? So my paper has just started, and in first 45 minutes, I know I have already completed 30 marks of MCQ and plus 14 marks of a question. So 44 marks paper is already attempted, and I am much confident in MCQ and this question that I have attempted because out of all questions I selected this, means this I know very well. Means at least now within first 45 minutes of starting my paper, I am rest assured that I am going to clear. Now for remaining time, now I can start with questions going by my comfort level. So question 4, I decided to start. Did I draw all of these lines at this point of time? No. I just made sure to as quickly as possible wind up this question completely. And then later when I completed my paper, I had time. Then I came here, drew the lines and everything. So this is all not very much important. If you have time, you can do presentation. If no, it is completely fine. But make sure to write all the points. See, I did not just calculate the interest. I gave them the provision saying that, okay, interest at this rate is applicable from this date to this date. So whatever you are doing, always make sure to give proper explanations for that. Here I was not having time. It is okay. I did not make any table. I directly calculated all of the things. Now for theory, understand. See, this was a very normal question asking effective date of registration. Okay. A very much normal question asking whether registration will be required or not, and if required, what will be the effective date of registration here. We know as per section 22, first of all, I explained to them what is section 22. If you remember the section, very good. If you do not remember, it is okay. You can still directly start. As per provisions of CGST Act 2017, you can start that way. I remembered the section and therefore I have mentioned the section here. Do not ever mention incorrect section number. If you do not remember, it is okay. Just skip it. So first of all, I tried to explain them what is section 22, that if I exceed my turnover limit, I am required to take registration. But if I am exclusively engaged, the 20 lakh limit will become 40 lakh limit. So all of these things I explained. Then I took what is in the present case. Then I explained that, okay, in present case, Jugnu is in this particular state doing this particular activity, means the applicable turnover will be this, applicable turnover will be 40 lakh. Now this is the actual turnover. Means first of all, yes, the person is liable for registration. Now talking about effective date of registration. So the turnover crossed on this particular date. Now within 30 days, if he applies for registration, then the original date will become effective date. I explained everything and then I said, okay, this is the date when liability arose and therefore this is the effective date of registration because the application was done within 30 days. So a simple question that this was, right? You do not even need to think about anything. Effective date of registration, all of us know, within 30 days, original date. After 30 days, the date. But it took me almost 1.5 pages to explain this entire provision, to write this answer. Then I got full marks here. So it is not required to write extra. See, I'm not telling you to write very much extra, but at least your answer need to have a proper body. Means you start by explaining the provision, you give the relevant facts of the case, and ultimately you give a conclusion and you highlight your answer that okay, after everything, this is my final answer which I am giving to you. Now see, next question, I was not knowing section number. No problem. I directly started as per the provisions of CGST Act. Still no problem. They had asked if it is valid or invalid. I directly said that okay, it is not valid. So again, see 3 paragraph thing. I did not know the section number, but obviously I knew that what is the provision of the section, so I directly explained the provisions. Then in this particular case, what they are asking, and finally what is my final conclusion, which says that the statement given is not valid. So it is not like you have to write section number. If you know, very good. If you do not know, still it is fine. And this is how you present the body of the answer. If at any point of time you feel that, see, here also they've asked this calculation, right? So I know in case of customs, from first day of the month of the provisional assessment, my interest calculation starts and continues till the date of actual payment. Now I took 62 days for interest. How 62 days came, even that I had to explain, that 31 days of December, 31 days of January, and finally 62 days interest at the rate of 15% I am levying on this particular amount. And I also made sure to highlight my answer that this is the final answer of the interest. So make sure to hold hands of your paper checker and take him along with you to see the paper. I wanted him to see this particular thing, so I highlighted it. I wanted him to see this particular answer, so I highlighted this thing, that even if I have made some mistakes, some small mistake here, please you ignore that mistake, because ultimately my final answer is correct. And then this case, he will not just leave my answer here. He knows that okay, final answer is correct. He might deduct 0.5 or 1 mark here, but still my final answer is correct. I have highlighted it. He deducted one mark here. See, I said I've scored 13 on 14. 1 mark is deducted here, but not a 0, because my final answer is correct. So they give marks of step checking. It is okay. Even if you do not highlight, they still read your entire answer. But what is the problem if you just make a box and highlight your answer? You always have an option to write things in a better way, then please do it. I know, no marks for that. Even if you see the copies of first or second ranker, they would have written not in a very good manner, still they managed to get a rank. But it is never wrong to present answers, is what I feel. You should put efforts from your end. Now then I started with question number 1, because now I was confident that okay, now I am going to pass anyways, because my MCQs went well. I wrote the answer with what I was most comfortable. Now I started with question number 1. So I feel do not even keep question 1 for end, because that would unnecessarily create a pressure on you, that this is a compulsory question, I have to write. Make a sandwich. I always use this word sandwich, that you start with the question you are most comfortable with. Once you quickly complete all of these things, then come to question 1, and then the remaining questions. Do not keep question 1 for beginning also and for end also. Always make a sandwich for question number 1. And then your every single figure. See, this is the table that I made for the computation. But every single figure, from where did I get? I wrote all of the assumptions, all of the working notes by giving notes to accounts. By giving notes to my computation. So make sure for every single figure that you write, you need to have a proper backing. Yes, so this is all about it only. And see, here I lost majority of my marks because question 1 took a lot of time. So I thought I might have less time to complete my paper, and I started writing half answers. Means my ultimate answers were correct. My ultimate answers are correct. See, everything is correct. Liable, yes, not liable. This all is correct. Still I am not given full marks because I have not written notes. As I said, all of your figures or all of your assumptions, all of your conclusions are required to be backed by a proper section or a proper provision explaining the relevance of it. Now see, even though my final answers are correct here, I have been awarded half marks only because I have not written provisions. I have directly given them answer that yes, liable, not liable, because I was not having much time in hand with me. Okay. So they read everything carefully and make sure to read the question carefully. If they are asking you value, you only calculate value. They had asked value here, which was correct. They had not asked GST. Still, I calculated GST amount. Unnecessarily, I wasted time. Had I saved my time here, it could have been possible for me to write provisions here, and I could have scored even better. I tried to save time here just to calculate these things which are not even asked in examination. I lost my time here and I lost my marks also. No marks for this, and also lost my marks not because of writing the provisions. So it will take only 10 seconds extra to read exactly what is being asked in the question, and then only you attempt. See, if they're asking only value under customs, you calculate only value. They are not asking custom duty, then do not calculate custom duty. So read the question very much carefully. So yeah, these are some things that I thought you could learn from my paper and stick to the provision, right? Every single line they are reading. I just wrote these things because I was not sure about the answer. So I just wrote it, and yeah, obviously I have not got any marks. Try attempting full paper. What do I mean by this? Let's say I know the answer of question 2A. I know the answer of question 2B. I do not know question 2C. I am still left to write question number 3. What I normally do, I will leave 2 pages. I will just leave 2 pages for question 2C. I will first complete all of these things that I know, but I will have this thing in mind that no, I have to write question 2C, I have to write question 2C. After I complete everything, I come to these remaining 2 pages to at least try and attempt question 2C. In my entire CA final paper, there is only, I guess, 5 marks in law. I had completely left FEMA. So I was not at all aware about what was there in the FEMA thing. So out of 8 papers for 800 marks, I attempted paper for 975 marks. Then I was able to score 535 marks in totality. If you are not attempting paper, how you are going to score marks? So at least try to attempt full papers in all of these subjects. In my CA final, I made sure to attempt all 100 marks paper in each and every subject, and that only helped me score 535 marks in total. Just law, I had no idea. They'd ask the monetary limit. Now limit, obviously I cannot write anything if I do not know about it. So that 4 or 5 marks question I had to leave because there was no option. Other than that, 796 or 795 marks of paper out of 800 I have attempted. So make sure that you do at least this question practice so that you can at least write full papers. Now some general queries. How many revisions required? See, now we are anyways 1.5 months away from November 23 exam. So even if I say that 3 revisions required, but if you are not in a position to complete 3 revisions, that would not help. But yeah, ideally I would say 3 revisions means 1 proper good reading, 2nd revision to consolidate things and write test, and 3rd revision is very much quick, like 1.5 day you take. Like 15 days before examination, you start with your 3rd revision, where every subject you give 1.5 to 2 days to just completely get in touch with the subject. Because if there is a subject that you've studied 1 month before exam, and then FR comes, audit, a law, all of the paper, like I have not touched DT 1 month before exam. Now directly in exam, I will not be able to recall what I had studied in DT. So always I tell students to do this thing, that 15 days before exam, you leave all of your revisions that you've done, and now you give 1.5 day to each subject, just so that at least 2 weeks prior to exam, you are in touch with every single subject, and now within 15 days, you will not forget much. So now when your exam comes, you're at least able to recall any subject that you've done 1 or 2 months prior to exam. Directly in exam, in that 1.5 day, you will not be able to consolidate. While you are solving the questions, no need to write and solve. Like if you are solving GST questions or FR or SFM, any questions, it is okay if you directly solve the questions in Calci and match your answers. But for writing practice, you specifically write paper. At least 1-2 paper for every single subject you are required to write. Because unless you write, you will not be able to understand. You know the provisions, but you do not know how to put in paper, you are not going to get marks, because ultimately the paper checker is going to see the paper that you have presented him. He does not know. Who does not know only who you are or what you know or what you do not know. So while solving questions, do not waste time writing every single question. Why? Because you do not have any time limitation. When I write a paper, I know within 3 hours I have to complete this much. When I am solving a particular question, I do not have any time limit. I have to just write, solve and complete that question. That will unnecessarily take up time if you are not giving any time limitation to it. So question practice, quickly you try to solve more number of questions by doing them on Kelsey or in rough sheet as it is, which is fine. But now when I'm actually writing the paper, I will make every single effort to increase my writing speed, to understand what time I should give to a particular question or what time I should give to particular MCQs in a particular subject. Yes, everyone. Obviously, without practicing good number of questions, you cannot attempt paper. Practice questions, but it is okay. You practice on Kelsey in rough sheet, it is fine. No need to write every single question. But writing practice separately by writing papers is obviously required to score good marks in examination. Yeah, so this was all yesterday and today, right from GST chapter 1 till customs. Very small few topics in customs I have not covered, which I feel are anyways okay. If you understand Hindi, you can go to Hindi Marathon and refer those particular topics. If you don't understand Hindi, it is still fine. You can text me on Telegram or WhatsApp if there is any query in respect to any particular topic. But I don't feel you will be having any query after these 2 days of revision. Yes, ma'am. Sure. So my revision, I was not in a very good position, Parvati, because I had my CFA level 2 and level 3 exams, level 2 before CA, level 3 after CA. So I completed my course much later, so that is not advisable to follow. Ideally, before 5 or 5.5 months of examination, or at least 4.5 months of your examination, your lectures should have been completed. So that last 5 to 5.5 months, you can give fully to your first, second and third revision. But my case was little hopeless. Even 3 months before examination, my lectures were pending. But then I had stretched very long, like 13 hours, 14 hours on a daily basis to complete my lectures and revisions. But that was because of CFA, obviously. So my strategy would not be advisable to follow. I can give you a proper general strategy. Like, I know this much time is required. If you waste your time initially, so I will not call it as a waste of time, but yeah, I was running late. So I had to stretch it to 13 hours, 14 hours also. But if since beginning, you are giving a proper 10, 11 hours daily, then there would not be a pressure to stretch later. So the total preparation time remains same. If you are late in completing your lectures, it is still fine. You can stretch and complete. If you are early in completing your lectures, very good. Because now comfortably, you can manage your syllabus. So yeah, the total time remains same, as I said, that you do 3 revisions, you write papers. So this amount of time, any normal person, unless you are extremely intelligent, any normal person would require this amount of time to complete the syllabus for CA final. Yes, everyone. Hope you all had a great time these 2 days. 8 hours yesterday and 6.5 hours today. We've tried to consolidate everything. I thought not to keep it as a marathon, but to keep it as proper revisions only, so that later also if you're stuck at any particular provision, you can come to this video and refer it in the form of revision only and solve all of your queries and get confidence. Like now, every single chapter you start, you can just come to this marathon revision video, listen to that particular topic for like 15-20 minutes, half an hour, and then self-read it. So that would give you a little more confidence. And also a confidence that yes, if ma'am can complete this in 13 hours, why cannot we complete one day before examination? So the ultimate objective of taking this marathon 2 months prior to exam was very much simple, to give you confidence today itself that yes, if you give 1 or 2 multiple revisions to this subject, I assure you that if I complete this subject in 13 hours, you have more than 13 hours one day before examination. So you can obviously complete. Regarding exam strategy, when you come from DT paper, higher GST portion. Done, ma'am? Okay. So we can stay connected. 9714 111 is my number. 9714 111 I've mentioned my number, my LinkedIn ID, my Telegram ID, my Twitter ID, my Instagram ID in description box. You can check from there. And anywhere if you want to connect, you can connect. Done. Thank you for being the most amazing students for this wonderful marathon, and all the best for your examination. And I will be awaiting for your all calls on the result day saying that, hey, hello ma'am, CA Priya speaking, CA Santashri speaking, or CA Parvati speaking, CA Vijay speaking. So all of these students, the names that I can see now, I would definitely be awaiting your calls. So make sure to call your teacher on the result day. Okay, take care.